All right, guys, good morning. How are you all? Nice to see so many people so long after so long. Arama Pindi? Super, awesome. So, Aitapa, thank you. Yeah, so let us begin, guys. So, before we begin, a couple of points. First and foremost, who's this guy? I just want to tell you about Raul Dravid. No. Everybody can see, right? Come. We can put up some chairs. There are chairs also, madam, here. Houseful it has become. Here also we can probably adjust. Problem is I got a new system, so that this has to be dismantled. You can sit there. Okay, so guys, first and foremost, those of you who are attending, just close the door, man. Thank you. Those of you who are attending, this marathon, and you've probably written a couple of times already. I don't care. So this guy is, his name is Hokaito Zimomi. No one knows him, obviously. So, as you know, Ranji is written here on top. Yeah, which means he's a cricket player, obviously. And he is the first ever cricket player from the state of Manipur. You know Manipur? Yeah, so he's the first ever thing. When people see him, they call him Chingy, unfortunately. That's the dirty mindset. He's very much part of, India. He's an Indian. He used to travel almost 5-6 kilometers every day, trekking to go play cricket. And eventually he was selected to play. The first ever player from Manipur. Today, if Virat Kohli and Anushka Sharma go to the northeast of India, they have put up posts also. Nobody recognizes them. But if this guy goes there, he's like God to them. Because after he was picked up by Kolkata Knight Riders for, 20 lakhs, that's all. And he was coming there every day with this, it was a ball boy carrying bottle and all those things. But people put on the TV only to watch him carry what? Water bottle, etc. Nobody had ever seen him on TV. Nobody from that small village had ever seen anybody reach that stage and earn 20 lakh rupees. So for him, he is God. So don't get confused. I came for marathon, GMCS, this fellow is starting. Yeah, no. I'll start very soon. Full confusion. We came for marathon, this fellow is doing GMCS. Okay, we'll start. I just want to tell you that this guy is not Virat Kohli, but he is the most important person for people in Manipur. So what I'm trying to tell is, please do not compare. In this room, Virat Kohli also will be sitting. Hokaito Zimomi also will be sitting. So don't compare yourself with other people. That is one worst thing that we do when we have a few months for the exam. Macha, how much over the law? That other fellow will tell 3 times revision over. For me, revision only is not happening. I'm going blind with 4 eyes. So that dirty thing is that, comparison. Please don't compare, guys. Really doesn't matter. So if you have not, I hope you have studied once and come. I hope at least, right? There's one subject called law, paper 4. Institute also feels it's waste, so they're removing it. And there's one subject, right? Yeah. So it will all come back and hit them very soon. Anyway, so if you see, this is one more dialogue. So please don't compare, guys. And if you read this, all of us can read this. According to research at Cambridge University, doesn't matter in what order the letters in a word are. The only important thing that the first and last letter should be in the right place. Rest can be a total mess. So rest can be a total mess, and you can still read it without any problem. This is because the human mind does not read every letter, but the word as a whole. So if you see, what really matters is the beginning and the end. So we have already begun. That is what CA foundation. We have begun already, right? And the end is CA. That getting those 2 letters before our name is the end. Nothing else matters in between. So beginning and the end. So we have already begun here and the end. That's it. So that's all there is to it, guys. And we all know that we have seen many times those caresults.nic.in. We have seen PASS couple of times. We have seen probably FAIL also. And do not think about the number of attempts, etc. No one gives a damn. At the end of the day, till today, nobody has asked me my marks. I have forgotten also. Nobody has asked me number of attempts. The thing, though I cleared everything in the first attempt, but it really doesn't matter. People who have scored, cleared in 10th attempt also are at the same level. It's the same. So really does not matter. This one of the India's most famous lawyers, Harish Salve. He charges 1 crore per hearing. Not even per case. 1 crore per hearing. He is a chartered accountant. 3rd or 4th attempt pass. So no one gives a damn about your number of attempts. All that matters is those 2 letters before your name, and it's just that you probably did not get it all this while, and it's just a matter of time, guys. Don't worry. So on that note, GMCS over. Let's begin. So if you see, it's all going to be quick revision. So I hope you have just gone through it once. It's going to be a proper revision session. You can ask doubts and all during the break, but during this session, let's not discuss as such, because obviously it's a revision session. But if you have any doubts, of course, I'll be available. Be comfortable in the classroom, guys. Come wear normal, comfortable clothing, right? I wanted to come in shorts today, but then they blasted saying that you are going and people will see you and all. I said, who will see me? They are coming to see the class. I actually wanted to come in shorts. I had worn also, and I got blasted. Then I changed and came, right? Anyway, so be comfortable, and you can eat in the class. Drink means, as I told you, mixing with water will give you. Other things, it's up to you. But be comfortable is what I'm trying to tell, right? And all the other details, water is in the next room. You can pick it up. Cool, guys. So let's begin, shall we? All right. So it's, yes, you can go there, madam. You can just ask them. Okay, fine. So I was like, what is she doing? Okay, fine. I thought I did some mistake here. Okay. All right. Fine. So when I said let's begin, she said, sir, like, okay, fine. All right, let's begin, guys. So cluster number 1, the basics of the directors. Let's see. So it's all very simple. I've divided everything into various clusters. There you go, clusters. Even if you don't have the book, it's fine. You can see the screen. If you have the book, good. If you don't have the book also, good. That doesn't matter here. So if you see, yes. Please try to attend all the 3 days. It is, be sincere, guys. That's one thing. It's going to be like morning till evening. Hardcore revision. Once you finish this revision, there's no need for you to go revise again. So almost all the important areas will cover. So just push it and attend the classes. Cool. So cluster number 1, as I told you, there are various clusters. Cluster 1, 2, 3, 4, 5, 6 till 14 we have. And predominantly the more tricky ones is from 1 to 5. Though just around 30 marks will come from this, 25-30 marks, but still most tricky in terms of the the way the in depth they are asking. And thankfully people were wondering few years ago that why this fellow is doing so much in depth, but off late you've been seeing the question paper how it is coming. So you will go and see that everything is easy. You'll come out and say 80 guarantee or 70 guarantee, 100%. Result divided by 2, divided by 3, full shocked, right? So it happens like that only. So because it's very tricky, intricate points they're asking. So 1 to 5 will come for around 20-25 marks, 25-30 marks, sorry. Whereas 6 is one section which we'll all ignore. Inspection, inquiry, investigation, who will study? Let's not study that. We'll go. Those questions only will come. So easily from that it will come. Winding up, one question will come generally. Cluster 8 also generally questions will come. And of course in IBC around 10 to 12 marks, guys. Easily 10 to 12 marks will come. Balcony jaga illa. There are seats also there. You can take the chairs. Somehow manage in the first. I should have cleared this, man. I didn't know that. Yeah, probably one more. Yeah. So cluster number 9, IBC. If you see 10 to 12 marks will come from this. And cluster 10, that is SEBI. And 11 is FEMA, one question. FEMA, like so much is there. It comes for generally 4 marks. Correct. So much is there in FEMA, but of course in paper 60 more marks will come. PMLA, Prevention of Money Laundering Act. It's a very favorite thing nowadays. Almost 6 to 9 marks is coming, guys. But of course 6 marks will come. You need to do it little in depth. Arbitration and conciliation, one small act is there. Right. Time pass, 3 marks. It will come for sure. FCRA, there have been some amendments. FCRA also every time 4 to 6 marks. So economic law also we should not just ignore, guys, because IBC, if you see, but IBC, this and this 3 majority marks will come. And of course we have SEBI and SCRA which comes for around 10 marks. And not SCRA, sorry, SEBI and SEBI LODR, so which comes for around 10 marks. And that too, LODR is more of, remembering things rather than anything. That's what it is. All right, guys, on that note, let's begin from the beginning. Cluster number 1. So director. Basics. So who's a director? Thank you. With background music. Yeah. Who's a director? Director means a director appointed to the board of the company. As you see, the word means, it's an exhaustive definition. It's an exhaustive definition. So generally my classes, people watch it in 2x. Now in this revision session only will be 2x. So let's see how you will do 2x of 2x now. Yes. Director means a director appointed to the board of directors. So it's an exhaustive definition. Appointed means what? So basically an appointment has to be done, which means a resolution has to be passed. Every time a director is being appointed, the appointment is under 152(2). So you require an ordinary resolution in general meeting. If you have never studied section numbers in your life, ignore, no problem. I am showing off. I know section numbers, I am showing off. Okay, that's it. 152(2). So forget about section numbers. Don't sit and study now. It's not the time to study the section numbers. But yes, for others who have studied, no problem. 152(2) is the section which will appoint. So basically, generally it's ordinary resolution, but in some cases it could be special resolution also. So basically there's a two-tier mechanism, guys. Company is at the center, and we have, what do you say, the board of directors also will be controlling the company. Shareholders also will be controlling the company. As per section 128, books of accounts have to be maintained by obviously company. And who will, inspect the books of accounts? Surprisingly, only directors can inspect the books of accounts. Nobody else can inspect the books of accounts, only directors. But what about shareholders? Don't they have any power? They do. They have 4 important powers, that is what we are actually doing now. First important power is appointment of director. So when I see here, when I told appointed to the board of directors, generally it is done by the shareholders. So appointment of director is done by the shareholders. Removal of director is also done by the shareholder. As for the other 2 things that they do is what? Appointment of auditor and removal of auditor. So these 4 are called the pillars of corporate democracy, most important powers of the shareholders. Because of this, they can do anything that they want. And if you see from this only, whatever 4 things that happen at the AGM, popularly called as the Adda or the Dada points, 4 things, that is dividend, accounts, director and auditor. Everything is done at the AGM. It is actually flowing from these 4 only. So that is what I wanted to tell you. So moving on. Director means a director appointed to the board of a company. So if you are not appointed, then you cannot be called as a director. So hence, basically earlier in the old law, they just told a director means a person who is, instead of appointed, they said includes a director who is occupying the position of director. All those dialogues were there. Now nothing. It's just that director means a director appointed to the board. Which means if you are not appointed to the director, not appointed to the board, sorry, are you a director? No. So for example, if there is a company, let's say INC Limited, correct, there are 3 directors, Mr. Mann, Mr. Mohan, Mr. Singh. All names are just purely coincidental. Any reference to any person living on dead is, not my responsibility. And this, in INC Limited, 3 directors are there, Mr. Mann, Mr. Mohan and Mr. Singh. They are, obviously, this entire company is being controlled by one more company, Italian Marbles Limited, just like that. Yeah, Italian Marbles Limited. They are controlling. So Miss Sonia is one director there, and Mr. Papu is one more director. So these people are, controlling this company. Now, ultimately, these 3 people are only listening to whom? These 2. So are these 2, directors of INC Limited? No, because as per the law, it says only those who are appointed on the board. And these fellows are called as shadow directors. So that is what the next point says. Shadow directors who control the company through other dummy directors are not directors since they are not appointed. But then, if that be the case, then if anything happens, what will happen? Will they be liable? Yes, they are definitely liable for actions of dummy directors, as they are not included in the definition of officer in default. There's one more definition called officer in default, where personal liability will be there. There they are definitely included. Yes. So every company, when I say every company, what does it mean? There may be jaga idea only. Okay, podium we can remove. I will, 1 second. We'll move the podium. Or if you see there, madam, if there's any place. No? Okay. Let's find out. Here maybe. Here you can come. It's little. Tomorrow I'll get all this removed so that we can have more space. Yes, every company shall have a board of directors consisting of individuals as directors. So every company basically means what? Each and every company, private company, public company, all those things. Shall is mandatory. Shall have a board of directors consisting of individuals as directors. So can companies become directors? No, should be individuals. Individually, a person has no role to play as a director of the company unless specific authority is given to him by either by the act or the shareholders. Here also, if you see the company general rule, guys, wherever the act is silent, all the powers can be exercised by somebody called as board of directors. But for shareholders powers, no, act specifically gives power. So either the act will give, or something called AOA, Articles of Association, that will give, or Memorandum of Association will give the powers. These three will give the powers. So otherwise, if act is silent, then who has the power to do it? Only the board of directors. For example, notice of the meeting. Notice of the meeting. Who will send notice of the meeting? Act is silent. So who will actually send? Board of directors should send. Okay. Cool. So if you see, moving on, the directors of the company collectively are the individuals who direct, manage, supervise, control the affairs of the company in the form of board of directors. All these first to 6 points, mother promise, it will not come in the exam. These are just basics. Don't sit and study all this, right? Yes. But this is a basics for the final thing. It starts from here actually. This is simply initial, starters. Yeah. So body corporate, okay. Then body corporate association, LLP, all those things cannot be appointed as director, obviously due to separate legal entity. Individuals with valid DIN can be appointed. NRI or a foreign national also can be appointed as a director. So no problem. NRI or foreign nationals can be appointed. But there has been an amendment that if you are a, foreign national, right, from with the borders, which is, touching India, you are sharing our borders. Which one? Pakistan, China. Then you obviously need to take approval from Amit Shah. Simple. Yes. So there is no age limit for appointment of director. But minor cannot be appointed as director because for DIN you need what? You have to be a major. So minor cannot be appointed as the director. Correct. So here if Shahid Afri then all comes, who's always forever 30-35. So he cannot be appointed as director. Directors are agents of the company. Then the ordinary rules of agency, etc. will apply. All that. All this you leave, guys. This will never come. Okay. Directors also include in the definition of officer and officer in default. Yes. Are directors employees? Need not be. They need not be employees. They are not employees of the company. They can be appointed though through contract of service or contract for service is what they say. Are directors shareholders? Who is more powerful? We just discussed quickly. In section 179 says board of directors are the brains of the company. However, board cannot exercise those things which the shareholders can, and shareholders cannot exercise those things which the board can. To summarize, there are certain powers which only shareholders can exercise and board cannot interfere. For example, removal of director. Removal of director can be done only by shareholders. So we will see that section 169, removal of directors, only be done by shareholders. Certain powers which only the board can exercise, that is issuing shares, lending money, investing funds, only the board can do, nobody else can do. Certain powers both will do, that is selling of an undertaking. For example, under section 180, selling of an undertaking. If I want to sell, like for example, demerge. In demerger, both approval is needed. What? Board of directors approval and shareholders approval. If the act is silent on who should exercise the powers, it should always be the board. As I told you, sending an explanatory statement for every item of special business, all those things. Coming to businesses, these are some things which are important, though direct questions will not come. If you don't know this, then there is no point in doing law. So what is that? Business. Items discussed at the general meeting is called business. One is called ordinary business. One more is called special business. Ordinary business are those adda points or the dada points at the AGM. Mind you, ordinary business are the adda points at the AGM. Ordinary business is adda points at the AGM. Adoption of accounts, declaration of dividends, appointment of directors, appointment of auditors. If it happens at the AGM, it is called ordinary business. Special business is what? Special business is the same adda points. If it happens at EGM, it is called special business. Any other point other than adda also at EGM is called special business. Then other than adda points at AGM is also called special business. So special business is all points in EGM is called special. Everything that happens in EGM is special. Very simple. And ordinary is what? Things that happen at the AGM is called ordinary business. Very simple. This you need to remember. Adda at AGM is ordinary. Everything else is special. Resolution. So as far as resolution is concerned, these two things are there, ordinary and special resolution. Ordinary resolution, all the three things are important. Notice must be given as per the law. Votes cast in favor must be more than the votes cast against. And those who are entitled and voting. Those who are entitled and voting. Which means if there are, let's say, 1,200 people in the company, of which 1,000 are equity shareholders, 200 are preference shareholders. What is ordinary resolution? 501 or 601? 501. Why? Only equity shareholders are entitled. These are all the keywords. Entitled. Entitled means what? They have a right. Okay. In this 1000 now, let us say 800 actually come for the meeting. 200 don't come for the meeting. Is it 501 or 401? 401. Why? Because those who actually come only. Others who don't come, then obviously you cannot count them. Of the 800 who come, 600 vote and 200 only come for the food, catering. Correct? So 600 come and actually vote at the meeting. Now is it 301 or 401? 301, because it says entitled and voting. Entitled and voting. So the key words that the examiner will look at is only entitled and voting. So basically the way to clear the exam is of course three things, which I've spoken to almost 50 plus rank holders, and they tell me three things which they actually followed. One is writing the Q&A, writing question and answers. You know, there's this dialogue, an apple a day keeps a doctor away. So they say that one answer a day keeps 6 months away. Right? That is the CA dialogue. So every day one question and answer we need to write. And what is the timeline that we will take to write one answer? 4 marks question, for example, how many minutes? So this is the most important thing. How many minutes? 6 minutes. So basically guys, 180 minutes we have in the exam, and in that 20 minutes you remove because of various other things. So we have around 160 minutes and 100 marks. So basically 1.6 minutes per mark. So into 4 marks means how much? 6.4. 6.4 or 6 minutes. 6 to 7 minutes is the time that we'll have to see the question, understand the question, assimilate the answer, and then write. So it is going to be difficult unless we practice. If we practice, it's going to be easy. That's the first point they told me. Second one was running notes. Running notes is what will we study one day before the exam. So we will study so many materials. It's a problematic thing one day before the exam. So just stick to one material. That's the reason why we started Slogover's book, so that you'll have one running notes one day before the exam. So that one notes is more than sufficient. And whatever you do all your life, all your study life, it's useless unless you figure out what to do one day before the exam. And lastly, guys, please, this you have to write one mock exam paper. One mock exam paper. Just see man there somewhere, or else just get a chair from the office. Mock exam, one mock exam has to be written for sure. In this mock exam, 100% you will fail. I'm not joking. Even all the rank holders also have failed. Imagine 1 month before the mock exam, 1 month before the real exam, when they wrote the mock exam, they all flunked. So when rank holders only flunked, so all of us also will flunk. For sure you will fail, 100%. So but you should write, because the real exam should not be the mock exam. So we have written many mock exams. Every 6 months we are writing. So that's why we have to write a proper mock exam, so that the real mock exam will be a proper exam. So these three things you follow, guys, 100% you will clear. This part anyway we are doing now. Revision we are doing now. But writing Q&A now we cannot, it's a few months to go for the exam. We cannot say a couple of months. The best is one mock exam you please write. In that 100% assume that you will fail. It's okay. But you should write. When you put pen on paper, then you will understand everything. So in that mock exam, should I write section numbers in the exam? If you know, you write. Otherwise, not needed. Correct? As per section 123 of Indian Companies Act. Your own. Correct? So write. The lawmaker, the evaluator will only say, please write the law in your own words. That's all. Please write the law in your own words. Section numbers, even if you don't remember, it's okay. So please write the law in your own words. So some 10 times you should remember the same thing. Please write law in your own words. What will we tell? Please write your own law. Please write your own law. Create our own law and we'll write. That's the problem. So not write your own law, write the law in your own words. That's all. So yes, and why I told you all this was, these are the keywords that we need to remember. Entitled and voting. That's it. Next, special resolution on the other hand, 4 important points are there. First, notice should be given. Notice should be given. What notice? That is that 21 clear days notice. Notice must mention that the intended resolution is a special resolution. And majority, that is what? 75% majority, guys. That is, here it is more than half though. Here it is 75%. Even you can write 75%, no problem. You can write 3/4 also, no problem. Law uses different language. Law says that the votes cast in favor must be at least 3 times the votes cast against. You can't remember all that. So just write 75%, more than sufficient. So, and those who are entitled and voting, that's called special resolution. So many places we will see this dialogue, ordinary and special. So we need to remember that. As far as notice is concerned, yes, notice also we will be seeing. Ordinary notice we will see. Special notice we'll see. So these are the two types of notices. One more in board meeting notice, separate specific notice is there. We'll see that later. So ordinary notice means what, guys? Anything that you have to give 21 clear days before the meeting. Clear days. The best part is clear only is unclear. So what is clear? Don't know. So four things. It is 21 plus 2 plus 2. What is this plus 2? Date of sending the notice and date of the meeting must be excluded. And this plus 2 is what? If it is sent via post, 48 hours postal transit to be excluded. So basically it is 21 plus 2 plus 2. Cool. So that is regarding the, what do you say, ordinary notice. What is special notice in that case? Special notice is section 115 read with rule chapter 23. All this is not needed. Yes. People who have 1% voting power or 5 lakh paid up capital. Generally in ordinary notice, who will send the notice? Board of directors. Board of directors will send. Whereas in special notice, who will send? Shareholders. 1% voting power or 5 lakh paid up capital. Such members will give to the company. When will they give? Not earlier than 3 months. Not earlier than 3 months before the meeting and not less than 14 days before the meeting. They will send it to the company and company will immediately send to all members. Members means what, guys? Equity shareholders, preference shareholders, both generally. But those who are entitled to come and vote, only they can come, but you have to send it to everybody. Not less than 7 days before the meeting, you will send it to all members. Now, special notice should be sent only and only in 4 cases. All 4 are part of your syllabus. 1. Removal of director before expiry of his term. You'll have to send a special notice, which we'll see when we come to removal. Appointment of new director in place of director who is removed at the same meeting. So, appointment of new director in place of the director who is removed at the same meeting. Basically, in the same meeting, I'll throw out one director and I'll appoint a new director. So, I need a special notice. Third one, appointment of auditor other than retiring auditor. Appointment of auditor other than retiring auditor. Fourth one, expressly providing that retiring auditor shall not be reappointed. Please do not mistake this to be removal of auditor. This is not removal of auditor. Generally, removal of auditor, if it is before expiry of the term, it is covered under 140 subsection 1. Mind you, this is not removal of auditor before expiry of the term. This is, they've used the word retiring auditor, which means what? This is on the expiry of the term. So this is a common mistake that all of us make, that we think it as removal of auditor before expiry. For example, an auditor's term is from 1st AGM to 6th AGM. In between 1st and 6th AGM, can I throw him out? Yes, I can throw him out anytime. That is covered under 140 subsection 1. This requires board resolution, special resolution and CG approval also for this. It does not require special notice. Most commonly made mistake, we'll write special notice here, not needed. Only here on the expiry of the term, this part. Here you require special notice. This is 140 subsection 4. You should not get confused. Removal of auditor before expiry of the term does not require what? Special notice. But 140 subsection 4, the other one requires special notice. Appointment of auditor other than the retiring auditor. So all these things are covered. This is notice. So whenever you see special notice, only 4 things. 169.2, 169.5, 140 subsection 4, 2 things. In that, both are slightly different. Coming to the, these are all the basics, guys. This is enough. And apart from that, couple of other things. Holding subsidiary relationship. We have seen many times holding subsidiary relationship. What is holding company? It is a company in which holds in the other company how much? More than? Is it more than 50%? More than or equal to 50%? More than 51%? How much? More than half. Of what? Is it subscribed share capital, issued share capital, paid up share capital, total share capital? Which one? Paid up share capital. Wrong. All 4 are wrong. It is, that's what keywords are important. TVP, total voting power. Total voting power. If you write PUC, gone. Marks will go. That's why revision session, what I'm trying to do is also tell you the keywords and also some important MCQ areas we'll discuss along with the class itself. So holding subsidiary more than half. So 3 days if you attend, your law worries will go away. Correct? Till before law goes away, law worries should go away. Okay. So holding subsidiary more than half. More than half of what? Total voting power. What is total voting power, by the way? Equity share capital. Total voting power means equity share capital. Voting power, basically. So, yes, that is holding subsidiary. On the other hand, is this also holding subsidiary? It's only holding, let's say, 15%. But it has given a 100 crore loan to S Limited and it is controlling 6 out of 10 directors of S Limited. Is it also holding company? Yes, that is also holding company. That controls the composition of board of directors. Controls the composition of board of directors. That is also the same thing. So that is holding subsidiary relationship. Apart from that, is this also subsidiary? S1 is there. Then we have S2. So holding holds 60%. And this S1 holds in S2 40%, whereas directly H holds in S2 40%. What do you think? Yes, S1 is definitely subsidiary. S2 either directly or indirectly. If you see directly, indirectly it's holding 60% or 40%, 24%, whereas this is holding 40%. 40 plus 24, 64%. So yes, definitely yes. What about this then? In that, if that logic, if I am taking, what about this? H holds in S0. Nothing is there. Here it's holding 60%. Here it's holding 60%. Now, ideally no, because S1 is definitely subsidiary. S2 is also, ideally no. Why? Because 60 of 60 is 36. But that section 2 clause 87 says, one more dialogue, it says, subsidiary of a subsidiary is deemed to be a subsidiary. Deemed. They have created a fiction. Subsidiary of a subsidiary is deemed to be a subsidiary, which means even this is also subsidiary company. Slight similar way, what is government company in that case? Yeah. Central government, state government, or any combination. How much percentage? Greater than or equal to 51. Now tell me of what? TVP, PUC. It is here, it is PUC. Paid up share capital. Holds in any company, and this company is called as government company. If that be the case, central government is controlling 60% in G1 and G1 is controlling 60% of G2. G2 is definitely a subsidiary of G1 for sure, but is G2 a government company? Is G2 also a government company? Yes, definition of government company says it includes a subsidiary of a government company. Government company, subsidiary of a government company is also called a government company. If I just reverse, slightly change it, central government controls 6 out of 10 directors of G1 and G1 controls 6 out of 10 directors of G2. Now, is G2 a subsidiary of G1? 100% yes. Is G2 a subsidiary of G1? 100% yes. But is G1 a government company? Is G1 a government company? What do you think, guys? No, because government company definition only speaks about share capital. Government company does not talk about this. Right? So in MCQ, even in auditing and law, more auditing than law, they can ask you who will appoint this auditor of G1. So we'll coolly write C&AG and come. Correct? No, it is wrong answer because it's not a government company. Correct? Wrong answer or correct answer? Actually, it's correct answer. Because guys, if you see the auditor's provisions, 139, it cannot show the Bare Act and all now, there's no time. You see 139, if you go, it says C&AG will appoint which director, which auditor? Auditor of which company? Not just government. Please see carefully government company and government controlled company. Government company and government controlled company. And if you see the definition of control in 2 clause 27, control, if you see definition, it says also appointing majority directors. Also appointing majority directors. So answer is correct. So by fluke, we will put the correct answer and come. So it is not government company, it is government controlled company. You are right, 100%. It is government controlled company. So these are some of the hidden points we should keep in mind. And based on this only, many times even in law they have asked questions. I'm not joking. So they have just asked a simple question about this subsidiary. The same, whatever I asked you, 4 marks question had come. November 17 or 16. Only once. Come back. So with this basics, let's dive into disqualification of directors under section 164. Yes, section 164 sets out the grounds which makes a person ineligible to become a director. Thus, 164 arises. So basically, if I am checking when will 164 arise, it will always arise at that point of appointment. So when I am entering the company, then only I should see 164. After I enter, 164 has no value. So then we have vacation of office 167, then resignation 168, removal 169, rotation 152.6. Basically, this will end once only at the point of entry. After he enters, other things will take over. So only at the point of entry, section 164, I need to see. So that is disqualification. So what is disqualification? Let's see. Section 164 arises at the point when a person is proposed to be appointed as director. 167, on the other hand, vacation, etc. Now, these are the things. Section 164(1). A person shall not be qualified to be a director if, first, he is of unsound mind. Unsound mind declared by a competent court. Correct? Unsound mind definitely is a medical condition as well as a mental condition. Correct? You and I cannot call anybody unsound mind. If we say Uchnan Maga, correct? That doesn't make him what? A person of mental mind, an unsound mind. It should be declared by the court is what I'm saying. You and I cannot call anybody Ucha. Correct? Even if we call, nothing is going to happen. So if you see medical and mental condition, unsound mind. Second, court, competent court. Now court definition is also there in the Bail Act. It says district court, high court, special court. Because Supreme Court only decides questions of law, not questions of fact. It's a factual question whether you are a person of sound mind or unsound mind. Supreme Court has no bearing in it. So it is only district court, high court and special court. Very simple. And this is not any criminal thing. That's why normal district court is what they are trying to tell. Civil court basically. So unsound mind declared by a competent. So these are the keywords that an examiner will look at. You should write unsound mind and declared by a competent court. Declared by court. So when you are writing also, you should write these keywords. That's it. That's why I have given the keywords also here. So obviously, you are not competent to enter. Even in Contract Act, what is the competence to enter into contract? Three things. One, major. Second, sound mind. Third one, should not be disqualified by law to enter into any contract, basically. So here, that is what this says. Second one, second and third together. He is an undischarged insolvent. Second, he has applied to be adjudicated as an insolvent and his application is pending. So basically, if he says that I have absolutely no money and he has applied to the court, let's say sometime in March 2023, that he is unable to pay off his debts, etc. Then sometime in April 2023, assume the case is taken forward and now they say that was till 2026. This is the time taken for us to settle off your liabilities, take over your assets. Then court will tell 23 to 26, this period is called as undischarged insolvency. You are not discharged from the tag of being called as an insolvent. When your liabilities are far in excess of your assets, you are called as an insolvent. So insolvency is one case. Now insolvency can be under two cases. One is under IBC, Insolvency and Bankruptcy Code. But mind you, insolvency of individuals are also covered in IBC but not yet notified. So either you can go through IBC once it's notified, or you can go through the normal insolvency provisions of normal court proceedings you can go. So you should have applied. You means the director should have applied. Correct? Let's say if he's applied here. So this point is second point. April 23 to April 26, where law says, boss, you are, lost case, nothing can be done. That is this 3 years, you are undischarged insolvent. What about this then? March to April. Yes, that is this part. You see, he has applied to be adjudicated as an insolvent and application is pending. IBC provisions, once it is notified, for example, if you have not paid, let's say we go with our friends, every time we'll tell Macha, you pay, I have no money, you pay, I have no money. That fellow has opened splitwise account, specially for you. He has bought premium model of splitwise only for you. And in splitwise, they are seeing that you have to pay him some 1,200 rupees. So again, they're asking, correct? You will be like that dialogue, Nale ba, that you're like a bhuta, come tomorrow, right? So when you go there, the next day, what that fellow will send you an IBC notice saying insolvency against you because you have not paid me 1,000. In IBC, I'm not joking. Once it gets notified, the amount of money, if you owe somebody, how much is it? 1,000. And it's not yet notified. I'm just saying. Tomorrow when it gets notified, if you owe somebody 1,000 rupees as an individual, they can open insolvency proceedings against you. Now, some creditor whom you have not paid 1,200 has obviously put an insolvency case against you. You have money though, but his application is pending. Can you be a director here? Yes, because guys, the wordings are what? He has applied. He has applied. Those small things we should see. I have given the example here. Proposed director has to apply. If creditor has applied, then no disqualification until the application is pending. It should be done by who? By him himself. He includes she also. Ladies, don't think it is not. Companies Act will not apply to me. No, it apply to everybody. He includes she. Right? General Clauses Act. Masculine includes feminine. He has applied to be adjudicated as an insolvent and application is pending. So these three things, unsound mind, these are the keywords, unsound mind, competent court. Undischarged insolvent, he has applied to be adjudged as an insolvent and application is pending. No need to write legal language, legalese. Legalese means legal language, no need to write, guys. Really, they don't expect you to write. Just simple, normal English would be fine. And the questions also you should, write how. Just 1 second, I'll just show you one rank holders paper. So basically you should understand that wrong section numbers you will lose marks, and each question you write in one separate page if possible, right? Sir, I have to save trees and all, correct? We are here environment friendly. Yes, if we try to save page, again 6 months later you will not save page in. Again one more booklet you are using. So where are you saving pages? So it's okay. One page, one answer is good enough, but assuming that more than half is already over. If just 3 lines you have written, then there's no point writing a separate page. So if you see, the evaluator has just 10 minutes to evaluate a paper, guys, because they will evaluate 6 to 7 papers an hour. Many of my friends are evaluators. They evaluate 6 to 7 papers. When I asked them why, they said, bro, 100 rupees is what they pay me, 150 rupees. So your future is 150 rupees for them. So they say I cannot sit and do 20, 25, 30 minutes. I'll do 6, 7 so that I can earn 1,000 rupees. I'm not joking. And anybody can do. Because chartered accountants, will CAs correct your paper? No, it can be anybody. It can be your BCom teacher who you hated in, Yes, I'm not joking. You see empanelment, you go to institute website and say empanelment of evaluators, you will see BCom lecturer, MCom lecturer, right, MBA, all these people can evaluate your paper. Correct. So that BCom teacher who you call Uchnan Maga, he will come and he will evaluate your paper. So be careful. Right. So take back everything. Yes. So 160. So basically they will only see the answer keys and evaluate, because for them 700, 800 per hour is good. I'm not joking. They will evaluate 5 to 6 papers, which means your entire future will be decided in just 10 minutes. Unfortunately, nothing can be done. So first 40 marks, that crux of the story is that 15 minutes that you get to read the question paper, etc. Rather than thinking why I took up CA and all those things during those 15 minutes, better to tick the correct answer. I will be thinking, oh, why? My friends are all putting selfies in the office. Correct. The thing is, yeah, that is what they say. So, yeah, they are getting income tax raid and all in their office. I am here. If income tax fellow raids me, both of us have to search for the income. Nothing is there, right? Yeah, that is what. So that is what it is. Both of us will search. Well, what is there? Rate. So 15 minutes, first 15 minutes, you have to tick those questions which you feel you can really impress the hell out of the evaluator. So can I write like this though? 1A, 3B, 4C. Can I write like randomly? No. We should choose one question. This is ideally a not accepted practice. They will get annoyed. So choose one question, like first question for example, and in that within the options can you play around? Can you write 1D first, 1B, 1C? Yes. This has to be avoided. 1A, 3B, 4C has to be avoided, because they, not that they'll not evaluate. It's not that it's bad, but generally they'll get annoyed, difficult for them to track. So choose one question. In that question, the sub options you can write whatever you want. And first question is compulsory. You can write that later also. Not that you have to write it at the beginning. So choose that question. So this guy also has done the same thing. Applicable provisions. So here, if you remember the section number, good. Otherwise, it's okay. No problem. Of Companies Act 2013. At least Act, I hope you remember. Correct? Companies Act 2013. Yes. Companies and Bankruptcy Code, all that own laws and all we cannot create. And then the brief about the provision. This is again the law in your own words. So if you see here also, which has not filed annual accounts, annual returns, is a simple English, no need of any legal language. They really do not expect anything genuinely, because they understand we have to study everything. And we should also underline what we feel is important. And this is not a Rangoli competition. Don't take pencil, scale and all that. In your pen only when you are writing, you can underline whatever you feel is important. Don't underline everything. Sir, everything is important. What I write is, the most important thing. So just underline the important one. So it's written like that. And then the final conclusion. So provisions, analysis, conclusion. Can be written in paras, can be written in pointers, your wish. So this is what it is. So basically he has got, see, 4 out of 4. And if you observe many of his answers, first few answers, 2 out of 4, 3 out of 4, he has actually impressed the evaluator with his answers, initial 40 marks. After that, I swear, is a rank holder. He has written some crap in the end. Something and all he has written. They have given marks. Instead of giving 0, they have given 1. I'm not joking. See this question, superb answer it is. Time pass. Correct? This is like BCom answer, active voice, passive voice, all that. So still he has got 1. You have to adjust. From Shivaji Nagar you came? Okay. So you have to adjust there only. So if you see this 1 mark, that's it, 1. Actually it doesn't even deserve 1, but they've got 1. That's the best part. So if you see this, okay, rank, who's left all this, that's not needed. So no need to take additional sheet just because additional sheet provision is there. Correct? We can write in the regular normal whatever is there only. Most of the rank holders don't take additional sheet, honestly. So you also, then now if you write little big, don't feel that, okay, I should not take additional sheet. So write here, PTO, write here and all that. No. You can take whatever you want, it's fine. Yes. Others will stare at you. That one staring, you have to adjust. Yeah. This fellow is taking additional sheet and all. Yes. So, yeah, if you see couple of answers are really bad, honestly. And they have still given like marks because especially this here, actually it's wrong, but still he has got 2. Right? And that's the best part. So, first impress that fellow. That fellow should feel, I am evaluating this guy's paper. He should evaluate mine. He should feel like that. Inferiority complex should come. Then he will pass. Right? So, if you see all this, every answer, very, very basic answers he has given later. Initially, really awesome. So, that's the trick, guys. If you are a rank holder also, that's the final trick that they follow. Very, very simple. Anyway, moving on. So, wherever some of these tips here and there, we can adjust. First, now next point. First, unsound mind, undisturbed insolvent, applied to be adjudicate insolvent and application is pending. Fourth one, he has been convicted. This is the key word. Do not use committed, though you are committed to CMA. Yes. Then charged, accused. Don't write all these things in the exam. You will 100% lose marks. He has to be convicted. What do you mean by conviction? Proven guilty by the criminal court. He has to be convicted by a court of an offense involving moral turpitude. Moral turpitude means something that shocks the conscience of a society. Something that shocks the society. Right? Like, any Ramalinga Raju committing fraud. A person who has committed fraud. Anybody, like a person who is already there in the market who is very well known. Suddenly you come to know that he committed fraud. So that is called as moral turpitude. So one more, moral turpitude need not be a very, very bad crime. For example, Stephen Smith was involved in ball tampering. It is one of the smallest crimes. It's not at all a big crime as per ICC, but they got banned for 1 year because in Australia, the second most important person apart from the Prime Minister is the Australian cricket team captain. After he did that, many kids dropped out of cricket thinking that I don't want to follow this game. Imagine. So they said no, moral turpitude means something which shocks the conscience of a society. So hence that says, that is what they say, moral turpitude. First is by a court, second moral turpitude or otherwise. Otherwise means it is as per the, it's not otherwise than other than moral turpitude, it is offense under Companies Act. So these are the keywords: convicted, court, moral turpitude, otherwise. And apart from that, sentence to imprisonment. Sentence to imprisonment for minimum 6 months. So basically, even if you are convicted of moral turpitude, sentence only for 3 months. Can you be a director? Yes. It should be sentence for how much? Minimum 6 months. Sentence minimum for 6 months. What if you are jailed for 6 months and you get bail? Furlough. So what is bail? Bail happens generally before the arrest, right? Before the conviction only actually. Okay, what if you are convicted and then you get parole? There's something called parole, right? Parole, what about that? Parole or furlough. You would have seen all these people coming out. So what is that called? That is a temporary suspension of your sentence, but sentence is still going on. So that will have no impact. That will have absolutely no impact. So the only thing is conviction only if they remove. Only that is the only place where you can actually become a director. If the conviction is removed or if they have reduced the sentence to less than 6 months. These are the only two cases where you can become a director. Otherwise, no. So if you are convicted for 5 years, but you come out for like 6 months, that doesn't mean that your conviction has been removed. So for example, Subrata Roy, after committing fraud in the Sahara case, his mother passed away. So they gave him a furlough of 3 months. Does it mean he can now become a director? No. Right? He was convicted for 7 years. He is permanently disqualified anyway. So if you see convicted by a court, moral turpitude, by that is or otherwise. Otherwise means any offence under Companies Act. For example, Subrata Roy, who committed the offence under SEBI and Companies Act actually. That is, he did not give back the deposits. Sentenced to imprisonment. If they only remove the conviction, then only no problem. Removal of conviction is called exoneration. Exoneration is the opposite of conviction. Exoneration or acquittal. Acquittal. You may have heard acquittal. Exoneration or acquittal. Like our Salman Bhai. Salman Bhai was acquitted. Correct? Because in which case? He went and killed 7 people. He didn't kill, sorry. Driver killed 7 people. And then they said he also didn't kill. Driver also didn't kill. That was the final decision. He was initially convicted by the lower court. Higher court said he also didn't kill. And the what he said, driver also didn't kill, is what he said. He also killed one black buck, no, in the most sacred animal of the Bishnoi community, that is the Chinkara. So he killed that also. So there also is still convicted, correct? That also will be removed very soon. Yes. So basically the final decision is the Chinkara was driving the car. It killed 7 people. Then it became very sad, committed suicide. Over. Both the case shot itself. Both cases closed. Yes, exoneration. If they use the word exoneration or acquittal, then only you can say that, okay, you can become the director. Otherwise, no. So these are the keywords, guys. Again, convicted, court, moral turpitude. Otherwise, sentence to imprisonment, 6 months. Minimum. If that be the case, how many years will he be, what do you say, disqualified? 5 years. 5 years. He'll be disqualified for 5 years. So for example, sorry, not this. 5 years he will be disqualified. So for example, if this fellow is convicted in 2023, for 1 year is imprisoned till 2024. So my question is, he is disqualified till 2028 or 29? 28 or 29? Because this is the date of conviction, this is the sentence completion. So as you can see the wordings, guys, from the expiry of the sentence. From the expiry of the sentence. A sentence is getting expired in 24. So plus 5 years till 29. This is one more keyword. From the expiry of the sentence, not 5 years from the date of conviction. If you compare it with auditor's provisions, auditor cannot be an auditor if he commits fraud for 10 years from the date of conviction. 10 years from the date of conviction. But here it is from the expiry of the sentence. But Subrata Roy case, he was convicted for 7 years for fraud. In that case, permanent disqualification. Permanent disqualification. So if you see, reduction of the sentence does not mean that the conviction is removed. 5 years will apply for reduced sentence period. So if obviously if you're convicted for like 2 years, then they reduce the sentence to 1 year. Then 5 years will end when? 1 year plus 5 years. But only thing is within 6 months also if they remove. That is really rare. You are convicted for 1 year, but then they let you off in 4 months. Then in that case, can you immediately become a director? Yes, because it's just 4 months. But that doesn't happen practically. But anyway, so this is what it is. Reduction of sentence will, and also you can say bail etc. is of no relevance. Is of no relevance. Bail and also what? Your furlough, parole. Yes, these are all technical differences are there, but fine. Parole etc. There are no difference. If you are hungry and all, you can eat. Tomorrow you bring food, no problem. Should be comfortable, that's what matters. 3 days we'll do full in-depth analysis, everything will finish. This will be better than you sitting at home and studying, because in 2 minutes you will start sleeping. Yes, that happens. Right. Auspullman. Sorry, you just see it just somewhere. Okay. Cool. So next, an order disqualifying him has been passed by a court or a tribunal. So this is, so again guys, again repeating without seeing, unsound mind, competent court. Undischarged insolvent, applied to be adjudicated insolvent, and application is pending. Then convicted, offense, moral turpitude or otherwise, that what else? Sentenced to imprisonment for 6 months and 5 years has not elapsed from the date of expiry of the sentence. 7 years means permanent disqualification. Next, an order disqualifying him has been passed by a court or a tribunal. So if you go to section 241 etc., there's something called oppression and mismanagement. So there, if you are if the tribunal says, boss, you have committed oppression mismanagement, they will disqualify you from being the director. We will see the master chart later. You will understand that. Anyway, so that is this order disqualifying. Next, he has not paid any calls on any shares. Call money has not paid. Call money has not paid. Basically, he has bought shares and they have called also, but he has not paid. And this has continued for 6 months. This has continued for 6 months. So for example, there is one company A Limited, one more company B Limited. And he has not paid call in A Limited, but he has paid call in B Limited. In both the companies, Mr. A is proposed to be appointed as the director. He has not paid the call in A Limited. He is disqualified in both A and B or only A? Only A, because it uses the word of the company. He has not paid any calls of any shares in the company. Which company? In the company which is proposed to be appointed as the director. In both the cases he has, but in this case he has paid the call money. Here he has not paid, so it is the company. The company in which is proposed to be appointed as a director. He has not paid any calls, any shares. It can be equity or preference, but generally articles will specify equity shares. And 6 months have elapsed from the last day fixed for the payment of the call. See, if you are an unsound mind, obviously you cannot take any decisions. Insolvency. Why is insolvency point here? If you cannot take care of your own personal money issues, how can you take care of companies? That's the logic here. What about the E point? Order disqualifying him because obviously the tribunal only has passed the order. Point number F, he has not paid any calls on any shares. Here again the same thing. 6 months time I have given. If you have not put in money for your own company, how can I trust you to put money? I mean, how can I put money when I'll ask you how much money you have put in your company? That is the point number F. That's the reason why. Next, he has been convicted of the offense relating to related party transactions under section 188 during the last 5 years. During the last 5 years. So if that be the case, then it is a problem. So I am telling each and every point so in depth because I just want to show you. Let me see it in one of the papers. Not remembering which one, but let me just search. Because guys, the way they are asking questions now, it is this only. See, this was one of these recent papers. Messrs. TriStar unlisted public company with annual all this dialogue they have given. Basically, they are seeing here. Further, in a board meeting, this contract was challenged considering it as a related party transaction in contravention of section 188. Read with the rules and all that. During the period, Mr. Sudhir was appointed as director in the newly incorporated company, Messrs. Raga Limited. In the light of, so basically they are appointing him in a new company and they have told that there's contravention of 188.1. So the question here they have asked is very simple. Comment upon the appointment of Mr. Sudhir as a director in the new company. What do you think? Valid or invalid? This is a compulsory question for 6 marks. Valid, invalid? Why valid? Very good. He is not convicted. Simple. See, that level they are asking now. So you see the wording here in the question paper. I'll show you again. They have never used the word conviction. They have used the word contravention of 188.1. Contravention means he has not followed 188.1. That's all. It is not conviction. But see the language here. He has to be convicted. Convicted means a criminal court should convict him. So if you have broken the rules of 188, no problem. You will not be disqualified. So that was the question. 2 marks. The keywords are conviction. That's why every word is important, guys. You may write and come saying that it's very easy. No, but the answer will be something different. So every word we should keep in mind. That's all I'm saying. Convicted of the offense. Generally, this provision will never be applicable practically. Till now, there has not even been one conviction under 188. 188 conviction is very rare. It doesn't happen. But anyway, so keep that in mind. That's why this is a keyword, conviction. So 2 marks, you would have lost if you had written something else. We'll only see 188 and go. We'll not see this word, conviction. Not complied with DIN provisions. So director identification number, if you have not followed those provisions, all the normal basic stuff, KYC, etc., then gone. He has not complied with section 165(1). What is that? Maximum number of directorships. How many directorships are there? How many you should take? Directorships. 20. Maximum you can take 20, out of which 10 are public. And not public companies. This was inserted due to Sri Vijay Mallya because he had some 47 companies under him, in which 45 were private companies. And then they said that obviously that's the reason why he ran away and he did not, put efforts in the public company. Now 45 companies, do you think he's bankrupt now? No. So basically that's why they said it is impossible for you to give time to so many companies. That's the reason why this section came into force. So if he exceeds the maximum number of directorship that can be held, that is how much? 20 companies, of which 10 are public. So overall 20 companies, of which 10 will be public. In 165, we'll see that in a while. That's all there is to it, guys. This is section 164(1). Moving on, it will apply to all companies, guys, whether it is private, public, etc. Now 164(2) on the other hand, 164(2). Director of the company will be disqualified if the company has not filed financial statements and annual returns. For how many years? 3 continuous financial years. Financial statement should be filed within dash. How many days? How many days? 30 days from the AGM. In form number AOC 4. Perfect. Annual returns. This is given in section 137. Annual return is given in section 92. How many days? 60 days. Within 60 days. Okay. This thing, form number? MGT 7. Perfect. MGT 7. So financial statements and annual returns. For how many years? 3 continuous financial years. 3 continuous financial years. Very simple. Company has not filed financial statements and annual returns for 3 continuous financial years. Then what happens? That is one part. Second one, if the company has not paid or repaid dividend, debentures and interest, deposit and interest. If you see, for dividend, interest is not there. If you have not repaid interest on dividend, it's okay. Correct? For dividend, interest is not there. So let me just, show you that entire chart. When I say he has failed to pay, what do you mean by failed to pay, guys? After declaring, or what do you mean by exactly failure to pay? After declaration. Okay, 1 second. So again, dividend, when I use the word dividend, is it final dividend or interim dividend? Both. So yes, when I use the word dividend, it can be interim dividend or it can be final dividend. Tell me, interim dividend is, somebody has to recommend, somebody has to declare. Final also, somebody has to recommend, somebody has to declare. Who will recommend interim dividend? It is recommended and declared by board of directors. That is under 123.3. They will see that later. The section number not read. 123.3 actually. So they recommended and declared by the board. Whereas final dividend is recommended by board of directors and declared by shareholders. This happens at the AGM. Recommended by who though? Board of directors. Recommended by board of directors. This is the final dividend. So when I use the word dividend, it includes both. That is interim dividend and final dividend. So as far as final dividend is concerned, just for your knowledge, the board of directors will recommend this. It goes to the AGM. AGM you will declare. Within 5 days, you have to transfer to a separate bank account. And within 25 days, overall, from the date of declaration, within 30 days, you need to pay. If you don't pay, then within 7 days, you need to transfer to unpaid dividend account, or if it is bounced back, you transfer to unpaid dividend account within 7 days. If you do not pay on the 30th day, 31st day onwards, 18% per annum will be the interest that you will have to receive. Okay, so 7 days unpaid dividend account, and from unpaid dividend account, how many years it will be kept? Within 90 days, you have to give all the details. This have to be kept separately for 7 years. And even if you don't transfer to unpaid dividend account, 12% interest will be there. So 18% is if you do not pay after declaration. And you have to transfer to which account? IEPF account, Investor Education Protection Fund. Now, when I use, why I told this was here, when I say failure to pay, is it failure to pay after declaration? Is it failure to pay to unpaid dividend account after 30 days? Or is it failure to transfer to IEPF? What is a failure to pay? Yes, perfect. Only here. After declaration, not paying within 30 days is called that. And this interest 18% if you don't pay, no problem. Under this, interest is not covered. Because dividend is payment. Debentures and deposit is repayment. When I have to repay you, not only do I have to repay the debentures, but also the interest, because I am repaying the borrowing. Whereas in dividend, interest is not covered. This was an MCQ question. That's why I am just stressing on all those MCQ areas. So it will be slightly tricky. Out of 100 marks, guys, 40-50 marks will be very easy. Don't worry. It will be easy. 40 marks, you can close your eyes and answer. It will be very simple. For 30-40 marks will be, definitely you have to apply some brains, apply your mind. Remaining 20 marks will be tough. In that 10 marks sometimes will be bouncer. So that 10 marks you leave. Even if you study everything also, you may not be able to solve. 8 to 10 marks you can leave it. Right? So the thing is, remaining, here, even if you don't attend any session class also, 40 you will anyway score. But here our objective is to score minimum 70. 65, 70. It will take the burden off of other subjects also. And getting this marks also is excellent. So that remaining 30 marks you have to work hard. That's why we are working for the next 3 days. So that to ensure that final push is required. So dividend, interest is not covered. So if they say interest has not been paid and all, you ignore. Debentures, interest, deposit, interest. When I said deposit, it's not any public deposit. Deposits means any deposit for that matter. Deposits means any deposit. So does deposit include loan also? If you see the deposit definition, it says deposit includes loan. You see the deposit definition. But in the rules they have told term loans etc. are not covered. So one more favorite question of the examiner is loans. The company has failed to repay the loans for 2 years. Disqualified or not? No disqualification. Why? Because though deposit includes loans, in the rules they have excluded loans. In the rules they have told any term loans taken by the company from bank etc. is not deposit. Which means if the company has not repaid the loans for more than 1 year, for example, then will you be disqualified? No. There is no disqualification. Other provisions will attract. You will have to pay fine and all, but there is no disqualification. Got it? So deposits plus interest. So this term loan is a regularly asked question. Term loan. Interest on loan also they will ask. Not covered under 164. Because please note term loan. Term loan is not covered. They will use term loan only. What about loan given by some money lender? I'm just saying. That is definitely covered. That is a part of deposit. Okay. But please look out for the words term loan. So term loan is definitely not disqualifying point. Because they know none of the companies will ever pay on time. There will be some defaults, right? So you cannot make it a strict point is what they say. So triple D points, and this triple D points, this is 164 2B. This failure continues for 1 year or more. In 164 2A, if you don't file annual accounts, annual returns for 3 continuous years, then automatically what happens? You will be disqualified. But here it is not of, the punishment is not for not paying. The punishment is for failure continuing for 1 year or more. So in 164 2B, there is an internal relaxation of 1 year. In 164 2B, there is an internal relaxation of 1 year. Whereas in 164 2A, it's not so. We just did the basics. First point we still have to discuss. What do you mean by not filed financial statements and annual returns for 3 continuous financial years? For example, this one, if you see, scenario 1, financial statements have been filed, annual returns not filed, then it's a problem. Then obviously it is a problem. Financial statements have not been filed, annual returns have been filed, then also it is a problem. Why? You should file both. Then financial statements filed, not filed, annual return also not filed, then also it is a problem. Only if you have filed both, then it is a no problem scenario. But nevertheless, this should happen what? For 3 continuous financial years. 3 continuous financial years. So basically, if for example, if you have, filed both, like this, if you have filed, no problem. On the other hand, let's say 1 year have not filed, so this is a problem. Second year you have filed this, you have not filed this, problem. Third year you have filed both, no problem. Is this disqualified? No. For disqualification to get attracted, there has to be this problem scenario all 3 years. That's why some relaxation at least. In the middle, for example, here you have not filed both, here you have filed both, not filed both, still no disqualification. So basically, I can say at least in 1 year, file both. At least in 1 year, file both. In a cluster of 3 years, at least in 1 year, file both, no problem. So what companies used to do before? Let's say not filed, not filed. Not filed, not filed. 100% problem. Or same here. It is a problem in all the 3 years. What were companies doing? They used to do a belated filing of this. Because I told you in 1 year if you file both, no problem. They used to do belated filing by paying fine. Now tell me, belated filing by paying fine, will it impact the disqualification or not? Will it impact the disqualification? No. Basically, this belated filing, it will cure the defect. What is the defect? Defect of not filing on time. But will it cure the disqualification? No. This also is a favorite question. They'll say if you do belated filing, what will happen? Everything is there here. Check it out. So, yes, here. Point number after this point here. If the problem scenario continues for 3 continuous years, not intermittent failures, continuous, then the big problem, then disqualification. Even where the default is subsequently cured, default is cured through what? Belated filing. Disqualification shall remain. Disqualification shall remain. Once defaulted, subsequent rectification of default is of no consequence. Belated filing will cure the defect but not the disqualification. And again, I have repeated here, important point, 7th one, failure to pay interest, repayment of loans, working capital, etc., taken from a bank or PFI, not money lender, bank or PFI, does not attract the disqualification. Does not attract the disqualification. Bank or PFI does not attract disqualification. So these are the important areas. So here again I tell you triple D, dividend, debentures, deposit. Deposit means any deposit, mind you, any deposit. It's not public deposit, anything. It doesn't include loan, by the way, term loan. So interest on dividend not covered. So even if you have not repaid the interest for more than 1 year, no problem. 164.2a is immediate disqualification. 164.2b is disqualification if the failure continues for 1 year or more. Since I'll have to wait for 1 year, there is one more provision. Now, there can be many scenarios. You will be direct. So basically in 164.2b, due date will be the date when you have to pay all these things. The date you have to pay dividend, 30 days from the end of the declaration. That is the due date. For debentures, due date will be in the terms. Same with deposits. But on the due date, will you be disqualified? No. They'll give you 1 more year time. This 1 year is called effective date of disqualification or effective date of default. Effective date of default, because law gives you 1 year relaxation. My question is, in between this year, there can be new directors or old directors can continue, old directors can leave, what happens? So one more other favorite question which they keep asking is this. Mr. A is a director on the due date. This is only for 164 2B. You are a director on the due date. But on the effective date, you are not a director. Oh, sorry, on the effective date also, you are a director. Basically, you continued for 1 year. Will you be disqualified? Yes. As the law suggests, failure continues for 1 year. Failure continues for 1 year. Hence, A is disqualified. Hence, A is disqualified. B. Director on due date. Yes. But before the effective date 1 year, he resigned. What do you think? Will he be disqualified or not? He was on smart director. He knew that 1 year if I continue, I'll be disqualified. So 1 month before that 1 year gets over, he resigned. It depends. If he has resigned, see under section 168, resignation of director. What do you think? Should I give reasons or not give reasons? Reasons are compulsory or not compulsory? Act uses the word may give reasons, may forward the reasons. So is it compulsory or not compulsory? Not compulsory. But when I am giving a reason now for resigning here, I should tell, boss, I have requested the company so many times to repay what? Deposits, repay debentures, to pay dividends. It is continued for 1 year it's gonna be 1 year now. I don't want to be disqualified, hence I am resigning. And please find the trail of the entire thing where I've been communicating, reminding them to pay. They are not paying. So I don't want to be disqualified. So like that, if I give reasons and send a letter, will I be disqualified? No. Because I have tried my best from my side. Company is not paying. I cannot help it. So if you see, that is what they say. On the other hand, if you have a criminal bent of mind and you want to just escape the disqualification, then you will be disqualified. So basically here the test should be mens rea. Mens rea means criminal intention. Criminal intention. So law always punishes the mind, not the body. So they'll see what was your intention. So that is the thing. On the other hand, on the due date, you are not at all a director. You just came, like basically this was March 2022. In February 23, you were appointed. In February 23, you were appointed. In 1 month, will you be disqualified? So it used to create problems like that. That's why law inserted a point saying that, yes, you shall not incur the disqualification for 6 months from the date of your appointment. So from wherever February means February plus 6 months. I'll not disqualify you, don't worry. Try to revive everything, try to repay, try to do everything. If nothing works, leave. Within 6 months, resign and go. Nothing can be done. Okay. So for this company, what is it? Sorry, for the third type of director, you have 6 months time. For third type of director, you have 6 months time. So director is on due date, effective date. Then other things, same. Third one also similar. That is on the due date, you are not a director. On effective date, you become a director. Got it, guys? So if you see here, disqualification under 164(2)A will be 5 years from date of default. So obviously, if you see here, under 164(2)A, obviously there is due date given. What is due date? 30 days from AGM, 60 days from AGM. So if you don't follow for 3 years, gone. 5 years will start, let's say in 2023 was the date of default, 5 years till 2028. On the other hand, if it is 164(2)B, 2023 was the due date. Law gives you 1 year to rectify the default. And this will be the effective date. The law says failure continues for 1 year. Failure continues for 1 year or more. My question is, 5 years disqualification will start from 24 or from 23 itself? 23 or 24? It starts from 23. It starts from 23. Logic and all I have discussed in class. I mean, it takes time to explain the logic, etc. But yes, the law, because that 5 years point, quickly to understand, in 164(2), if you see the section, A is there, B is there. Then it says 5 years. Common point. 5 years should be from the common point itself. What is the common point for both? Date of default. Date of default. So it should be 5 years from date of default. Any other answer, anything else given in any other book is 100% wrong. Right? So There are certain things which institute also has given wrong, which we will discuss in class. We have to write only that in the exam. Wrong answer you have to write. Yes, but you have to write. I will not discuss what is correct. I will not confuse you. We will only discuss what is to be written. So here also what is to be written? This correctly. That is 5 years. This is correct, but it is 100% correct interpretation. 5 years from which? Date of default, not effective date of default. Or I can say 4 years from effective date of default. 4 years from effective date of. This is the correct answer. In exam, you have to write this. I have given it here. Point number 9. Page 5. Page 5. Point number 9. Disqualification under 164(2)(a). 5 years from date of default. 164(2)(b). 5 years from date of default itself, or 4 years from the effective date of default. 4 years from effective date of default. 164(2)(a) covers filing default, whereas 164(2)(b) covers financial default. And for financial default, I'll give you 1 year time, no problem. Filing default, no time given. Filing, you have to file on time. I'm just asking you to file the returns on time. And even if you don't file, it's okay. 1 year you don't file, okay. 2 years you don't file, it's okay. At least in 3 years, once you file both properly on time. And any, belated return is of no significance. This is an important question asked at least 2 to 3 times for 4 marks, that too in the compulsory area only. First time it appeared in November 2017. First question, it appeared in November 2007. After that, 2-3 times I've already asked. First time, November 17 paper. First question is this actually. Some tube light question, tube light limited. That's the name of the question also. So X is already a director of company A. Default of 164(2) in company A. Right? Mr. X is also a director in company B. Here there is no default. So A is a defaulting company, B is a non-defaulting company. The questions asked are very simple. And that too, let's say 164(2), we have not filed returns, assume. It's a defaulting company. Should he vacate his office in both these companies? How long will he continue as director in both the companies? Okay, third question is very easy. We'll answer that. Can he be reappointed in both the companies? No. How many years? 5 years. We are discussing disqualification. Disqualification only talks about appointment. It doesn't talk about continuing in office. It talks about appointment. So 1 and 2 we don't know now. We'll answer third question. Should he be can he be reappointed in both the companies? No. So definitely no. For how many years? 5 years. Because 164(2) says if you are disqualified, you cannot be appointed or reappointed in any other company for 5 years. So not only can he not be reappointed in A, he cannot go to B also. He cannot be reappointed in A or B, simple. Or any other new company also he cannot be appointed. That is very simple. So generally, for example, I'll just, this in 164, we saw that call money, shares, call money. You have not paid the call money. You have not paid call money in A Limited, but you have paid call money in B Limited. A Limited, will you be disqualified? Yes, for sure. But let us say you are already a director, you have bought some shares. After buying some shares, you have not paid call money. 6 months are over. Can you be reappointed in A Limited again? No, because you are disqualified. Now let's talk about vacation. Will you vacate your office if you are disqualified under 164? Answer is yes. 167(1)(a). 167(1)(a) says if a director incurs any disqualification under 164, he shall vacate from office. It's mandatory. He shall vacate from office. The question now is which office? Default. In this example, defaulting office, obviously. Why will you vacate another office? He will vacate in defaulting office. So, for example, call money if you have not paid. So, you have not paid 6 months call money, already a director, over 6 months over. So, will he vacate his office? 100% yes. In which company? A Limited, because that is the defaulting company. That is the defaulting company. So, think about other things. Revision. Unsound mind. Will he vacate in defaulting office? There is no defaulting office. He is only gone. So, gone. Undischarged insolvent. He is only insolvent. So, his DIN will be deactivated. Applied to the court adjudicating insolvent, gone. Moral turpitude, is in jail. Nowhere he is allowed. So only the share capital and let's say related party transaction, conviction, then also they'll throw him out everywhere. This is the only point where share and order disqualifying him to be a director of a tribunal. Tribunal also will tell under 241 you will see you will never be appointed in any other company also. So basically all 164 1 points by default because of the wordings itself. Will he be vacated? Will he vacate all the companies generally? Yes. Only the share capital is one example where only in which company? Defaulting company. Only in the defaulting company he will have to vacate office. So what happened was, even 164(2) for that matter, what used to happen was many people, I mean, November 16 after the demonetization, between November 16, November 8th and November 2016, I meant November 2016 to December 2016, almost 30,000 crore was pumped into the system in 1.5 lakh sham companies. 1.5 lakh sham companies, they pumped in so much money. And they all had random directors. And these directors were directors in some 20 companies. Right? So, the thing is, in these 1.5 lakh companies, had they filed annual accounts, annual returns? No. They had not filed anything. So, basically now tell me guys, in which company will they vacate office? Obviously, this is the only one defaulting company. All others are what? Non-defaulting companies. This is that company which is a sham company. Have they filed returns there? No. So in 2016, when vacation 1 year, the failure also continued for 1 year, they have not filed only any returns. And even they have not paid. So basically 164 2A also come, 2B also comes. They have not filed they have not paid for more than 1 year. Oh, forget about it. They have not filed any returns for 3 years. So where should they vacate? These directors coolly said, okay, I'll vacate your defaulting company, I'll vacate, no problem. So these people only vacated in the defaulting company, but in all companies they continued. Government did not like this. So in 2018, they amended the law. They said, if you come under 164, which one? 2, B or A? Both. That is, basically, if you come under 164, 2. The share capital, whatever I spoke was 164, 1. In 164, 1, you will vacate in the, which company? Defaulting company. Fair enough. But in 164, 2, you are doing cheating. You anyway don't care about that company. You have properly looted money. So you are 19 companies, you are chilling. So now they reversed the provision. They said, if you are charged under which one? 164, 2 default if you have done. You will vacate in which company? All other companies. Here you continue. Anyway, you are gone there. You continue. Right? All other companies get out immediately. Dangerous provision. So that is the actual logic. Simply if you read, you will not understand. The logic is all other companies you get out. This company you continue. So if you see here guys, should he vacate his office of director in these company? I am telling you here, he has committed default under 164(2). So should he vacate his office as director in these companies? Yes. In these companies, in which company? These companies in which one? In B or A? Yeah, in company B he has to vacate. Company A he can continue. Why? Company A is a defaulting company. There you continue. This was an amendment, Companies Amendment Act 2017 basically. Some 92 changes they brought in. Should you vacate his office as director in both these companies? B you vacate. A you continue. How long can he continue as director in both the companies? That will answer obviously. In A, will he continue? Yes. Till the end of the tenure. B, immediate vacation. So in B, it is immediate vacation. B, immediate vacation. A, he can continue. A, he can continue. Very simple. So this is a important 4-mark question. November 2017 paper, if you see, answer will be different. For the November 2017 paper, this amendment had not come. So don't see that suggested answers of November 2017. But yeah, now the answer is very simple. Can he be reappointed in both the companies? No. How long can he continue that in both the companies? A, he can continue. B, he has to vacate immediately. Should he vacate in both these companies as discussed? Yes. A, he can continue till the end of his tenure and will not be qualified to be reappointed. Whereas in B, he has to get out immediately. Same thing they have given here. Private company can give additional disqualifications. They can give additional disqualifications. Like what? You should be chartered accountant first attempt only. Can I tell? Yes. Nobody will be there anyway. Yes. Can I tell that? Yes. So private company can provide additional disqualification. No problem. 164(2) shall not apply to a government company which has not committed a default in filing the financial statements or annual return. So for them, there is no need of all these things because government only will handle. 164(2) also will not apply to nominee director. This is ICAI view. This only you should write. What is the correct view and all, you leave it. I am not going to discuss any of those things. This is the view that you should write. 164(2), will it apply to a nominee director? Yes. Sorry, will not apply to a nominee director, which means nominee director is exempt from 164(2). Which means if you are, who's a nominee director? Financial institution has given a loan and they'll appoint one director on the board. So let's say there to that bank only if you have not paid money, correct? And the failure has continued for 1 year or more. It will not, term loan will not come. Don't worry. That's what I'm trying to tell. Term loan anyway not come, correct? So what are the other 3 points? Deposits, debentures and dividend. So ideally speaking, basically the ICAI says, what is the correct answer? You leave. ICAI says 164(2) will not apply to a nominee director. Which means, will he be disqualified? No. Will he vacate his office? No. So this is again, they keep generally asking this. If you see November 17, as I told you, was the first time this question came. Compulsory area, tube light question. And then the tube light question, the third sub question. Yeah, second one, see. What would your answer be in case Mr. Vikram is a nominee director of a public financial institution? Answer. 164(2) will not apply to this nominee director. One line you have to write and close. That's all. So, yeah, that is why I have given here. Of course, director to inform the company about disqualification in DIR 8. Company to inform ROC about 164(2). Non-compliance in DIR 9. These are the various things. Couple of points we'll quickly do and we'll take a short break. Number of directors or directors. During the break, bring some food and all and keep eating. Correct? And if your eyes start closing, which happens generally, think about caresults.nic.in website. Automatically you will wake up. So that you will write your SRO number, your entire thing. You will hit submit. That 2 seconds will be the longest 2 seconds. Round will be going. Longest 2 seconds of your life. In the end, nobody will see the marks and all. You'll only see what? Pass or fail. If it is PASS, best result. Second worst result is fail. Worst result is what? Page cannot be displayed. Server error. Correct? Who are you and all if it comes? Who are you? Yes. April Fool. All that if it comes, dangerous. So, number of directors and directorships. 149(1). Simple, guys. These are all easy points. We'll quickly finish. So, public company, 7 members minimum, unlimited. That is, unlimited number of members can be in public company. Directors, 3, maximum 15. Can I go beyond 15 also? Yes. I have to pass a special resolution. Can I start a company with 18 directors then? No, because I have to pass a special resolution. When the company only is not there, how will I pass a special resolution? So basically, you cannot start a company with 18 directors. But government company can. Private company, members minimum 2, maximum 200. Directors minimum 2, maximum 15. One person company, definition says a company which has only one person as a member. So members will be 1, minimum also, maximum also. But you will have a nominee. You will have a nominee in case you die, nominee will take over. Directors on the other hand, guys, one person company, minimum 1 director, maximum, again it can go up to 15. Either way, more than 15 directors I can do by passing what? Special resolution. Maximum number of 15 directors does not apply to any government company and Section 8 company. Section 8 company is for philanthropic purpose. More the merrier. If 40 directors come also, it's good. That's the logic. Government company, it's anyway, they control it, so no problem. And of course, they should not have defaulted in filing the financial statements or annual returns. Now, coming to this, there are 12 directors in as per the articles and number of directors in the company are 12. Proposed, I am making it 17. So when I am amending the AOA. So here the first change is amendment, alteration of articles of association. I have given a sheet already. It is amendments to the summary book for May 2023. In this all the amendments, all small amendments only, honestly speaking, I've just given the entire page just to show you how it looks. In the class only we'll do everything, don't worry. And here the changes are given. And this sheet has already been shared on the Telegram channel. Just check it out. Right? And here we have given the corrigendum. There is some spelling errors here and there. In that first, that also I'll make it during the class only, so that there is no problem for you. The number of directors and directorships 0.3 in the first changes in replace memorandum with articles. It's a typo. Yes, here. This only we are coming to. Page number 6. So it is alteration of AOA, not MOA. So guys, if I'm altering the AOA, then what should I do? I should pass a special resolution. That special resolution, is under section 13 I have to pass. Section 13 special resolution, alteration of AOA. Apart from that, one more special resolution I have to pass under 149 1B to increase the limit beyond 15. So one meeting, 2 special resolutions are needed. One meeting, 2 special resolutions. And what is special resolution? We have seen notice has to be given. In the notice, you have to mention that the intended resolution is special. Then 75%. Now, in this particular question, to give the explanation and all that, in this particular question, if the, notice did not specify it's a special resolution, even if 90% majority is there, is it validly passed? The notice was sent, but in the notice you did not mention it was special resolution. But in the meeting 90% I already passed. Is it validly passed? No. So in the notice you have to mention that the intended resolution is special. The remaining 10% fellows can come and tell this is wrong. No problem. So 149 1B 2 special resolutions. The articles already specify 15. As of now there are 13 directors. 13 is increased to 15. No problem. There is no special resolution needed. Directors to be appointed normally under 152(2). Number of directors as per articles is 17. Number of directors in the company are 15. 15 is proposed to be increased to 17 now. So again 149 1B special resolution, because I am making the total. Articles already 17 is there. I already taken section 13 special resolution, already done. But here, since I'm increasing the number count beyond 15, I should pass 149 1B special resolution. Now, if there are 3 directors in a public company, we know minimum directors are 3. What happens if 1 out of 3 resign, or 1 out of 3, just is removed, or whatever it is? What will the remaining, and quorum is also 2 in this example. Quorum is the minimum number of disinterested directors required to have a valid meeting. Now, if there are 1 out of 3 has been resigned, which means there are only 2, quorum can be formed. Can they do any other business? No. They can only convene a board meeting, or they can convene an EGM to appoint other directors. Any business transacted after such reduction is invalid. Their only job is to do what? Convene a board meeting or an EGM to appoint directors. On the other hand, 2 out of 3 resign. One fellow, solo, what will he do? Appoint 1 more director to form the quorum. Once this happens, it will go to first point only, no? Instead, he can do one more better thing, convene a board meeting, or especially EGM to appoint directors. He can just convene an EGM. Third one, mass bunk, mass resignation. All 3 resign, then what to do? Yes, the promoters will become directors, and in their absence, central government will appoint temporary directors until shareholders appoint directors in EGM. Final power comes to the shareholders only. So, couple of points. The person shall not be a director in more than 20 companies at the same time, including alternate directorships. In the 20 companies, maximum 10 companies can be public. Maximum 10 can be public companies. That is not a problem. Sorry, one second. Yeah, maximum 10 companies can be public. Now, for calculating the 20, section 8, okay, we'll see that. So, if you see dormant company to be excluded, okay, we'll see all this, guys. You'll see one by one, coolly. So this 20 companies when I am counting, correct? Section 8 company, should I include or exclude? Section 8 company you can say to be excluded. Section 8 company to be excluded, and this you change it here. Private company, neither holding or subsidiary company or public company to be included. We'll see. For calculating the ceiling of 20, correct? Section 8 company to be excluded, and a private company which is neither holding or subsidiary of a public company to be included. We'll see that. So for the ceiling of this 20, Section 8 company to be excluded. Why? Because if I am a director of a Section 8 company and you include it in my total number, I will say I am not making any money from that. So I will actually leave this company and I will join a company which actually gives me money. So please don't count this 20 in this 20. Normal private company, which is neither holding or subsidiary of a public company, that obviously has to be included in that 20. Now, apart from that, what about this company? We all know that if there is a private company, what about the subsidiary of a company which happens to be a public company? This is okay, no problem. This is private, this is public. What about reverse? There is Y Limited and Z Private Limited. My question is this one. Yes, as it is deemed public company. Deemed public company. The law says that you should be a director of 20 companies overall, which includes 10 public companies. Which includes 10 public companies. My question is this a public company? Yes. Is this a public company? Yes. Now, if I were to be a director here, or if I were to be a director here, let's take this example. This Z Private Limited, should it be counted? Obviously, if it's counted in 10, it's counted in 20, goes without saying. But should I take this as public company or private company? Yeah, the law obviously, because since it's a deemed public company, this also should be taken as a public company. But this company, tell me, is this actually public company? No. Otherwise also, is it deemed public company? No. Deemed public company is only for this, Z Private Limited. Is X Private Limited, is it a deemed public company? No. But should I take it in 10 or 20? 10 it will 20 it will anyway come overall. But should it also be taken as public company for 165? Yes. So this also, for the limited purpose of 165, counted as public company. Only for the limited purpose of 165, it is counted as public company. Ideally, it's not public company. This is definitely public. This is public. This is deemed public. I agree. This is not public at all. But for the limited purpose of section 165, I will count it as public company. Got it? So that's why here, that's one more problem. Section 8 company to be excluded and private company, neither holding or subsidiary of public company to be included is what it says. Dormant, now dormant company, guys. Dormant company. Dormant company, as per the law, it says dormant company should be excluded from 20. But now, ICA added one extra question. Dormant can be private also, public also. Now tell me, dormant private, exclude from 10 also, exclude from 20 also. That's fair enough. What about dormant public? Now that is a question. Dormant public. Ideally, if you exclude in 10, it will be excluded in 20. It may not be, sorry. If it's excluded in 20, it obviously will be excluded in 10 also, general rule. But dormant public company, what do I do? ICI again. We have to follow big boss. ICI. Dormant company, dormant public company to be excluded from 20, but included in 10. This is the conservative view they are taking. First of all, it's a public company, so please include in 10, but exclude in 20. Logic and all, don't ask. So it is the, it's very, very conservative view, but they have taken this in the suggested answers. Let us not discuss the correct view, all that. This is pure exam revision. So ICI of the exam, you have to write this. To be excluded from 20, but included in 10. This is one ICA view, and one more nominee director also we saw. That was also ICA view. So this is all some difference in views, but we need to stick to what they have told. So last part before we take a short break, this, come on. So directorship in a government company incorporated as public company, will it be included in 20? Yes. 10 also, obviously, yes. Public sector undertaking, being a company, PSU, of course it's a company, so it will apply both. Foreign company, okay, company definition is what? Company means a company which is incorporated under Companies Act. So a foreign company like Tesla Incorporated USA, obviously, no. Directorship in a foreign company, which is a subsidiary or holding company of a company incorporated in India, again, no. Because it's a foreign company, it's incorporated outside India. It can be subsidiary, but ultimately it is not incorporated in India. So, not there. Foreign body corporate, not being a foreign company, obviously no. This applies only to companies. Moving on. Directorship in a company licensed under Section 8, as discussed, it is not counted in 10 also, not counted in 20 also. Small shareholder directorship in a listed public company. I don't care what type of director you are, it is included in both. Holding directorship in a public company as a nominee director. So what? Both the cases it is, yes. Will be included in 20, yes. Included in 10, yes. Holding directorship in a public company as an alternate director. Yes, of course, it will be there. Holding directorship in a public company as a managing director or whole-time director. Yes. For you to be a MD, you have to be a director first. Holding directorship in a pure private company. Pure private means neither holding is public nor subsidiary is public. What a pure private, standalone private company. What do you think? Included in 20, of course, but excluded in 10. Directorship in a private company, which is a subsidiary of a public company. Both the cases it is. Yes. Directorship in a private company, which is a holding company. Directorship in a private company, which is a holding company of a public company. Yes, because of the explanation 1, both the cases it is. Yes. Last one. Directorship in a dormant company, which is a public company. One case it is no. In 20 it is no, but in 10 you have to include ICAI view. ICAI view. So till here we'll finish off. Then we'll take a break. Next, consent for directorship 152(5) to be filed by the director with the company on or before appointment in form number DIR2. Again, to be filed by the company with the ROC within 30 days of appointment in form number DIR12. For unlisted public IFSC companies, that is in SEZ, Special Economic Zone, then it is 60 days. International Financial Services Center, it is 60 days. Relaxation is given. In case of independent directors appointed in general meeting, explanatory statement shall include a statement that he fulfills all the conditions of the independence, which we will see later. It is not applicable for Section 8 company. Then, Section 152(5) shall not apply to a government company where appointment of such director is done by the central government and there is no default in filing because they are only appointing, so this will not apply consent. DIN rule. Every individual who is to be appointed as director shall have a DIN. Person cannot hold more than 1 DIN. CG will allot DIN within 1 month of application. And if you must quote the DIN everywhere, one amendment that has come now, which is part of the book already, that first amendment, if you see, I have given also page number 8, page number 30, these are all the amendments here. How many changes? So I have given the entire page here. For example, this is page number 8. So in page number 8, this is the addition to be made. This sheet is already available on my channel, Telegram channel. You can download and probably take a print if you want. It's just 19 pages one, or you can use it just like that and make changes here. In case person appointing as what? National of a, the person who is seeking appointment is a national of a country which shares land border with India. Necessary security clearance from the Ministry of Home Affairs, Government of India shall be attached along with the consent. So if a Pakistani or a Chinese national happens to be wants to be a director of any company now and obtaining DIN application, what should you take? You should take a security clearance. There will be a due diligence on him and on him or her. A security clearance will be given first by the Ministry of Home Affairs and then only he can apply for DIN. That is the change. Similarly, this is for consent also. First of all, same provisions for DIN also. Even to give a consent under 152(5), you need a security clearance, and also for DIN application, you need a security clearance. So this is additional protection in the national interest is what they have given here. That is one extra point. These amendments are applicable for May 20th. So in the summary book itself, all these amendments have given, and all these are not amendments. Only the one which is marked here is an amendment. So that even here, the entire page is not amendment. Only this one part is an amendment. That's what I'm trying to tell. So that is all there is to it here. Done, guys. So we'll take a break. After the break, we'll finish off the vacation, removal, all these provisions, and then move on to cluster 2. So we'll finish it off, take a break. All right, guys, shall we begin? Awesome. Let's finish off whatever is possible. Okay. Vacation of office, page number 9. We are still in cluster number 1. Vacation of office, resignation and removal. Let's see. Vacation of office of director, section 167. So as the law says that the office of the director shall be vacated. When they use the word shall be vacated, it means it is automatic vacation. It is automatic vacation. So no resolution needed, automatic. On happening of certain events, forthwith you will cease to be a director. When some event happens, automatically you will vacate your office. No need for any opportunity to show cause as such. So basically there is no show cause notice, and directly you will have to vacate your office. The board also need not pass any resolution. The board will have no power to waive the event as such. So there is no waiver, no relaxation, nothing. Where a director disputes the vacation, he shall first vacate the office, then resort to the court mechanism for a direction that the section was not applicable and that he be reinstated. This happened in Cyrus Mistry case. Cyrus Mistry unfortunately passed away, right, in an accident a few months ago, if you have seen. So Cyrus Mistry was the chairman of Tata Sons and all the groups there, Tata Group. So there he was removed under section 169, and because he was removed, he vacated from office under 167. So he went to the court and challenged. First he got vacated, then he went and challenged, saying what? My removal and vacation is invalid. So first the NCLT said, no, it is not invalid. He also went for oppression and mismanagement, saying that his group, Shapurji Polanji group, has 18.6% stake, whereas Tata Sons had majority stake. So he said, no, this whatever my removal which was done was actually void. So NCLT initially said it is not void. Then it went to the higher court, NCLAT. They said it is void. Then it went to Supreme Court. Supreme Court settled the entire issue, because it was a question of law, whether the removal was valid or void. So they said removal was valid. So finally they lost the case. He lost the case, Cyrus Mistry, and he was removed from all the companies which was associated with Tata. This is a practical case which happened. So when you dispute the vacation, what should you do? First vacate the office, then resort to court mechanism. Then if they reinstate, NCLAT actually told it has to be immediately reinstated. That is what the concept. Reinstated means come back into the thing again. Moving on. What are the grounds of vacation? First, if he incurs any of the disqualifications specified in 164.1, which we have seen now, 164.1 and 164.2. 164.1 means the defaulting office. He will incur the disqualification in the defaulting office. Thus, it implies that the disqualification for a director would arise not only at the point of appointment, but also during his tenure as a director. So, it will arise not only at the point of appointment, but also during his tenure as a director. Where he incurs disqualification under subsection 2 of 164, the office of the director shall become vacant in all the companies. Other than the company in which default under that subsection. We have seen this already. So he will vacate the office in the non-defaulting company under 164(2). Under 164(2), you will vacate in the non-defaulting company. So A. Next B. He absents himself from all the meetings of the board during a period of 12 months with or without seeking leave of absence from the board. We'll anyway discuss this when we do alternate director. We'll coolly discuss it again. But nevertheless, he absents himself from all the meetings of the board. Means what? With or without seeking leave of absence. That with or without seeking leave of absence, when we see alternate director, we'll again explain. But anyway, if he absents, this they have asked like 2-3 times in the past 4-5 attempts. What do you mean by absents himself? Basically, he does not attend any board meeting. So in that case, it is taken into consideration. Absence here is what, guys? It is scope for legal and medical impossibility is there. So this will again connect it in alternate director, no problem, and he will be pardoned. If he absent due to lack of interest, then the section gets attracted. We will see this in alternate director. But nevertheless, let's say you are a good director and the company wants to remove you. Other directors are scheming to remove you. Removal requires a full process, which we'll see next under 169. I don't want to go through that. What will I do? What is the one document which can be easily manipulated? Minutes of the meeting. Correct? We have all done, right? During our articleship. So they have say, sir, when is the meeting? Sir, when you want the meeting, you tell. Correct? When you want, which day, how, column, all that you see, you tell me time, I will make the minutes. Minutes is something which we all manipulate, unfortunately. So if you see, now I will manipulate the minutes and say some 7 meetings happened during the year who never came. And I'll tell the director, now you will be removed. You will vacate the office because you never attended any meeting. Now the director will immediately go to court and say this is wrong. Now who has to prove? The director has to prove that the company did not send him anything, or the company has to prove that they sent and he still didn't attend company. So the onus of proving rests on the company. So the person who is suing the other person, that person is called as the plaintiff. Correct? So the plaintiff would be the director here and the company would be the defendant. Company would be the defendant. That is one, plaintiff and defendant. On the other hand, which is the other part? What is the other person called? One more dialogue. The petitioner is one more word that the law can use sometimes. Petitioner. The other person is called respondent. Respondent. When we teach foundation, it's fun because we say offerer, other person is offeree. Then promiser, promisee. Plaintiff, plaintiffee, they'll tell. Plaintee, petitioner, petitionee. Correct? One was worst in, I think, Chennai or somewhere, and I was talking, the person, I was telling, offerer, offeree, promiser, promisee. Person who sues, that fellow was like suer. Like, okay, boss, that's a different meaning. Correct? Suer, sui, and all that. Correct. So, dangerous. For foundation kids, it's fun to teach. All these dialogues will come. All right, come back. So, onus of proving rests on the company. So, it has to prove the following. 1. Notice was duly sent. Director has received the notice. Meeting was duly held. Director did not attend the meeting. So, all these things have to be taken into account. He does not follow the provisions of disclosure of interest or does not disclose his interest under section 184. Correct? 184 is a different section. Cluster number 3. Tomorrow morning we'll do it with a fresh mind. Full cluster. There is a deadly cluster. We'll finish that. Provisions of disclosure of interest, does not disclose his interest at all in 164. He becomes disqualified by an order of the court or the tribunal. Becomes disqualified by the order of the court or tribunal. That is point number D. So all these things are there. This is same point which we saw in 164 also. Same. Next, again, same moral turpitude point. He has been convicted by a court. Offense involving moral turpitude, something that shocks the moral values. Otherwise, same thing. Sentence minimum 6 months. That 5 years, etc. is not there because here I am talking about vacation, not about disqualification. So there is no concept of that 6 months, 5 years. He is removed as per the provisions of the Act. That is what Cyrus Mistry, 169, removed. One more removal is under 242 2H. This is tribunal will remove. This happened in this fellow, what's his fellow? Satyam. When he went and told that I did all these things, immediately tribunal removed him. As that, it goes without saying, but anyway, they removed him because he had committed fraud. There are, as per provisions of the Act means, two provisions are there, 169 and 242 2H. Under these sections, you can be removed. So Cyrus Mistry was 169. Next, if for example, if what do you say, holding company or a company secretary, and you will be a director, because you are a company secretary in the holding company, you will now be appointed as a director in the subsidiary company. The articles will say of subsidiary company that the holding company's company secretary will mandatorily sit on the board of directors of subsidiary company. So if you see holding company, subsidiary company, directorship is there. Why are you a director of subsidiary company? Only because you are the director of the CS of the holding company. Now, if you resign your CS position here, what happens to the directorship? That also gets vacated. That is point number If he, that is his director, is appointed in a holding or subsidiary or associate company as an officer or employee. In my example, in the holding company is appointed as an officer. What officer? Company secretary. And because of the same, he becomes a director in another company. Which company? S. And he has to vacate the office of director in the company, that is S, when the employment no longer exists in the holding subsidiary associate company. What is associate company, guys? One more dialogue. What is associate company? Keyword, significant influence. Significant influence means 20%. 20% of what? Total voting power. 20% of total voting power. Same. In 164, we did not see any appeal saving clause. Here I told a dialogue. When the director disputes the vacation, he shall first vacate the office. But there is an exception to that. That is point number 8. For points D and E, that is what? Court order and moral turpitude. Vacation does not take effect for 30 days from the date of conviction. For 30 days, law is giving you time to file an appeal. If appeal is preferred, there is no vacation for 7 days from the date of disposal of the appeal. So the exception for point number 6 here is point number 8. Only for 2 points, moral turpitude and court order. You can still continue in the office by immediately preferring an appeal. For 30 days from the date of conviction, you will not get, or order of disqualification as the case may be, you will not get what? You will not vacate your office. And also, the higher court will dispose. Again, 7 days time I have for preferring one more appeal. So, no problem. I will continue to be the director of that particular company. This is the point for that. There is no relaxation for disqualification, mind you. There is only relaxation for vacation. Private company can also add additional grounds in its articles. One of the private companies had added one ground saying that a director may vacate office on reasonable grounds. Is this correct? Can you say reasonable grounds? No, because it will virtually result in a removal. So because 4 directors will gang up and tell you are now vacated on reasonable grounds. What are the grounds? Don't know. So if you see, this should be reasonable grounds means that anything which is ambiguous like that, which cannot be clearly told, that is void. Reasonable grounds is void. You should clearly specify the grounds which will result in vacation, and mind you, it's only for private company, not for public company. Any other ground other than this would be void ab initio. It should be crystal clear the way we communicate. Public company cannot provide for any additional grounds. The private company can, public company no. Only these points, whatever grounds are there, that's it. Public company also cannot provide for any additional grounds for disqualification also and for vacation also. Both the points it cannot provide any additional grounds. This is section 167. Very simple, vacation of office. In that this point they have asked couple of times. We'll see that in alternate director. Yes. Resignation of director. A director may resign by giving a notice in writing to the company. It shall intimate the ROC within 30 days in form number DIR 12 plus the website you have to post and all those things. Yes. The resigning director may forward a copy of his resignation with detailed reasons to ROC, but this may will be read as shall when This may will be read as shall. That is when, yes, one is for listed company. As per SEBI, if you are resigning from a listed company, 100% you need to give your resignation properly with reasons. Second one we just discussed, that is 1 year. 1 year in that you are not a director, you are a director on the date of default, but not a director on the, sorry, you are not a director on the date of default, but you are a director on the effective date of default. Before that, if you want to resign, or basically you want to resign to protect yourself. Here we saw this point, I'll just show you. Let's see. Second point, right? Here, this point, correct. This one. If B has been continuously following up with the company to rectify the defaults in 164.2, I'm reading page number 5, then he can resign before effective date. In this case, resignation will not apply. So here I can also say detailed reasons must be given. We discuss the same thing here. Detailed reasons must be given. Detailed reasons must be given. So these are a couple of cases where resignation, that may will be read as shall. May will be read as shall. In this case here, obviously the may should be read as shall. So many cases, general rule, when Act uses the word may, it obviously means may that is discretionary in nature. But when Act uses the word shall, it is generally mandatory. So when Act uses the word shall, which means every company shall appoint board of directors, then it is mandatory. Correct? On the other hand, if it says every company, for example here, every director may appoint, give a copy of resignation, that is also generally discretionary only, but in some cases it becomes mandatory. So these are the things that we have to see. So basically, these are all called interpretation of statutes, which we had in CA Inter. That one chapter which we left out of syllabus, we thought it was will not come. That is very, very important chapter actually for CA final, interpretation of statutes. Yeah, next, foreign director resigning, authorize in writing a practicing chartered accountant, company secretary, CMA or resident director also to file DIR 11 on his behalf. He can authorize. Resignation. Now in this chapter, in this concept, they can ask you, when will the resignation take effect? When will it take effect? Like for example, I send it on, let's say 14th March, it is dated 14th March, whereas I will post it on 16th March and it will be received by the company on 18th March and they will accept it saying that yes, take it on record on 21st March. When is the resignation valid? 18th, yes. So you see, resignation of a director shall take effect from the date on which the notice is received by the company, or the date specified by the director in the notice, whichever is later. So in 14 March, in that he would have written, I will now no longer continue from 1st May. So it will effective from 1st May is what they say. Can he say from 1st March only I will not continue? He would have committed on fraud there, 7th March. So now he's telling, don't pay me salary also. From 1st March, I will deem to have exited the office. No. So if you see, that's why whichever is later concept came. Because to ensure that these directors don't, resign with retrospective effect, escaping from punishment. He is liable even after his resignation for the offences which occurred during his tenure, obviously. The promoters will become directors and in their absence, central government will appoint temporary directors until shareholders appoint directors in the extraordinary general meeting, same thing. In case of resignation of MD, however, so if Virat Kohli stepped down as captain, should he follow 168? No. MD is a captaincy position. Director means player. If you are resigning as a player, only then you should go to 168. If you are resigning as a captain, 168 is not needed. So if you see, in case of resignation of MD, apart from compliance of 168, resignation has to be accepted by the board and should be relieved from his duties. This is if he is resigning both as a captain and a player. But if he is only resigning as MD, no need to go to 168. Only resignation as MD doesn't require 168. Simply you can just say that I do not wish to continue, and a simple communication to company is enough. That's what. So if you are resigning from MD position also and director position also, then all these provisions have to be followed. So, and here this is not there in the law as such, but it is an accepted practice. You should be accepted by the board. Just by sending a letter, it will not suffice. You should tell boss, I will no longer continue. But now, even when this Vishal Sikka, if you just type on Google Vishal Sikka resignation letter, Vishal Sikka was the CEO of Infosys. He and Narayan Murthy always were fighting. Because Narayan Murthy, it is his own company, right? So though he was a chairman, he was interfering a lot. Vishal Sikka did not like it. He said, I am resigning. In that letter, he has obviously indirectly blasted Narayan Murthy and everybody. But he is also, one dialogue he has told in the end, saying that I will continue to be in office for the next 2-3 months, and I will ensure that there is a smooth transitioning and handing over of all my duties to my successor. And I will assure you that everything will be taken care properly. So like that he has written. So yes, that has to be given. So that is for the MD. The last part in cluster number 1 is the removal of director. Again, very important. The same provisions are also for removal of, not removal of auditor, appointment of auditor other than the retiring auditor. Same provisions. So first, at least these provisions here, the principles of natural justice, we will see. First of all, removal will happen only by ordinary resolution. If Act is silent about resolution, is it ordinary or special? Ordinary. But in this case, Act has specifically mentioned the word ordinary resolution, which means Act is telling you, you cannot ask for special resolution at all. It has to be ordinary. Articles cannot provide for special resolution even for removal. There are certain directors who cannot be removed. One is the proportional representation director under 163, which we will see in cluster 2. Director appointed by the tribunal under 242. Because when the tribunal removes certain people and appoints certain people here, then they cannot be removed. They can never be removed. So for example, in Satyam case, Ramalinga Raju was removed, and you would have seen a very famous tax book, T.N. Manoharan sir. Right? T.N. Manoharan sir was appointed on the board of Satyam. He was a tribunal. That time it was government and CLB. They appointed him and other directors to steady the ship. So T.N. Manoharan sir is from Chennai, one of the stalwarts, Padma Shri awardee, right? So he was actually appointed on the board of this company, Satyam, to steady the ship. Now, can you remove that person? No. So that's what it is. Director appointed by the tribunal under 242. Financial institution nominee director cannot be removed because he is only looking after the, company, the bank's interest. That cannot be removed. Thus, all other types of directors which we will see in cluster 2, everybody can be removed. There is no concept of permanent directors under Companies Act. Everybody can be thrown out. But as most important here, what? Special notice is needed. You have seen all this. So this is the procedure, guys. First of all, we have already seen this. Again, revision. 1% voting power or 5 lakh paid up capital will give a special notice. Special notice will be given when? Not earlier than 3 months, not less than 14 days. Will be given to the company. Company will give it to all members, not less than 7 days before the meeting. And that person will give it to the, director who is proposed to be removed, who will give a written representation. He has a right to give a written representation. Now, this fellow always wanted to be an author. Can he write a novel? Why I should not be removed? Chapter 1, my childhood. Right? How I struggled, all that he cannot write. That's why law says reasonable length. They know this fellow will start. Or can he say, why I should not be removed? Coming soon, a theatre near you. Yeah, reasonable time. They have given this in the law specifically for such directors. So reasonable time, reasonable length. Reasonable time means what? 2 days, 1 week maximum. Reasonable length, yes, some few pages. Cannot write novel. So, and that written representation, let us say, immediately you have to send it to the company. Company has to circulate the representation. And they have to state the fact that representation is being made in all the notices when they are sending. They should tell, we have received the representation, we will send it to you. And they have to send it also. First right is what? Right to receive the notice. Second right to give written representation. Right of the director. Third right is right of having the notice circulated. The representation circulated. Fourth one, right of stating the fact that representation is being made. Now, If the company does not do any of these things, either due to delay or because of their own default, and one more right, director can read out the representation at the meeting. This is called everybody is innocent until proven guilty. In India and all the other civilized economies, everyone is like that. So basically, this is called as principles of natural justice, PONJ, and opportunity of being heard. This is called that. Everybody is innocent until proven guilty. So everybody will get a chance to speak. Everybody will get a chance to sort of redeem that and tell the reason as to why it happened. Even Ajmal Kasab, the court said, why did you kill so many people? So it actually is true. Everyone gets an opportunity of being heard. Now this director, he knows he's going down. In India, that is our mindset. When we are going down, we'll ensure everybody goes down. So this fellow, he gets a chance now to write. He'll write whatever he feels like. Director A is having affair with Director B's wife. Full masala add. Then all that you add and tell. Basically, it brings down the company, entire company only, no? That's the problem. Director B's wife is having cross connection. The Director C. All that he writes. Now, the company reads it and he knows it's baseless. They don't want to send it, but they have to send it. Law says you have to send it. So, for relaxation, for that, such representations, application of the aggrieved party, or the aggrieved party is one of the directors. You can probably, he targets one director, their personal vendetta, or he'll target the company. Then this company or the party can go to the tribunal. And the tribunal should be satisfied that the rights of these directors, these 5 rights, is being abused by that director. He is abusing the right. And there's one dialogue to secure needless publicity for defamatory matter. Needless publicity for defaming the company and defaming the, basically the entire procedure now. So then tribunal will order the company not to send representation and not to read out the representation at the meeting. So they'll say, do not send the representation at all. And law uses the word not to read out the representation and not to circulate. So if they ask you MCQ where they say that, the tribunal was satisfied that the rights were being abused, and they'll say not to circulate. Option number 1, not to circulate. Second, they'll tell not to speak at the meeting. Third will say either 1 or 2. Fourth one will say 1 and 2. Which one will you choose? Fourth one, 1 and 2. Wrong answer. Only first one. See, second one, not to speak. Not to speak. You can, what do you say? NCLT asks you not to speak. No. This is Indian Constitution, freedom of speech. So that is the most important MCQ once they had asked, right? So it is not to circulate. That's what we'll write 1 and 2 and come out and say dead easy paper. Right? Result will be easy dead, reverse. Correct. So 1 and 2 it is. So that is the problem. See here. They have given that also. Cannot take away the right of the director to speak at the meeting. Nobody can take away the right of the director to speak. Law also, if you read 169, one dialogue is there, without prejudice to his right to be heard orally. That is a dialogue given in the law. Without prejudice to his right to be heard orally. Nobody can take away the right to speak. Nobody can take away. Cannot take away the right of the director to speak at the meeting. Principles of natural justice, PONJ. After all these things are done, what will happen? I will pass an ordinary resolution and then you will stand removed. If the vacancy is not filled at the time at the same GM, then the board may fill it as a casual vacancy, but the board cannot appoint the director removed, obviously. Same guy cannot be appointed. And whoever is removed is entitled to claim compensation or damages, if any, available to him. This point, they will merge it with MD's provisions and give in the exam. This along with section 202, favorite examiner's question. We'll see that in MD provisions. And MD when he is removed, will he get compensation? Is the question that they ask. Normally, only MD whole-time director are entitled to compensation under 202 I have given if the terms of the employment so provide. So it's a combined question that they will ask. 1 and 2 we'll see later. 169 will not get attracted to remove as MD. If you want to throw out a person as the captain but not as a director, then I need not go to 169. But if in case he is removed as a director, obviously captaincy position also goes. If I remove you as a player, captaincy position automatically will go. The court may interfere only. This is what Cyrus Mistry case happened. The court will interfere, not why they removed Cyrus Mistry. They interfered because he said the procedure was not followed. So the court will interfere only if the procedure relating to appointment and removal is not followed. So that is what it is here. Apart from that, some miscellaneous points. Company is required to maintain a register of directors and KMP and their shareholding. Form DIR 12 in respect of directors within 30 days of appointment, within 30 days of any change taking place has to be done. Section 170 shall not apply to a government company in which 100% share capital is held by CG, SG or any combination and there is no default. This is basically 100% government company. No need to maintain register of director shareholding, KMP, etc. in case of 100% government company. As regards the non-applicability and penalty, I understand it's very difficult to remember everything. So only the important ones you can remember, especially penalty. So many things are there. I mean, I would personally not remember. I would personally not study that also. But there are few sections which we need to remember the penalty, especially cluster 3, which we will see. Then all these areas, MCQs they can ask. For example, I can inspect what? The register of directors and key managers, that register. When can I inspect? Anytime? No, only during business hours. And can I take extracts also? Yes, on request within 30 days, they have to provide free of cost. Free of cost, no money charged. Open for inspection also where? At every annual general meeting. If inspection is refused and if any copy is not sent within 30 days, registrar shall on an application order immediately for you to give the books, the register of, directors and KMP. Now this is a penalty which is there from 21/12/2020. That is, if a company in default in complying with all these things and no other specific penalty is provided elsewhere, company and every officer in default liable to a penalty of 50,000 plus 500 rupees per day to a maximum of 3 lakh in case of company and 1 lakh in case of officer in default. So many cases they have used the word penalty and other cases they have used the word fine. What's the difference? Spelling. After that, apart from spelling, penalty and fine. Because if you write it interchangeably, gone. Penalty? Fine is paid to the court, NCLT. Penalty is paid to it is an internal adjudicating mechanism. Penalty is paid to ROC. Penalty is paid to ROC. So in 2018 and 2020, Nirmala Madam changed. In 2020 especially, Nirmala Sitharaman in Companies Amendment Act 2020, she said in the speech that I am decriminalizing. This time, this budget also she told this. I am decriminalizing Companies Act. What is decriminalizing? No need to go to court. Pay the ROC and close it. So most of the things has been decriminalized. Right? So if you are going on the road without helmet on the bike, mama catches you. So what? You will pay fine or penalty? Actually speaking, he'll tell fine, but is it fine or penalty? You are paying to court or you are paying to the mama? That is what will you pay? So it is a penalty. Actually it's penal in nature. It's not fine. The next time he'll tell fine 500, don't tell sir it's not fine. As per law, it is penalty. Yes. So it is actually penal in nature. Penalty is always paid to the internal adjudicating mechanism. Right? On the other hand, if this drunken driving case, then if you have seen your friends, then you'll have to go to the court the next day. Correct? And you have to take the keys and all those things. So all that they will take away. So that is actually fine in nature. Here it is penalty. So this is regarding cluster 1. Predominantly so many questions in the sense in MCQ they can ask you. Apart from that, questions keep coming. So wherever I have told you important areas I have discussed. But the most important cluster in that group is cluster 2, types of directors. There will be 100% question. Without a doubt, there will be a question on cluster 2. And cluster 3, again, 100% it will be, there will be a question in that 184, 185, 186, 188 series. So let's dive into cluster number 2, which is a short question in the exam, undoubtedly. Minimum 1. Can go up to anything, 4 marks, 8 marks, 12 marks, anything they can ask you. So types of directors, the law does not give any category as such. There is nothing called executive, non-executive, professional, nothing is there. Generally, person who works full time in the company as an employee is called executive director. Otherwise, who will not look after the day-to-day affairs is called as the non-executive director. Non-executive directors are also professional directors who only come once in a way. So once you become chartered accountant, you will also be invited to be the directors on boards of good companies where you will only come 3 to 4 times a year and you will give your professional advice. That you are a non-executive director, professional director. They are expert directors in their field. On the other hand, independent directors are what? They are required as per law, as per 149 and also as per SEBI regulations. You should not have any material pecuniary, that is financial relationship, except the remuneration, of course. Yes. Apart from that, again, in Vijay Mallya's case, many things came because of Vijay Mallya. One was, of course, the 20 companies limit. One more was, when he committed all that scam, etc., they said Solomon versus Solomon, all that. Then they said lifting the corporate veil. They lifted, nobody was there. Right? So that's why they added this point. I'm not joking. This point number 6 came because of that only. Every company is required to have at least one director who has stayed in India for a total period of not less than 182 days during the financial year. So resident director concept was introduced. And also woman director concept was introduced, which is one of the most favorite questions of late, woman director. Right? Woman director also we'll see. Anyway, barring that, you see these are the various types of directors. First director. Who's the first director? Appointed after incorporation. Next, second one. Reappointment of retiring director. Now this one, reappointment of retiring director, it is actually a mechanism. It's a mechanism of rotation where few directors continue, few directors go. It is not a type of director as such, it's a mechanism. Third one, appointment of a person as director other than the retiring director, 160. That is one more type. Next, additional director, 161(1). This person is appointed when there is any new project coming on board, and that project you have to attend. That is 161(1). So let's say your GMR infrastructure and you want to build a runway in Jammu and Kashmir, high altitude area. You can hire an expert from Switzerland who can do it. He will say, I'll only do it if you make me a director. Yes, possible. So directorship you will give, then yes. Alternate director. If the original director goes outside India for more than 3 months, then in his place I can appoint an alternate director. We will see that. Nominee director is appointed by financial institution. Casual vacancy director. If a director dies, resigns, or whatever it is, he vacates from office because of any reason, in his place another fellow will be appointed. Casual vacancy. Small shareholder director. He is a director who is appointed on behalf of the small shareholders. Small shareholders, what is the value? 20,000 face value. 20,000 face value. Independent director is required as per law. Now, so many types are there. Why isn't woman director here in this? Yeah, any director. So what I'm saying is, can a additional director be a woman director? Yes. So woman director is any lady director among this who is designated as such. So that person can be anything here. There are so many types of directors. Will additional director have the same power as, let's say, nominee director? Will casual vacancy have same power as first director? Answer is yes. Everybody has the same powers. Everybody has the same powers. But why do we have so many types of directors? Only because two things are there. Method of appointment. How they come into the company is different, and how long they stay in the company is different. That's it. So the questions also will be based on these areas only. How they come into the company and how long will they stay in office. Correct? That is method of appointment and tenure of appointment. So this entire day will go, of course, in discussing each and every point in depth, because just revision means not reading. We have to also understand in depth. and what are the various types of directors. And of course, we will also do cluster 4. Cluster 3 requires a lot of concentration. The morning session is better. So we'll do that later. So here, if you see all these things, first director, reappointment of retiring, additional director, alternate director, all these things, method of appointment and tenure of office. Then why isn't MD given here? MD is just a captaincy position. Any of these fellows can be captains, right? But except few people. Who? Independent director cannot be a captain. Because the fact of independence itself, he should not be related to the company full time. He should not be associated with the day-to-day operation. So how can you be, what do you say, MD? Not possible. Then small churl. For this fellow, giving director position only is an important big thing. I have made you director only is a big thing. Don't ask for MD position and all. So for him, not allowed. So too much it will be. Next, third, casual vacancy can become 100%. Nominee, yes, nominee. That's it. Nominee director is only representing what? The financial institution. So basically F, H and I cannot become MD. That's it. Everybody else can become MD. F because is only representing the financial institution. H because it cannot ask for too much. And I independent director. Actually H also, the law says a small shareholder director should follow all concepts of independence, which means is as good as a independent director. So obviously H and I will not be counted. F of course is a nominee director, that's why. So F, H and I, MD provisions, MD, you cannot appoint him as an MD. All directors are equal when it comes to rights, responsibilities, liabilities, and only for the method of appointment and tenure of office. Following classes of company shall appoint at least one woman director. Every listed company, this is very, very important. You have to remember this. Regularly asked in the exam. Every listed company has to appoint one woman director. Apart from that, every other public company, which means private company, need not appoint woman director. Every other public company having paid up share capital of 100 crore or more, or, it's not and, it's or, means in one condition, if it's satisfied, is enough. Turnover of 300 crore or more. Turnover of 300 crore or more. When do I see the capital and turnover? Last date of LABS, latest audited balance sheet. So this you have to remember. Public company, irrespective of the amount. Unlisted public company, PUC 100 CR in LABS or turnover 300 crore LABS, latest audited balance sheet. So one by one we need to discuss the various types of directors. Here revision points are there, but of course we will discuss more in depth. So this is page 14 we are doing. Types of directors. First, directors. So first of all, such directors are appointed in what? Either public company or private company. So it's applicable to both public and private. So first, directors are applicable both in private company and public company. First, directors are given under, if you see in this 152(1). First, directors. So if you read the, let's just quickly. So 152(1) we'll just quickly see. Where no, this dialogue only. Where no provision is made in the articles of a company for the appointment of the first director, then the subscribers to memorandum or individual shall be deemed to be the first director. But what is this first line? Where no provision is made in the articles of the company for the appointment of the first director. So there are two things. One, if the articles specify certain things that these things should happen, then you have to follow the articles. If articles are silent, if articles are silent, then section will apply. If articles are silent, then section will apply. Such points are called what? Power derived or subject? Power subject to articles. Power subject to articles. Power subject to articles. On the other hand, second point is there. That is what? Articles, the act has a provision which says that article should give power. Article should give power for the act only to apply. Correct? The article should give power for the act to apply, which means the act has one line which says, if the article says so, only then this section will apply, otherwise it will not apply. So this is called power derived from articles. So in this case, if the articles are silent, which means articles are not telling anything about the act, which means section will not apply. Examiner is testing these areas now. Correct? We will see. I repeat, first one is what? Articles will specify certain things, follow the articles. If articles are silent, section will apply. That is called power subject to articles. Second one, articles. The act gives the power to the articles. For the articles only to override the act. In the sense, the articles will say, yes, this section will apply. Only then the section will apply. For example, just for your quick understanding, because we need to understand this section, whether it is power derived from or subject to. So if you see, for instance, if we see issue of bonus shares under section 63, if we see issue of bonus shares, it says no company shall issue bonus shares unless it is authorized by articles. If articles are silent, can I issue bonus shares? No. There is a classic case of power derived from articles. On the other hand, here, coming back to our discussion now, where no provision is made in the articles of the company for the appointment of the first director, and the subscribers who are individuals shall be deemed to be the first directors, which means when no provision is made, means if the articles already make a provision, then follow the articles. If articles are silent, follow the law. So it's power derived from or subject to? Subject to articles. Subject to articles. So 152.1, first director's route. It's a power subject to articles, which means first, articles can mention the names of the first directors. If they mention the names of the first directors, those people will be the first directors. Second provision, articles can be silent. If articles are silent, then they say subscribers to memorandum. Subscribers to memorandum. Subscribers to memorandum, who are what? It clearly says that who are individuals. Subscribers to memorandum, the people who start the company, it can be company also, it can be individuals also. As we have already discussed, board of directors cannot have company. Board of directors should be individual. So this is not there. Only this. If articles are silent, then the subscribers to memorandum who are individuals. Ideally, articles, the names of the first director should be mentioned. If articles are silent, then the subscribers to memorandum who are individuals will be what? Yeah, they are deemed, it's a deeming fiction, deemed to be the first directors of the company. What is the tenure of this fellow, these first directors, deemed first directors? So basically there has to be a meeting. There has to be a meeting. So basically they will hold an extraordinary general meeting and do what? Appoint. The same people will be regularized. The same people will be regularized. They can be regularized. They will be reappointed, whatever. So they have to be appointed there. So this deeming fiction has to be regularized here. That's what it says. If you read here, until the directors are duly appointed. Until the directors are duly appointed. So subscribers to memorandum who are individuals shall be deemed to be the first directors until the directors are duly appointed. Duly appointed obviously in the first meeting. They'll call an EGM and they'll do it. Now, there are only two ways. There's only one way to be a regular director. Regular director is this 152.6 rotation mechanism. So in this rotation mechanism, some people will continue to be directors, others will go out of the mechanism and all that. The only way the only way to appoint them is through a mechanism called 152(2) read with 160. 160 is the procedure, and 152(2), as discussed, it is ordinary resolution and general meeting. A person who is appointed under 152(2) read with 160 can only enter this mechanism. A person who is appointed under 152(2) read with 160 can enter this mechanism of 152(6), can enter this mechanism of 152(6). Only he can enter only he can become the regular director. Only he can become the regular director. 152(2) read with 160. So once he enters the mechanism, only he can become the regular director, rotational director, so to speak. But he has to go through this provision, 152(2) read with 160. So basically, if you have to be eligible to come under rotation, you have to follow this procedure of 152(2) read with 160. Otherwise, it is not possible. You have to enter this mechanism like that. Every other person will be outside. He can never be called in his life as a regular director. He can never be called as a regular director. Now the question is, 152(2) read with 160. So this is the regular director concept, but there is one exception to this. If you are a first director who is appointed via the articles, if you are a first director appointed via articles, you can bypass this procedure. If you are a first director appointed via articles, you can bypass this procedure and directly go to 152(6) directly. Only if you are a first director appointed via articles. They need not follow this provision at all. They need not go through ordinary resolution route. For example, here, coming back to this, here whatever we are doing here. If you are 152(1), two ways. One is articles route, one is if articles are silent route. If your name is mentioned as the first director, as I was saying, you will bypass what? 152(2) read with 160 and automatically come under the rotation mechanism of 152(6). So you will bypass this entire section. On the other hand, these deemed first directors for individuals who are deemed, as I told you, they have to be regularized in the EGM. What do you mean by regularization? Same, they will have to go through 152(2) read with 160. And after that, they will come into this rotation mechanism. After that, they will come into the rotation mechanism. 152(6). So the left hand column, names of the first directors, they will bypass 152 read with 160 and directly enter the mechanism 152(6). On the other hand, the articles who are silent, subscribers to memorandum who are individuals, they are deemed to be the first directors, they will be regularized here, and only after regularization they will come here. So if they ask you what is the tenure of the deemed first directors, we should write until the EGM or until the general meeting in which they are regularized. That is still here, until the general meeting in which they are regularized. So coming back, check this out. Power derived from or subject to articles, it's a power subject to articles. That is, articles can give the names of the first directors. If articles are silent, then section will apply. Appointment provision. Subscribers of memorandum who are individuals will be deemed to be the first directors. In case of OPC, that individual shall act as the first director. Appointed by, usually named in the company's AOA, else section will apply. Tenure of office. What is the tenure of office for the other guy, subscribers to memorandum guy? Till the directors are duly appointed by members in general meeting. So this fellow's tenure is this. What about the tenure of articles whose names are there in the whose names have been mentioned in the as first directors? They will bypass 152(2) read with 160 and automatically become regular directors. So if you see, the first directors named in the articles need not vacate the office at the first AGM. These directors will automatically enter into a cycle wherein some directors retire by rotation and some do not. The deemed first directors, however, shall hold office until the first EGM after incorporation but prior to holding of the first AGM. The new directors appointed in the first EGM shall, under 160, will be appointed and then go into the cycle wherein some directors retire by rotation and some do not. So the same provision is given here to revise. Articles can prescribe the names of the first directors and those persons will become first directors. They will bypass 152.2 read with 160 and they will go into 152.6. On the other hand, if articles are silent, that is under 152.1, subject to memorandum, company will not come, individual will be deemed to be the first directors. They will be what? Regularized under 152.2 read with 160 and then they will go into 152.6 mechanism. They will go into 152.6. Very, very simple. So this is regarding the first director. Next, moving on, we have the rotational director under 152.6 and 152.7. This is the concept of rotation. Mind you, this will apply only to public companies. First one applies to both private and public. This will apply to public companies only. And even in public companies, it will not apply to next one, unlisted government company and subsidiary of such government company. Basically, it will not apply to unlisted government companies. It will apply to listed government companies. Only unlisted government companies will not apply. And also subsidiary also. We have not committed any default in filing AR and FS. And it will also not apply to unlisted public company operating in what? IFSC, that is International Financial Services Center. So if you see 152.6 is subject to articles can provide for the retirement of all directors. So in 152.6, what does it say? 152.6 articles can say all directors will retire. Or if articles are silent, then section will apply. So it's a power derived from or subject to? Subject to articles. Section will apply. Section, what does it say? It says that out of the total number of directors, 2/3 will be called as rotational directors. And 1/3 will be called as non-rotational directors. So if I just take, for example, 18, just for simplicity purpose, 18, they'll say 12 will be rotational directors and 6 will be non-rotational directors. Non-rotational directors, there is no section. How are non-rotational directors appointed? They are appointed to the normal route only, but how are they designated as non-rotational? In the entire contract, they would have mentioned that they will not retire by rotation. What is this rotation concept? It's just that every year, few directors will come in front of you, you being the shareholders, and ask, I have done these many things in the company this year. If you feel that I have done well, you please reappoint me, or you don't reappoint me. That is the rotation concept. Non-rotational directors are generally your managing directors, whole-time directors. I don't want to disturb them. Let them continue their tenure, 4 years, 5 years, 6 years, whatever. I don't want to disturb them. So those directors are called non-rotational. But can the act say everybody should be? Can the article say everybody should retire? Yes. Articles can provide everybody will retire at the AGM. Means in the AGM, all 18 directors can stand in front of you seeking reappointment if they want to. Otherwise, it's not a problem. So 12 are rotational, 6 are non-rotational directors. Of the 12 rotational directors, so all 12 will not come. It says 1/3. 1/3 will be retiring. 1/3 will be retiring means 4. So for example, A, B, C, D. Out of 12, A, B, C, D will come. Just for simplicity purposes, I have written. A, B, C, D will come and stand in front of you. They are liable to retire. They will ask you a question. I have done this work. Are you happy? If you are happy, reappoint me or don't reappoint me. So you can reappoint all the 4 if you want. You can reappoint only 2 and not reappoint 2. You can appoint A and D if you want, whatever it is. Once they reappointed, they will again go and fall in line here, A, B, C, D here. Similarly, E, F, G, H, they will fall in line E, F, G, H. This mechanism keeps on continuing. This is the first stadium, this is the next stadium, this is the third stadium, this is again the fourth stadium. So if under these circumstances, exactly multiple of 3, and you have kept on reappointing these people, under those circumstances, what will be the tenure of the retiring director? 1 year, 2nd year, 3rd year. Under those circumstances I meant. But will these circumstances happen? No. This is just 18 I have given. It will be 12, 7, 8, whatever it is. Let us say if it is, let's say 12 people. 12. In that 8 will be rotational, 4 will be non-rotational. Of this 12, of this 8, 1/3 of 8 is how much? 2.67. 2.67 will be rounded up to 3 or 2? 3. So first A, B, C will come. I will reappoint them. D, E, F will come. I will reappoint them. G, H will come. I need one more person. Who will come here now? So here, whoever has served the longest will come first. Whoever has served the longest will come first. But now in this case, A, B, C are all appointed on the same day actually. Correct? Because you see in here also D, E, F are appointed on the same day. A, B, C reappointed on the same day. Who will come here? So the law says there has to be first of all an agreement. If agreement is not there, then best lot mechanism. Put some chits and open one chit. So here C will come. Assume. So like that. Next year A, B will come plus one more person I need. One more person will be from D, E, F. One more person will be D, F. From there one person will come here like that. So this is the lot mechanism. Then let's say in this E comes. Next year D, F and one person from here. It's like that. This is generally, this is what happens. Now why can't I make all directors rotational? Yes, I can make. Articles can prescribe everybody to be rotational. Or they can use this mechanism. This will change every year. Next year if one fellow resigns, it will be 11. This happens only at the AGM. It doesn't happen at any other general meeting. There are only 2 types of general meeting, annual and extraordinary. So this happens only at the annual general meeting. So now the next question, once they asked in the exam, there are only, let's say, 11 directors. 2/3 if you make, it comes to 7.33. You will make it 8 or 7? 8 or 7? 8. Because guys, Act uses the word not less than 2/3. Not less than 2/3. If I make it 7, it will be less than 2/3. It should be the next number 8. So here it is 8 and here it is 3. One it is 8 and one it is 3. So here 8 and 3. So basically, simple rule, when I am taking the total number, when I am making this 2/3, round off to next whole number. Round off to next whole number. This 1/3 will be the remaining part, obviously, always. Of the 2/3, again when I do 1/3, this is the mathematical rule. Number nearest to 1/3. If it is 2.667, 3. If it happens to be 2.33, then 2. This is the mathematical rule. Are all rotational directors retiring? No, because of that 2/3, 1/3 of that 2/3 only will retire. So all rotational directors are not retiring. Are all retiring directors rotational? Yes, obviously because of that only they should go. So what is this? It is just a mechanism to retain good people and to sort of discard people who are not working properly. When you already have removal under 169, you can actually, we just saw removal now. You give a special notice, then you give them an opportunity of being heard. There will be a meeting, you should give representation. When I don't like a particular director, I can throw him out. Why do you think this provision is there then? Or dignity, yes. Because that 169 is actually a humiliating procedure. Correct? They'll call meeting only for you. If you have watched Game of Thrones, right? One scene is there where she'll walk inside, everyone will be telling shame, shame. It's like that. Correct? That meeting, it is like that only. Because they'll only call, the agenda of the meeting only is what? Removal. Catering also you can't eat because everyone is looking at you, how much is eating this fellow, anyway is going, right? So you can't eat properly, you can't drink, and that is only for this particular guy to remove only. They are calling a specific meeting, and then he has to give his representation. He has to sit there and tell why I should not be removed. Horrible it is. So this is throwing out an inefficient guy in a dignified manner. Like basically you will say, boss, you finish your tenure, thank you, I will not call you again, thank you. That doesn't mean you are not a good director. You may not be fit for that particular role. Correct? You may not be fit for that particular role. Like RCB, we are still trying, right, to win. So people are not fit to run, be captain, and we are still trying. Player also, we are all trying to win. So that doesn't mean they are bad players and all that. Just that when they come to RCB, gone. And then when they go out of RCB, they'll become most valuable players. It's like that. So that doesn't mean they are bad, definitely. So when I actually when I release certain players at the end of the tenure, it doesn't mean they are bad players at all. Just that I overpaid them. That's all. That's what the idea is. Simple. So that is what this section also says. It is to throw out directors who are inefficient, or maybe not better fit for the company. They may be good, but maybe in different companies they'll be good, not here. It doesn't match the culture of the company. So they will just honorably give them an exit. That is why 1B26 is there. And mind you, if you want to get into this mechanism, the only route is what? 152 to read with 160. 160 is the procedure. 152.2 is the resolution, ordinary resolution. But the only one exception is what? First director, appointed via the articles route. So this is the mechanism. So let's see here. Not less than 2/3 of the total number of directors shall be. Now this is one more change. So technically they are retiring, okay, but they are not retiring. What are they? Rotational. So here you can change it to rotational. That was the change in the amendment. If you see here in that corrigendum here. Okay, maybe it is missing in this. Okay, this is a slightly older one. Okay, this is a wrong. It's there, huh? Oh, it's there. Sorry. Yeah. Correct. Rotating. Shall be rotational director or rotating directors, whatever you can write. And 1/3 of that will be what? Yes, 1/3 of that shall be retiring directors. 1/3 of that 2/3. And here 2/3 as well as remaining 1/3 shall always be appointed by what? Company in general meeting. That is 152.2. Ordinary resolution. Some special points. Non-rotational directors, usually MD, old-time director, shall hold office for life. For life means his life, or for specified period of time as per provision of the Act. As per Act, actually it's 5 years. In 196, you can only be appointed for 5 years at a time. Correct? May provide subject to 169 removal. So 1/3 of that 2/3 will retire at AGM. So as extra shorts we have already discussed, 2/3 shall be rounded off to 3. Correct? Which means rounded off to the whole number is what it meant. 1/3 shall be rounded off to 1 means nearest to that nearest number. So basically rounded off to the next number. 1/3 shall be rounded off to the nearest is what it is. Vacancy of retiring director may or may not be filled. So if a person is, I choose not to, I choose to throw him out, or I choose to tell him that, sir, please leave. Should I replace him mandatorily? No, my choice. I can keep that. That's not needed now. Whoever director there is good enough. Those who have served the longest will retire. If appointed on the same day, agreement among themselves need to be seen. If there is no agreement, then they will decide by lot mechanism. This they have asked couple of times. We do not write this line. Marks will be cut for sure. Will directly say those who serve the longest will retire, or lot mechanism. No, this point is also important. Only if agreement is not there, then lot mechanism. If agreement is there, then no lot mechanism. And one more technical point, though it's not given here. Let's say A, B, C are coming up. They are appointed again, but A had already served for 15 years. B has served for 5 years, C has served for 7 years. Like that, kept on removing and kept on leaving, and whoever is pending now is these three. A, B, C, D, E, F, now G, H. One among these three fellows should come. A will come or what? Yes, see, that is, those who have served longest since the last appointment is the wording in the law. Have they, what is the last appointment here? All have served only 2 years. Correct? It is not the service of the longest time since when you were appointed. No. It is since the last appointment. So A, B, C all are appointed here. And once the moment you are reappointed, this is of no relevance. Correct? This question hasn't come. I'm just saying that is one more tricky one that can come. Apart from that, it's fine. If there's no agreement, then what? This point, please do write in the exam. If they ask you, do not miss it. You will definitely, they'll deduct marks because there are 3 points. One is serve the longest. Then if everyone appointed on the same day, agreement. Agreement is not there only, then lot. Now everywhere I took 18, 12, whatever I want I took. But what is the total number? Is it the total number of directors in the company? Is it the total number of directors in the company who are there? So if you see additional director, if I check the additional director section, 161.1, who shall hold office up to the date of the next AGM. I told you this 152.6 happens at the AGM. Additional director holds up to the AGM. Up to the AGM means conclusion or commencement? Commencement. So at the AGM, you are not at all a director. Will you be counted in the total number? The company had 18 directors. 6 of them are additional directors whose tenure is up to the AGM. So on the AGM date, 12 will be there or 18? 12. So should I count additional directors? No. So when I give a total number of 18, first directors who I have to remove is here. Additional director. Additional director has to be removed. Why? Because their tenure is still what? Tenure is up to date of AGM. Any other answer is wrong. Any other answer anywhere else is wrong. I also suggest this only. We should blindly follow that, and it's the correct answer. Up to the date of AGM means what? Up to the commencement of the AGM. Not the, the commencement itself they will go. Up to doesn't mean conclusion. What about auditor? Auditor, just to link. Auditor is, what is the tenure of auditor? Up to conclusion of the 6th AGM. They have used the word conclusion of the 6th AGM. Here they have not used the word conclusion. It is only up to. Alternate director will see. Yes. Then of course, nominee director. So as far as nominee director is concerned, 2 things guys. Nominee director. Alternate director, we will connect it when we reach alternate director. Nominee director. You can be a nominee director of a financial institution set up by separate act of parliament. LIC, UTI. UTI was, set up by a separate act of parliament until Ketan Parekh, who is Harshad Mehta's protege. He also committed fraud in 2002, if I'm not wrong. Yes, that time UTI was disbanded slowly. Correct? It was disbanded slowly and it was got merged to Axis, if you remember, right? So if you see the financial institution set up by a separate act of parliament, like UTI, it's a separate act of parliament. So if UTI, assume, gave any money and they have told that I want this fellow to be the, director, then will I count him in the total number or not? So here they say they have to exclude from the total number. Nominee director of a financial institution set up by a separate act of parliament, you should exclude. You should exclude. On the other hand, normal cases like normal private bank, ICICI bank, that fellow you should include or exclude? Include and make him non-rotational. Include and make him non-rotational. In the exam, they'll simply say nominee. What will you do? What will you assume? Assume nominee is not nominee. No. What will you assume? Include or exclude? What do you think? Exclude. Have I given it here? Why not? Okay. So in exam, what will we do, guys? Right? Here, it's there. Point number 5. Please read. Point 5. So you should include it in the total number and take under the non-rotational category. We should include in the total number and take in the non-rotational category. So if they say that the company has, let's say this was an exam question by the way, 15 directors are there, of which 3 are additional directors, they are told. And they now want to appoint one nominee director. Exam, it is silent. So what should I do? Include and put him under non-rotational category. So if this question had come, 15 directors are there, of which 3 are additional. So for my rotation purposes, what is the answer? 15 minus 3, 12. So in 12, what is the status before appointing this fellow? 8 and 4. 8 and 4. 8 are rotational director. This is non-rotational director. I cannot convert non-rotational to rotational directly like that because they are bound by the agreement. I cannot change it. So I have to, whatever I do, I have to play around here only. Now they are saying this fellow is to be appointed. So if this fellow is being appointed, this 12 will become 13. Obviously. Because, this 3 are anyway excluded. I am including him and making him non-rotational. And this 4 will become 5. I cannot touch the 4. I cannot touch the 4. 4 will become 5. If you do, again, testing, 13 into 2/3. That's the awkward moment when in law exam people are using calculator. Correct? Everyone is using calculator in law exam. Correct? You are wondering why. Later you will ask, bro, why are you using calculator? No much. I was checking 39 will come or 41 will come marks. Just borderline I was checking. Yes. Correct. So what do you think, guys? Tell me. So 8, 4 plus 1. If you do 13 into 2/3, it's coming up to 8.33 or something. It will come. 8 point something. 8.67. No, it has to be 9 then. Which means I have to accommodate this fellow here. So in order to accommodate this fellow here, I have to appoint one more, not additional director, one rotational director. Correct. Don't use the word additional, dangerous. It is one rotational director because additional director will not come here only. Correct. Additional in English is one extra. Additional in law is 161(1). Correct. If you write additional for additional, one additional attempt will come. Yeah. So if you see, there is 2/3 plus this is what? Rotational. One rotational director has to be appointed. One extra rotational director has to be appointed. Fine. Now also you see, then 12 becomes what? 14. 12 becomes 14. Then also you see 14. Now as of now it's 14 and here it is 5 and here it is 9. 14 into 2/3 also if I do 9.33 will come. This has to become 10. So it's very simple. When I am adding 1 in 1/3, maths which we have forgotten, we have to add 2 in 2/3. Simple. So this was an exam question for 4 marks. Same question. 15 directors are there, 3 additional directors. You want to accommodate one fellow, what to do? So first, what is the status as of now? How will you do it later? First one is what? 15 minus 3 I should do, obviously. After that, in this 12, this one director has to be accommodated in the non-rotational category. And I have to appoint 2 rotational directors so that to make that 2/3 and 1/3 category. That is what you have to write. Only that or something else? Yes, 15 plus 15 includes 3. Now I'm adding 3 more, right? 1, 2 and there are 3. I'm adding 3 more. So amend the articles. As per section 13, amend the articles. Special resolution and one more special resolution. Going beyond 15, 149, 1B, amend the articles. So 2 special resolution points. This was an exam question for 4 marks. So like this, they keep asking in the exam, right? Cool. So yes, so here if you see this, we will check. Page number 16, just change this to 163, guys. Spelling mistake. Yeah, if you see nominee director, financial institution set up by separate act of parliament only, you will subtract. Independent director, as per the law itself in 149 only they have given, and in 152 also explanation they have given, independent director should not be included. Clearly they have given there. What about this small shareholder director? But should he be included and made non-rotational or exclude? So guys, the problem is small shareholder director, if you see the rules, it says small shareholder director should be a director who has followed all the independence category or independence requirements. But independent director means a person who has no interest, any pecuniary interest or any conflict of interest. Small shareholder director, doesn't he have conflict of interest? Yes, he is actually representing the small shareholders. So can you call small shareholder director an independent director? That was one 4-mark question 2-3 attempts before. Can a small shareholder director be an independent director? What do you think? That depends. This is a twofold answer we have to write. Anyway, coming back to the exam, what should you write if they ask you small shareholder director? Should I include and make him non-rotational or exclude him? Exclude. You can say small shareholder director is like an independent director, hence I am excluding. So you should exclude from the total number. Proportional representation later we'll see, and of course director appointed by tribunal under oppression and mismanagement 242. T.N. Manoharan sir, when he is appointed, obviously they will say he cannot be removed, and also he will not go into this rotation and all those things. Tribunal only will pass an order, so he will also have to be excluded from this. These people have to be excluded. So if you see here, all retiring directors are rotational, but all rotational directors need not be retiring. We have seen this. Now at that AGM, I have to do one of the 3 things. This is also important favorite question, 7, 8, 9. Favorite question among the examiners, many times asked in the exam. Easy, very easy it is. At the AGM, I should do 3 things. One, what? Either reappoint somebody, reappoint the same guy, or appoint somebody else in his place. How? Through 152 to read with 160. Like in this example, I am reappointing A and B, I am not appointing C, no problem. Either reappoint or appoint some random new guy. You can appoint Mr. D, no problem. Or you please tell, I don't want to fill the vacancy. It's absolutely okay if you don't fill the vacancy, no problem. But at least do one of these things. One, either reappoint the same guy or appoint a new guy, or tell I don't want to appoint anyone. But for that, should I pass a resolution saying that I don't want to appoint anyone? Yes. The meeting should resolve that I don't want to fill the vacancy. Here the meeting may resolve not to fill the vacancy. Resolve means what? An ordinary resolution has to be passed. More than 50% should say, I don't want to fill the vacancy. Nothing is done. What happens? Yes. If the vacancy is not so filled up, the meeting shall stand adjourned. Same day in the next week. Same time and place. Or to the next day, which is not a, don't write public holiday, national holiday. Public holiday is Sunday. National holiday is Gandhi Jayanti, all those things. 3 national holidays are there. Independence Day, Republic Day, Gandhi Jayanti. That's it. This is a national holiday. Public holiday, if you write, wrong answer. These are some mistakes that generally we make. Do not write public holiday, national holiday. Right? And this is if the vacancy is not filled up. Or basically, these 3 things you don't do. Now at the adjourned meeting also you don't do this. Then what happens? This is like punishment to the shareholder. First I tell you, if you don't want that guy, at least tell you don't want that guy, appoint somebody else. You have not done anything. I will mandatory I'll postpone adjourn them. What's the difference between postponement and adjournment? Continuation of the meeting. Postponement, meeting only doesn't happen. Correct? Meeting only doesn't happen. For example, if you cancellation is what? Cancellation of the meeting? Yeah, it doesn't take place. Correct. So like today, if let's say I was actually a little under the weather a couple of days. If I tell you I'm feeling tired, guys, let's meet tomorrow. Adjourn. Postponed is what? You come here near the door and there it's written, very sorry because of bad health. Let's start from tomorrow. Cancel means you will come there. Naleva will be written. That is called cancellation. That is called cancellation. That is cancellation of the meeting. Yes. All right. Yes. So if you see, basically that is what they are also trying to tell. For adjourn, you cannot write postponement also in the exam. It should be adjournment. If you write postponement, exam also will. Yeah. So if you see, please ensure the exam will be adjourned that time. So you should not write postponement. I actually told postponement. It's wrong. It should be adjourned. These words are very important. Shall start adjourned to same day next week. And with national holiday, if that happens to be a national holiday, next day which is not a national holiday. And at the adjourned meeting also you didn't do anything. At least one thing you do. Either you tell at least I don't want to appoint. Adjourned meeting also you did not do anything. Then what they say, law is punishing you. What? You didn't want that fellow, I'll reappoint that guy only. So it is automatic reappointment. The vacancy is not so filled up. Then the retiring director shall be deemed to be reappointed. Deemed to be reappointed. But then he won't be reappointed if obviously he is disqualified from being appointed. In that one period he is convicted of moral turpitude, or that 6 months time of that share call money happens, whatever it is. So he is not qualified only to be appointed. Disqualified, sorry. What is not qualified? Yes, he took a job somewhere else, full-time job. This cannot be a director also. He was an executive director here. Now he took up became the CFO of some other company. Like, no, I'm sorry, I cannot take up any directorship now. So this is called not qualified. Or basically this was the 20th company, and since he vacated it, he joined one more company as a director. So is he qualified? No, that comes under this only, disqualified. But not qualified means he took up a full-time employment elsewhere which will not allow him to become a director, whatever it is. That's why the act uses the word not qualified or disqualified. Then he was told, you had to reappoint me. You did not even bother reappointing me. Or at least you did not even tell that I don't want to be reappointed. So I am actually humiliated now. Even if you beg, I don't want to come now. Do whatever you want. So it's written saying that I will not be reappointed. He has expressed his unwillingness in writing that he doesn't want to be reappointed. Third one, a resolution for reappointment was put to vote and it is lost. Obviously, they have done the meeting. The voting mechanism has happened, but the final resolution is pending. The administrative process is pending, but voting has happened already. So they have told that I don't want to reappoint him. Obviously, yes. These two we will see. We will understand it later. And this is the retiring director. Now the question is, there is no these directors, what they used to do in one company, all the directors were liable to retire. They knew the moment I hold the AGM, everybody will be thrown out. They knew for sure. They knew 169 meeting was removal, but they are not happy with my performance at all. The moment I hold a meeting, 100% they will choose somebody else. The best part is they did not hold the meeting only. If you don't hold the AGM, what is your tenure? Till the AGM. AGM only is not there means. Right? That's why they were doing it actually. That's why MCA came out with a circular long back, this dialogue. The retiring director will hold office only up to the last day on which AGM should have been held under the provisions of the Act. When can the AGM be held? Sir, inter, it's out of syllabus question. When is AGM? When can I 96? Inter. 6 months from the end of the financial year. Or which one? Or which one? If it can be extended by 3 months. In COVID, they extended actually. By 3 months, they can extend. So basically, 31st March 2023 means 6 months, 30th September. Or maximum 3 months, 31st December. By that time, if you don't hold, which means all will retire. As simple as that. So if you do not hold the meeting, then the law will presume that everybody will retire. Nothing can be done. But if everybody retires, what happens? Company will become directorless. What if it's a genuine problem? There are floods, because of which the accounts are not prepared. Anything happened. Couple of rare cases happened. One of that in Ambika Tea Company case. Meeting could not be held because of flood, labor union strike. The directors were trying their level best to start the company up and running, but it did not happen. So what happened there? Because of this MCA circular, all the directors had to retire and vacate the office. The company became directorless. That time this provision was not there. Central government will appoint, all that was not there. Company became directorless. It went to court. They only went to court saying that, sir, it is our company. Please allow this for us to happen because these are the reasons, because of genuine reasons. Hence, they say this, 7-1. Special circumstances may justify continuation of retiring directors if the meeting is not held at all, as there cannot be vacuum in the board of directors. So it's okay. There cannot be any vacuum in the board of directors. I will ensure that you will continue, no problem, is what this section said. So basically 10 and 11 should be seen, depends on the facts of the case. So this is regarding, what do you say, the 152.6 and here is 152.1. Now I've been always telling 152.6, 152.2 read with 160 this one. This is the procedure. 152.2 is the appointment provision, ordinary resolution. 160 is the procedure. Procedure, important to know, is applicable only for public companies. I again repeat, first directors applicable to what? Both public and private. The, what do you say, rotation mechanism only applicable to public. Similarly, 160 also only applicable to public companies. It's specifically not applicable to private company for sure, and also 100% government company and 100% subsidiary of 100% government company. This you will 100% forget, but it's anyway there. 100% government company and it's 100% subsidiary. I don't know why they keep all this, man. Don't you keep, but don't give in the exam. Third one is Section 8 companies. It will not apply. They can appoint whoever they want. And IFSC company, which is there at SEZ. And of course, any private company where there is no default in filing the financial statements and annual returns, all these things. So articles of a private company can give a totally different procedure. Or if articles want to do so, they can also, what do you say, do it, no problem. Now, can anybody become a director? Yes. So can any individual, can he become a director? Yes. So member also can propose to be a director, or even an outsider can propose to be a director. An outsider can propose himself, whereas a member can propose another member. A member can propose himself also, or a member can propose an outsider. An outsider can propose himself, a member can propose one more member, member can propose himself, or member can propose an outsider. But when he is making this proposal, they have to give a, what do you say, deposit of 1 lakh rupees. Why? To enforce seriousness. Earlier, this amount was 500 rupees in 1956 Act. In 1956 to 2013, it was not changed only. 2010, Narayan Murthy, actually, there was one news article also, they received some 1.5 lakh applications to become the director. Some pension fail, Infosys director. Bangalore University BCom like us, correct? So, Bangalore University, I wrote for 90 marks, I got 99. Correct? That is what. They added 90 plus GST, they only added, correct? And gave me. So that is Bangalore University BCom, quality, amazing. So if you see that those people are not started applying, 500 rupees only, no, they started applying. So they said, that's why they brought this 1 lakh. Will this 1 lakh be refunded to you? When? Obviously if you get appointed, or if you get at least more than 25% of the votes. You lose, but you lose decently, is what they said. Not like RCB, lose decently, yeah. So more than 25% of the votes. More than 25% of the votes, correct? So lose decently, at least have some little mana maryada you have, and lose decently is what they're saying. More than 25% of the votes. It shouldn't be like you are proposing yourself, you are the only person who's voting for yourself. All others, nobody is voting for you. So it shouldn't be like that. At least you get more than, you lose the election, no problem. But at least get more than 25% votes. You lost the election, but I'll get you the refund. There is 1 lakh rupees, you will get the refund, no problem. So this is the thing, himself, and this has to be given 14 days before the meeting. Now, is this special notice though? No, because in special notice we saw member only should give. Member having that to what? 1% voting power and all. Here it is outsider. Outsider also can give. Just because 14 days is there, it is not a special notice. So one more common mistake is students will write special notice is needed for 160. No. Special deduction 2 marks. Right? So it is not. Just the normal notice. A notice is needed. 14-day notice it is called. And yes, 1 lakh is the amount that you will have to give. This was there in 2013, good provision. But assume, like for example, in Infosys, Kiran Mazumdar Shah, who is the chairman of Biocon, she also is an independent director. For her to come on board, they literally had to beg her. Before, she's a very, busy lady. And of course, Infosys is a huge company, so they requested her. Board of directors went and requested her. The nomination committee said, please do come. And then the, entire board wanted her to come on board, and they sent a letter, proposal, everything. Company secretary came and said, madam, please give 1 lakh. She is like, you are calling me. Yeah, madam, give me 1 lakh. Immediately will refund. It was such a stupid provision actually. Think about it. You are only calling that lady and you are asking her 1 lakh rupees. So that's why that was scrapped. That was scrapped only for what? If you are an independent director or your name has been recommended by nomination and remuneration committee, 1 lakh not needed. Good provision. That came in 2018. 1 lakh not needed. So 1 lakh is only needed for what? Others, outsiders basically. Outsiders who are proposing themselves, or even a normal member who wants to propose himself but is not gone through the board. Some random application if you are, putting to the company, giving to the company, then yes, 1 lakh rupees is the amount that you have to pay. Which will be refunded only if you get more than 25%. More than 25% of the valid votes is what they say. Very, very simple. So, here same thing. Person or himself or member, any number of shares held, and even preference shareholder also, proposing such person, 14 days notice, deposit. Then company shall serve 7 days notice to everybody. At that meeting, what resolution? Ordinary resolution. And they will go into the mechanism. Proposed candidate shall deposit 1 lakh at least 14 days. Deposit of 1 lakh not needed for appointment of independent director, director nominated by nomination and remuneration committee. Same thing we discussed. Deposit refunded if director gets more than 25% of the valid votes. 160 must be complied for appointment of director at any general meeting. Mind you, this is not AGM, it is any general meeting. So this is the only route to enter the company as a regular director. But if you are an additional director, if you want to become a regular director, which provision? You have to follow this provision. Thus, if an additional director, casual vacancy, alternate, whoever it is, after the expiry of his office, if he wants to come into the company as a regular director, then you have to follow 152(2) read with 160. So, let us say there was this person who was, what do you say? We'll discuss it in additional director next. Other procedural requirements. DIR 2, consent with the company. DIR 12, consent with the ROC. Updating register of directors, updating register of directors shareholding, informing stock exchanges for all the listed companies are other procedure. And of course, if you get the appointment, obviously I have to refund the deposit. So these are all the various things, extra shots with respect to 160. So again, 152(2) speaks about the appointment, 152(1), first directors, public and private company. It is a power subject to or derived from? Subject to. 152(6), rotation, that's also subject to articles, but the articles can only provide for retirement of all. Can articles provide 3/4 will retire by rotation? No. Articles can only provide for all directors who retire by rotation, not 3/4. Right? Next, that's again public company. Then 160 is also public company, by the way. And here there is no articles, etc. There is no subject to, etc. Private company can do whatever it wants. Next part is additional director. Now additional director is both for private and public. So if you see the section, let's see it here. First dialogue, the articles of a company. The fact of the matter is that you use the word a company, both private and public. Articles of a company may confer on its board of directors the power to appoint any person. Articles of the company may confer on its board of directors power to appoint any person. Other than that, you leave as an additional director. Question is, if articles are silent, can I appoint additional director? These are all exam questions. If articles are silent, can I appoint additional director? No, because it is a power derived from articles. Power derived from articles. One more question asked in the exam 2 to 3 times. Recently also it was asked. The articles of the company are silent and they have not given anything who should appoint additional directors. The shareholders amend the articles and insert a clause saying that they can only appoint additional directors. Is it valid or invalid? No, they amend the articles and in the articles they will say they can appoint additional directors. But here the question was about this only. Articles of the company may confer on its board. Does it mean they may confer on shareholders also? There are two views to it. What is institute view? That is what we are concerned with. There are two views. Both views are practically different. But let's talk about institute. Institute view is what? Only shareholder, only board or shareholders also? Only board. Only board, shareholders not allowed. Institute view is only board. It's there in the notes, I'll show you. The articles of the company may confer on its board of directors. So here when they use the word may, it means what? It is your choice. If you want additional director, you have to mention in the articles. If you want additional director, the articles of the company shall confer only on the board. Whether you want additional director or not, it is may. Whether you want or not is a may. But if you choose that you want additional director, then it shall confer only on the board. So interpretation, the conclusion number 1, it's a power derived from articles. If articles are silent, additional director can never be appointed. And conclusion number 2, only board of directors can appoint additional director. There is no power for the shareholders to appoint additional directors. ICAI view, let's stick to that only. Right? Only who can do it? Only the board. Both asked in the exam. Then they asked one more question. The board of directors appointed the additional director via circular resolution. Board only appointed. Board can do it two ways. One is board meeting resolution, where they sit across the table, discuss and pass. One more is circular resolution, where they will not meet, but they'll circulate the document to their email. They can go through that and vote directly. What do you think? So should it be board meeting resolution or circular? Or both basically? Both. This also is an exam question. It can be done both. Why? It's not given that it is meeting. For example, if you see 161.4, casual vacancy. There they have given the dialogue meeting of the board. Here they have not given meeting of the board. So what is the answer? Both. That is both. That is circular resolution and board meeting resolution. What is the tenure of this guy? Up to the date of the AGM or the last date on which AGM should have been held. Remember that MCA circular in rotation? Same thing they have given here. That MCA circular was what is the tenure of the retiring director and the last day on which AGM ought to be held. Similar provision they have given here. There it was circular, here they have made it into a law. Whichever is earlier. So if you see, come back now. Power derived from articles. AOA may confer on the board. If AOA is silent, additional director cannot be appointed. So additional director is for some special projects. It should be for the bona fide interests of the company. For example, A Limited, B Limited, C Limited, D Limited, all start a company, E Limited, fair enough. A Limited has 49% share capital. B, C, D together have 51%. P and A Limited has 4 directors, who they have appointed. BC together have appointed. BCD have appointed 5 directors. Overall 9 directors are there in E Limited. Basically from A Limited side 4 directors are sitting. From BCD Limited side 5 directors are sitting. Overall 9. These 3 people collude. Who can appoint additional directors? Board only. Out of 5 plus, this majority is already there. So how many directors will they appoint? They will appoint 6 more directors. So 9 plus 6 will become 15. Is it well within the limit? Yes. So basically these people B, C and D will have 11 directors now only listening to B, C and D. Whereas A only has 4. Is this valid? Have they broken any law? No. Who can appoint, board of directors? Who can appoint additional director? Board. And board simple majority. 5:4 simple majority. But was this to handle a new project or was it to strengthen the board of directors? Strengthen the group, that is B, C and D. Is this allowed? No. So if you see, it should be for the bona fide interest, good faith, and not for strengthening of the board. If you do it for strengthening of the board, it will amount to oppression of minority. In removal, one more point, just remembered now, though it is, important in terms of understanding the concept. So in removal, tell me, is it an ordinary business or special business? Removal of director. Removal of director is ordinary business or special business? There are only 4 ordinary businesses. Yeah, no, removal of director. What is ordinary business? Only the Dada points at AGM. Appointment of director, the dividend, then accounts and this thing. Appointment of director. Removal of director is not there if you see. Removal of director was a pillar of corporate democracy, but it's not a ordinary business. So removal, whether it happens at AGM, EGM, whatever you think of, removal is never an ordinary business. It's always a special business. For all items of special business, you have to give something called explanatory statement. Under 102, you should give why you are removing, what is the reason, whether he was involved in anything, why, reasoning you should give. The question is, removal before expiry happens via special notice. You have seen special notice. Special notice who will give? Shareholders will give. Shareholders, when they gave special notice, the special business, they have not sent any explanation. This was an actual case. They did not send any explanation. They just wanted to remove that fellow. So, the company saw that they have to forward it. They forwarded to everybody and they removed also. The director said the procedure was invalid, just like Cyrus Mistry case. He said courts will not interfere as to why, but they'll interfere if the procedure is invalid. In this case, procedure is invalid, they said. What do you think? The company should give what I meant was, the people who are giving the notice for removal, they should give an explanatory statement, or company should give explanatory statement. But company doesn't know only. Correct? What do you think? That's why, if act is silent, whose is the power? Board of directors. When explanatory statement section, if you go, act is silent. Who has the power to give, or who has the duty to give explanatory statement? Board. So shareholders, even though they ask for removal, they need not give any explanatory statement. So it is whose objective? It is the whose prerogative? It is obviously the board of directors. So if you see, just one second. Even in practical cases, it happens. So in this particular case, they wanted to throw out the main director of Vaswani Group. Vaswani Group, founding directors only they want to throw. Who want to throw? How many people should give special notice? 1%. Here if you see, 11% of them are giving special notice. Fair enough. If it's more than 10% give, no, the EGM can happen immediately. So they are calling for an EGM immediately. They are throwing, the proposal is to throw out this Ravi Vaswani and appoint Mrs. Jayashree. Here throw out Pramod Kumar Vaswani and appoint Mr. Ashwin Kumar. So the question is, see here, dialogue. No explanatory statement has been provided by the members. Management is telling we are only giving explanatory statement. What could be the reason where 11% want to throw out the founding directors? Obviously it's like hostile takeover. So they have given here, see, it is an obvious harm to the interest of the company and appears to be an act of hostility to forcibly take over the management of the company. So here management has to give a dialogue like this. So all these things are there. So just keep a note that who should give special notice? Who should give explanatory statement? Always the management. That is the board of directors. So similarly here, bona fide interest it should be, and not for merely strengthening of the board, which will amount to oppression. What resolution is needed? Check this out here. Board resolution or circular, both. They have asked in the exam, both. Here also ICAI view as discussed. They cannot be appointed by members at general meeting, even if AOA confers the power on the shareholders. They cannot be appointed at any cost. Up to the date of the next AGM or up to the last day on which AGM should have been held, whichever is earlier. Whichever is earlier. So what I intended to tell was, there was this person, Mr. D, who wanted to come into the company under 152.2 read with 160 and enter into the rotation mechanism of 152.6. Unfortunately, he, let's say this was in 2022, sometime in March, he gave this, 1 lakh deposit also. He got some 32% votes. Couldn't happen. He was not appointed. So in 2023, sometime in April, or let's say May, when the auditor comes, he'll say, sir, you have not given this 1 lakh rupees back. Because 32% you should have refunded. You just kept it there. Please refund. In the meantime, the directors will come to Mr. D and say, boss, now do one thing. I will appoint you. First of all, this entire dialogue that I told you, what is the consequence of this 1 lakh non-refund of this 1 lakh? Yes, I told you in deposits, deposit means any deposit. So if you have not refunded this deposit 1 lakh, directors are disqualified. In which company? All other companies. That's the worst part of the story. I can go, they'll go to this fellow and say, boss, all directors, other directors, in other companies, in which all companies you are directors, you have to immediately vacate office. Deadly. So to avoid that, what they'll do, they'll come to this guy and say, I will appoint you as additional director. This will do some adjustment, don't worry, but I'll appoint you as additional director now only. Is it allowed? No. So that earlier people used to do this backdoor entry. It's called backdoor entry. So now if you see, this they have added. This was in 2013. Other than a person who fails to get appointed as a director in general meeting. So a person who has been thrown out. So if you take the entire, scheme of this entire Companies Act, it is like a musical chair. Musical chair is happening here. Game you used to play, no? Musical chair. It is happening here. This is 152.6. If you want to be eligible to enter the musical chair, the only route is what? Main door. 152.2 read with 160. If they have closed the door on you, there is no backdoor entry here, is what they are trying to tell. Here, board of directors will be standing, so they will not allow you. Earlier they used to do it, but now they say nothing doing, no backdoor entry. You can come through the main door through various means. You can come through the back door also. This is additional director, you can come. Normal additional director, yes. But if you have been rejected by the shareholders, no backdoor entry. And here, independent directors, all that will be sitting. The only people who will be standing here would be the ones who have been appointed under 152(2) read with 160 or first directors appointed via articles route. That's it. All other people should just sit and stand and watch the game. They cannot participate because this is the real deal in the entire company. So if you see here, other than person who fails to get appointed as director in the general meeting. So that is what it is. If you see here, person who fails to get appointed as director cannot be appointed as additional director, no backdoor entry. Up to the date of the next AGM has to be interpreted to be up to the commencement of the next AGM. So now one more question. This director, his term is till the annual general meeting. I have appointed Mr. A somewhere here as an additional director. He has proved his worth a lot. Somewhere in between here, I make him managing director. This happened under 161(1), but if you are an MD, these MD provisions come under 196. So you have to follow some 20 procedural points here. So they follow all those procedural. This is giving the captaincy position. This is a player. Additional director, you are a player. I am giving captaincy position to you. Fair enough. But this additional director here will retire at the commencement of the AGM. Right? So in the AGM, obviously, he will no longer be a director. So the problem now is this person, Mr. A, who is an additional director, he loses his tenure at the commencement of the AGM. At the commencement of the AGM, he is not at all what? A director. So when he is not at all a director, can he be a captain? When he is not at all a player, can he be a captain? No. But what they do, since he was really good in this particular meeting, they freshly appoint him under 152(2) read with 160. They give him the player position again. The question asked in the exam is, there is a gap here. It can be 1 day, 10 hours, 5 hours, 6 hours, whatever it is. AGM commencement is 10 a.m., you are no longer director. 1 p.m., you are again appointed afresh. 3-hour gap. This 3-hour gap, because of this, should you follow these 20 procedural points again to appoint you as an MD? Technically speaking, should you do it or not? Answer is yes. In the exam, you have to write yes only. You have to write yes. It has to be done. However, it is an administrative nightmare to take all those 20 approvals again. Just because there is a 1 day gap or a few hours gap, it is, absurd for me to take all the approvals again. So MC has given a relaxation. What relaxation? If you are an additional director under 161(1), then you have been and you are appointed as an MD, fair enough. And your appointment has been regularized under 152(2) read with 160. And then again I have given you MD position. This MD position, when I am giving, should I, take those approvals again? Yes, but as per MCA circular, no. MCA relaxation, no need to take the approvals again. So you are a 161(1) director, appointed as an MD, then later 152 read with 160, then again given MD position. Should I take that approvals again? Not needed. No need to take approvals again. However, on the other hand, if you are a 161(1) director, then appointed as an MD, then again you are reappointed as a 161(1) director, and again given MD position, will you get a relaxation or no? No. In this case, no relaxation. No relaxation. All approvals have to be taken again. Right? So, you see, given it here. If 161(1) additional director is made an MD by following provisions of section 196 and schedule 5, and such MD is an additional director is immediately regularized as a director under section 160, such person continues to be the MD even though there is a technical break at AGM. Hence, fresh approvals under 196 is not required as per MCA clarification. So this is 161.1 plus MD regularized unto 152.2 plus MD scenario. Fresh approvals not required. Fresh approvals not required. And here again I have given, can additional director be appointed by shareholders in general meeting? Not possible. Only if the board is incompetent, then shareholders may appoint. This need not be written. This can only be written as a note if you want to. Main answer should be this. No need of remembering the case law name, not needed. Can additional director be appointed by shareholders in general meeting? Not possible. It is not at all possible. Additional director is always excluded from total number of directors in section 156 as discussed. Always excluded. But always included in what? Total number of directors of the company. Yes. How many directors are there in the company? Should I include him or not? Yes. But how many directors are there for rotation? Only then I have to exclude. I have to exclude that guy. That is regarding 160. 161.2 we can do after the lunch break. We'll just do a small section. 161.3. Here only it is there. Nominee director. Page 21. Page 21. Nominee. Private and public companies. It will apply to both. Power derived or subject to articles, the act that is subject to articles. That is, even if AOA is silent, board has the power to appoint, no problem. But in this, we need to fulfill these three conditions. Whenever they ask any in the exam question regularly which they have asked, you please see if all the three conditions are there. First, there has to be a loan agreement. Second, articles must prescribe the terms and conditions of the appointment of the nominee director. Third one, board of directors resolution is compulsory. Should I follow board meeting resolution or circular resolution? Law is silent, so anything is possible. When I appoint this nominee fellow, is it like borrowing money or lending money? Borrowing money. So if you see 179 talks about the general powers of the directors, and especially if you see 179.3, only by a meeting of the board. And if you see here, borrow money, invest funds, granting loan. So this we generally will have to see 179.3 D, E, F. D is borrowing money. E is investing funds. And F is granting loan. Borrowing money, investing funds, granting loan. Borrowing money, investing funds, granting loan. And they say that to do this, it should always be board meeting resolution. Generally for everything under 179.3, it should be board meeting resolution. However, for DEF, whatever we discussed now, they tell here it can be delegated. Delegate, power specified in DEF. So this power can be delegated to whom? MD. Delegated to MD. By passing a board meeting resolution, they can delegate. So they have asked once in the exam, can appointment of nominee director also be delegated? I asked you whether it is borrowing money. So what do you think? Can it be delegated or their board resolution has to be passed? No delegation possible, guys. This is for borrowing money, not for appointing nominee director of an institution from whom you have borrowed. That's not the criteria. The criteria is borrowing money can be delegated. But this appointment of this guy, coming back here, this has to happen via board meeting resolution or CR, no delegation. So if you see 161.3, let's say your articles say that, you have to appoint this guy, and then, what do you say? You have taken money also. That fellow comes for appointment, board says, I'll not appoint you. Is that possible? Because if you see, the board may appoint any person. What do you think? As I told you in the beginning, in one of the time there, when Act uses the word may, it is generally discretionary. When Act uses the word shall, it is generally mandatory. This is, generally litera legis, means literally if I interpret, it's like this. But sometimes that may will be read as shall, and this shall will be read as may. So for instance, auditor, first auditor will be appointed within 30 days from the incorporation. It shall be appointed by board of directors, it says. If the it says clearly, board of directors shall appoint within 30 days. And if the board of directors fails to do so, board of directors shall inform shareholders, and shareholders shall appoint. Shareholders shall appoint whom? Auditors. Now, in this case, general rule, if one was shall, and if you don't follow that shall, obviously everything else, the consequences will follow. Here there's no consequence only. If board doesn't do it, then shareholders can do it. So within 30 days, board of directors appointing the first auditor, this shall will be read as may. How to read it properly? Within 1 month, board may appoint the first auditor. If they cannot appoint, then they shall inform the shareholders, and shareholders shall appoint. Can shareholders treat it as may? No. These two things have to be shall. This will be may. On the other hand, okay, casual vacancy auditor. Casual vacancy auditor has to be appointed or not? Act uses the word shall, because your company cannot have, cannot be without an auditor. Similarly, if you see casual vacancy auditor in our section, casual vacancy director, casual vacancy director, they have used the word may. Because if one director leaves, it's no need for me to actually appoint him. I can keep the vacancy open. So casual vacancy auditor, it shall, mandatory. Casual vacancy director, may. So these are proper normal interpretations. May means what? Discretionary. Casual vacancy auditor, shall means what? Mandatory. But in this case, if you see, the first auditor case, the first shall will be interpreted as may. And in this case, 161.3 nominee director, which we are reading now, here, the board may appoint any person. This may will be interpreted as shall. This is called principle of exceptional construction. Sometimes as common courtesy, law uses this. Some of our lecturers used to shout, "Now you may please get out." The word may is of no use. Please is of no use. Correct? It's just that it's ordering, but requesting. That's all. It's not requesting. That the language is please, but it is more of an order. So here it is common courtesy. They are just telling may, but it should be read as shall. Based on this also questions they are asking. I am not joking. For example, in investigation we will see, they say the central government may order an investigation. Question they have asked, is it mandatory or discretionary? So they are asking questions like this now. So we cannot leave anything. So what about this? This is also an exam question. Nominee director is discretionary or mandatory? 100% mandatory. If you have taken money, that's why all the three conditions should be satisfied. Loan agreement is a must. Articles must prescribe. Board resolution is compulsory. If they say loan agreement only is not there, then the financial institution will not have any right. So all the three conditions must be satisfied, and board resolution is mandatory. So generally, as I told you, may will be may only, shall will be shall. But sometimes May will be shall. Shall will be may. You understand this? Good. Otherwise, May will be November. November will be next May. Okay. That is the problem. So you have to understand. Cool. So, all right. That's about it, guys. Shall we break for lunch? Cool. So this is it. So after lunch, we will be doing other areas and we will finish off cluster 2 and go to a little decent cluster, cluster 4. It is board meetings. And then tomorrow morning with a fresh mind, cluster 3. Cluster 3 is the most deadliest cluster. 184, 185, 186, 188. It's easy, but it's a little annoying and it requires some concentration. So morning we will do. Okay. So, all right, buddies, good afternoon. Ready? Super awesome. Now ready. This post lunch session is an amazing session where slowly the eyes will close off. You are going into some other mode only. Happens. So whenever your eyes close, remember ICA results.nic.in. So if your eyes are closing, always remember after every May there is November. Right? New rhyming poem. Yes. Okay, cool. Done. So we were doing a nominee director. A couple of points here is that nominee directors cannot be removed. We have already seen in 169. And nominee director shall not retire by rotation. That also we have seen. Shall not retire by rotation means what? Either he will not even enter the 2/3, 1/3, or he will enter and he will become non-rotation. That also we have seen. These 5 points are done. So 161.3 was done, guys. So the other points, important points we'll do now. That is 161.2 alternate director. Alternate director 161.2. It's for both private and public companies. And actually we'll do casual vacancy. It's easier. We'll finish this. Casual vacancy 161.4. Both for private and public companies, casual vacancy director. So let's see here. We will check there. If the office of any director appointed by company in general meeting is vacated before his term of office expires in the normal course, the resulting casual vacancy may, in default of and subject to any regulations in the articles, be filled by the board of directors at a meeting of the board. Board of directors at a meeting of the board, which shall be subsequently approved by the members in the immediately next general meeting. Provided that any person so appointed shall hold office up to the date up to which the director in whose place he is appointed would have held office if it had not been so vacated. So if you see, (161.4) it is what? Private and public company here. And here, subject to the articles of association, it is even if the AOA is silent. So if we check here, if the office of any director appointed by the company in general meeting is vacated before his term of office expires in the normal course, the resulting casual vacancy may, in default of and subject to any regulation. So this is power derived from articles or subject to? Subject to articles. Which means even if AOA is silent, board can appoint casual vacancy director. In the old law, the casual vacancy director had to be appointed by the board of directors. That's it. And here also it's the same only. And here an interesting thing is it should happen at the meeting of the board. Meeting of the board. But one interesting point is that which will be subsequently approved by. So appointment will be done by board of directors. That was also there in the old law, but in the new law, that is after 2013, they have told it should also be approved by shareholders. So the question is, when is the, what do you say, this thing, appointment valid, considered valid? At the time of appointment or the time of approval? So at the time of appointment itself, it is valid and it is subject to this final approval. And once it is approved, it is considered to be fully valid. So there are only two peculiar sections in the whole of Companies Act which uses this dialogue, appointment and approval. One is this, one more is managing directors provisions. MD provisions also same dialogue, appointed by board and finally approved by shareholders. And it starts off as a valid appointment here. Why this is important is because later, if you consider this to be invalid and this to be valid, what happens to the acts of the directors done during this time? Is it valid or invalid? It begs a question. That's why it is important to understand this. So, subject to the articles of association, even if the AOA is silent, board has the power to appoint. Then board and only board meeting resolution and not by circular resolution. What is casual vacancy director? The vacancy created in the office of a director who has, vacated due to some reason. What reason? Death, disqualification, whatever it is, resignation, whatever. So it is interesting to know that in casual vacancy, the only thing that the new casual vacancy director will get, two things. One is what? Tenure will go from the previous guy. For the new casual vacancy director, tenure will go from the previous guy. And the mode of appointment is board meeting resolution plus ordinary resolution and general meeting. This is one provision where both the provisions have to be fulfilled. Board meeting resolution, not circular, and ordinary resolution and general meeting. Two times I have asked this question. They have appointed a person as a casual vacancy. They have appointed an additional director as a casual vacancy through circular resolution. Two times this question has come. One in 2016 and one I think in 2020 or something. Same question. I have appointed an additional director in a casual vacancy through circular resolution. Does it make any sense? No. You can either appoint a casual vacancy director or appoint an additional director. You cannot have additional director in a casual vacancy, not possible. Through circular resolution. Circular resolution is possible for additional director, whereas board meeting resolution is needed for casual vacancy. So you cannot have combined director like this. Additional director in a casual vacancy through circular, not allowed. So it's not there only like that. Either you appoint additional director or you appoint casual vacancy director. Casual vacancy director appointed by what? Appointed by board of directors through meeting and regularized through ordinary resolution and general meeting. So yes, in the immediately next general meeting. So if you see, it is a casual vacancy when office of the director is vacated before the expiry of his term. It may arise due to death, disqualification, resignation, incapacity, removal, etc. It should arise in the office. Yeah, that is what it says. Now, one more thing. Casual vacancy we are discussing. What about first director appointed by the articles? Mr. A is the first director appointed by articles. So the thing is, he is appointed and he continues to work. Then let's say he dies. Can I appoint Mr. B in his place through casual vacancy route? Possible or not? Through casual vacancy route, is it possible or not? Mr. B, through casual vacancy route, possible or not? What do you think? No, why? Yeah, yes, perfect. So if you see here, check this. If the office of the any director appointed by company in general meeting is vacated before his term expires in the normal course. If the office of any director appointed by company in general meeting, so only the first person was appointed by company in general meeting, if that person anything happens to him, only then this section will come into force. So, to understand that, obviously, casual vacancy in whose office, then we should understand. So it can be, let's say, casual vacancy in the office of first director. First director can be two things. One appointed via articles. One more is what? Subscribers to memorandum. That guy, subscribers to memorandum. Then, okay, tell me now. Second one is normal appointment under 152 to read with 160. That director, if something happens to him. Or can I do a casual vacancy of an additional director? Can I do a casual vacancy of an alternate director? Can I do a casual vacancy of a nominee director? Can I do a casual vacancy of casual vacancy? So if you see this case, so this question also has been asked many times. CV of a CV. Here, articles route. Articles route, not possible. Why? He was never appointed by shareholders in general. So if the first director was appointed through articles dies, 161(4) is not possible. Then I have to check the articles to understand what to do, or I can appoint a brand new director. One thing we need to understand, guys, any vacancy that is created in the office of a director can be filled in many ways. One way to fill it is what? One is do not fill only. I don't need. It's when that person dies, good only, like that. If I think good he died, let's not appoint one more guy and sort of ruin everything. So that is one. Second is what? Second is you fill it. You fill the casual vacancy, but fill it as casual vacancy. Fill the vacancy, sorry, but fill it as casual vacancy. 161(4). So that person's Atma will come to this guy. Atma means only tenure. Tenure will come. Correct? Yes, that's it. That's all. Nothing else will come. Or what else will I do? This is also one thing that we always need to understand. I can fill the vacancy not as a casual vacancy, but I can fill it in normal route. No, 152 to read with 160 I can appoint, or I can appoint an additional director in his place, not replacing him. His tenure will not flow. What I'm saying, the vacant position is created. I can appoint an additional director if I want to. I can appoint a regular director if I want to. Right? Or I can choose not to fill only. When they ask in the exam casual vacancy, it means they are replacing this guy with this guy through the mechanism of casual vacancy. So when they ask that question, can you appoint an additional director through a casual vacancy? That is not possible. You can appoint an additional director to fill the vacancy. Let me repeat. You can appoint an additional director to fill the vacancy, but not as a casual vacancy. The word casual vacancy is actually quite technical. Correct? It cannot be used in a casual sense, so to speak. It is very technical word, which means it is only through 161(4). So vacancy created in the office of the director before the expiry of his term, vacancy need not be filled also, or it can be filled as a casual vacancy by 161(4), where the tenure flows from the previous guy, or I can choose to fill the vacancy not as a casual vacancy, but the vacancy will be filled by 152 to 160 or additional director, whatever. So always remember, if they ask that question, additional director appointed through casual vacancy, it is wrong. You cannot appoint an additional director through a casual vacancy. So if you see, okay, but still doing this only. Yeah, in this case, okay. What about this guy? Subscriber to memorandum fellow. That fellow dies. Then this guy, subscriber to memorandum, who was actually already regularized. The moment is regularized, you are going through which section? 152 to read with 160, which is nothing but shareholders. So can I appoint a casual vacancy director? Yes. What about this guy? A person was appointed through regular route. 100% yes. Now, can you do a CV of a additional director? No. Because this guy was appointed by board. This guy is appointed by board. So it's not possible. So, general rule, CV of an additional director not possible. Similarly, additional director of a casual vacancy also not possible. This is absurd. There is nothing called additional director in a casual vacancy. Similarly, you can't appoint a casual vacancy additional director in place of additional director. Not possible. That's all our own law, creation in the exams. So, it is CV of an AD not possible. AD of a, this is a 4-mark question asked in the exam. So, only exam related stuff we are doing. What about 161(2)? We haven't discussed. We'll see alternate director. What about nominee director? That fellow is working in a bank. Because he was working in a bank, they have appointed him as a nominee here because they have given loan to this company. So, either he leaves there or he dies there, whatever happens there. Then in that case, what happens? Can this company appoint a nominee director? No. So this will be there in the loan agreement only. Loan agreement only will have all provisions of casual vacancy, etc. What will happen if he dies? How will the replacement happen? So section will not come. One question is this, guys, regularly asked. One question is this. This is an interesting question. So what happened? Mr. A was originally appointed by shareholders in general meeting. No problem. So in that happiness, he died. Mr. A died. So he became very happy. He started working, first day only gone. So after he died, now the thing is, can I appoint a casual vacancy of this guy? Yes. Why? He is replacing a guy who was originally appointed by the shareholders. Now they appointed through casual vacancy Mr. B. Mr. B, in that happiness, he also died, unfortunately. So he also died after working for 1 or 2 days. Now the question is, can I appoint Mr. C as a casual vacancy director? Now this Mr. B initially, how will he be appointed? Board meeting resolution plus shareholders. Correct? Mr. B is replacing Mr. A. How was Mr. A appointed? Shareholder. So Mr. B in place of Mr. A, 100% correct. Mr. B can be appointed in place of Mr. A, 100% correct, because he was appointed by the company in general meeting. On the other hand, Mr. C is replacing Mr. B. How was Mr. B appointed? Was he appointed by board or appointed by shareholders? That is why I told you this dialogue is important now. I told you that dialogue, appointed by board or appointed by shareholders. If you see the wordings here, appointed by, this one, resulting casual vacancy may be filled by board of directors, which shall be subsequently approved. Appointed by board, approved by members. So what do you think? So actually the thing is, in the old law this was not there. As I told you, since it was not there, no problem. So you can say Mr. C is only replacing Mr. B, was appointed by board and not the shareholders. So nothing doing. That could have written the answer. But after this amendment of shareholders here, it is confusing whether he is appointed by shareholders actually or board. Plus also there is one more MCA clarification which was there from before only, from 1970s only it is there, which says that all these provisions you leave, go to the main appointment. Multiple times CV of a CV is possible if the main guy was appointed by shareholders. So this is all administrative convenience. Please see the main appointment. If Mr. A was appointed, what to do? So now that is the MCA clarification. But the doubt was, is he replacing a person appointed by board or appointed by shareholders is the question. Institute feels that CV of a CV is not possible. You have to write institute. Institute, whatever it feels. It feels CV of a CV is not possible. But we should also write the note which has the MCA clarification. So I have given it here, don't worry. So check this here. Point number 6, very important. Point number 6, very important. Casual vacancy of a casual vacancy director. Asked in the exam, definitely 3-4 times minimum. That too recently only. Casual vacancy of a casual vacancy director. So in the exam, main answer should be casual vacancy of a casual vacancy is not possible. But please also write a note in the end about MCA clarification. Note separately. MCA expressed the view that if originally an appointment was made in a general meeting, the board may fill the casual vacancy as many times as necessary. So original appointment, if it is general meeting, then CV of a CV of a CV, it is possible. But the main answer should always be CV of a CV is not possible. Correct? It is not possible. But I explained the MCA clarification also because it is also relevant in this context. This is point number 6. So if you check here again, we are doing this only. It should arise in the office of a director appointed by company in general meeting. Casual vacancy is vacancy in the office of the director after valid appointment of the director. After valid appointment, that is called casual vacancy. So till expiry of the term of the director in whose place he was appointed. He is not a retiring director. So very simple guys. So basically what I am trying to tell is, if A, B, C was there, D, E, F is all retiring mechanism, rotational directors, GH, and this A, after working for 1 year, he passed away. Now I have appointed Mr. J in his place as a casual vacancy director. Ideally speaking, let us say GHI is there, and again A, B, C are coming up for reappointment. Now A is not there, is coming up for reappointment. A is not there. In A's place, J is there. Now, can B be reappointed? Yes. In the AGM, what happens? These three are retiring directors, no? B, can he be reappointed? Yes, under 126. Can C be reappointed? Yes, under 126. What about J? Can he be reappointed? J is now in place of A. He has come here only, somewhere in the middle. A's original tenure would have ended here. It's ended now. So can J be again reappointed under A's name, or it should be freshly appointed if need be? Fresh. Once a CV, always a CV. Once an additional director, always an additional director. If you want to be a regular director, you have to pass through, yes, 152 to read with 160. Undoubtedly, you have to pass through this. 152 to read with 160. So these people have to pass through this section without a doubt. So that's what here also it says. Everything is there here. Don't worry. Here, check here. Let's see. Here. He is not a retiring director, not auditor, director. He is not a retiring director. He is not a retiring director. His appointment can be regularized under section 160. Which means if you want him to be a regular director, you have to go through 152 to read with 160. Some other points. Not mandatory to fill the vacancy. Yes, we've seen that. Casual vacancy director holds office till the expiry of the term of the director in whose place he was appointed. He is not a retiring director within the meaning of 126. Thus, his appointment as regular director requires compliance with 160. Already we have seen that. Casual vacancy should arise in the office of the director appointed by company in general meeting. This is the chart that we just did now. There is any casual vacancy in the office of first director, additional director, casual vacancy director, alternate director, we'll see. It is not a casual vacancy and cannot be filled up under this section. It is not a casual vacancy. If the original director is a managing director, should casual vacancy director also be a managing director? No. Managing director is just a captaincy position given. Similarly, if original director is not an MD, can casual vacancy director be an MD? Yes, of course you can be, no problem. Tell me. Alternate director, should he be added in the total number of directors? Yes, he is not a proxy to the original director. It should be added in the total number of director under 149(1). Definitely should be added. Now, if alternate director is appointed, where? It should be actually casual vacancy also, more than alternate. Here, this is fine. This you can write alternate and CV, both guys. Here, point number 10. If alternate / CV, both. If casual vacancy director is appointed for a rotational director, now tell me, who will be included, guys? Rotational director. I mean, basically the same question that I told you now here. If a casual vacancy director is there in place of a rotational director, the rotation etc. will apply to original director or casual vacancy director? Original. When he is no longer there, obviously this guy will be afresh. This guy will be fresh. That's what they are trying to tell. Same thing. It will always be applicable to the original director and not to the alternate director or casual vacancy director. Same points for both. That's why 9 and 10 are the same. 11th. Casual vacancy of an additional director and additional director in a casual vacancy, both are not possible. They are different concepts and should not be confused with casual vacancy. Now, as discussed already, if you are a 161(1) director and you have gone through MD provisions, and then later after AGM you are appointed under 160 afresh, and again MD provision, is there relaxation? Yes. This is the only relaxation there. No other relaxation available. For example, you are a casual vacancy director. Then you have become an MD. Then later I regularize your appointment and appoint you as an MD. Is there any relaxation? No. So this point, just remember one thing, that's all. 161(1) became an MD, regularized under 160, again became an MD, only one relaxation. For any other combination, there is absolutely no relaxation. So casual vacancy, director versus auditor, if you see, director may be appointed, auditor shall be appointed. Shareholders approval, it is in the immediately next general meeting. Here shareholders approval 3 months from the board resolution. Tenure. Original director's tenure will flow from the casual vacancy director. This fellow till the conclusion of the next AGM. CV of a CV, it is as good as casual vacancy auditor, it's possible, but here as you have seen already, MC has given a clarification, but as per ICAI, what do you think? ICAI also says not possible. CV of a CV is not possible. So that is with regard to casual vacancy. Now the other part, alternate director. Here alternate director 161(2). Again 161(1), additional directors of power derived from articles. 152(1), first director is a power subject to articles. 152(6), rotation is a power subject to articles. Then 161(3), nominee is a power subject to articles. 161(4), casual vacancy is a power subject to articles. Now let's see 161(2). 161(2). So if you see here, the board of directors of a company, if you just read this line in the Bare Act, the board of directors of a company applicable to both private and public. The board of directors of a company, if so authorized by its articles or by resolution passed by company in general meeting, appoint an alternate director. Appoint an alternate director. So alternate director is appointed for a person who goes out of India for more than 3 months. So the board of directors of the company may, if so authorized by the articles or by resolution passed by company in general meeting, appoint an alternate director. Which of the interpretation is correct? Interpretation number 1. The board of directors of a company may appoint alternate directors if they are authorized by articles. If the articles are silent, the shareholders can pass ordinary resolution in general meeting and appoint an alternate director. I repeat again, interpretation number 1. The board of directors of the company may appoint an alternate director if it is authorized by the articles. If articles are silent, then the shareholders can appoint the, alternate director by ordinary resolution in general meeting. Interpretation number 2. The board of directors alone can appoint alternate directors. Authorization can come either from the articles, or if the articles are silent, authorization can come from the shareholders. First or 2? Sir, 3. None of these. Which one? Only both can. 1 or 2? 2. Some are saying first, some are saying 2. Answer is second one, guys. So because if you see, there is board of directors of the company may, and there is a comma. Then there is an entire phrase and then one more comma. So there is some rule in English grammar which we have deemed to have studied in school. So there is one, I don't know which rule and all. So there is one sentence, then second sentence, third sentence. If it is like that, the second sentence should be ignored. So 1 plus 3 should be what is written, and the second will come here before the first and third. So basically, what is the first rule say? The board of directors of the company may. Third one, appoint an alternate director. That's all. The board of directors of the company may appoint an alternate director. Then this dialogue, if so authorized by the articles or if so authorized by the shareholders. So basically, the article should authorize the board of directors. Assume this was the only dialogue which was there. Shareholders point was not there. Now tell me, is it power derived from articles or subjective? Derived from. Because if the articles are silent, section does not apply. But here there is a relaxation. Assume this was the only provision given. If the articles were indeed silent, could you have appointed board of directors? No. What should you have done to actually appoint board of directors? Amended the articles. What resolution is needed to amend the articles? Special. Instead of that, there is a relaxation given. Ordinary resolution, you can authorize the board. So 2 routes. Article should authorize the board of directors. If articles are silent, no problem. Rather than passing special resolution, pass an ordinary resolution and authorize the board of directors. Pass an ordinary resolution and authorize the board of directors. Who will appoint whom? Alternate directors. Who will appoint alternate directors? So the articles should authorize the board of directors, and ordinary resolution, it will go to the board of directors again, and what will happen? They will appoint the alternate directors. The ordinary resolution, they will authorize the board. Article should authorize the board. These people should authorize the board. And the board later will appoint the alternate director. Board alone can appoint the alternate director. Next question. Circular resolution, board meeting resolution, or anything? Nothing they have given. It just says board of directors. So in law, it's very simple. You may feel, in law now there are 4 steps. Step number 1, close your eyes. Step number 2, take a deep breath and breathe out. And from the pit of your stomach, the answer will come. That's called gut feeling. Right? So you close your eyes, the gut feeling will throw the answer. That is 3rd step. Listen to your gut. 4th one, reverse the gut. That's the answer. When you reverse the gut, it usually will be the answer always. So if you see, the board of directors of the company may, if so authorized by the articles or if so authorized by resolution, appoint a person. How to appoint? Nowhere you will see meeting. So here also it can be through circular resolution or board meeting resolution. Till now we have seen only in one place. 161(4), casual vacancy director alone, board meeting resolution. Everything else circular resolution is okay. Once one stupid fellow had asked that question also. Which are the sections which has only board meeting resolution? 8 marks. Long time back. 2013-14. They had given that question. Which of the sections only board meeting resolution is needed? Correct? So then our inner BCom answers would be, we would be writing all BCom answers. Right? So article should authorize, board here. That's it. Now tell me, alternate director. Can you appoint a casual vacancy of alternate director? No. Why? Because alternate director is always appointed by board. So casual vacancy of an alternate director is not possible at all. Casual vacancy of alternate director is not possible at all. Then can you appoint a, okay, this casual vacancy, alternate director. Alternate director, earlier concept during the old Companies Act 1956. It's important for me to tell this because you'll understand. 1956 old act, they only said if he is absent from the state in which the board meetings are ordinarily held. Because in 1956 it was not easy to travel. So if your company was in Mumbai and you are in Bangalore, obviously you are not present in the state in which the board meetings are held. So in your place, that time video conferencing also was not there, nothing was there. So in your place they could have appointed one fellow to sign the documents and all those things. In 2011, they inserted regulations saying that video conferencing you can attend the meeting. You can attend the meeting, but voting not allowed. You can attend the meeting. What happened in 2013? Everything was removed, and there was this section 173, that is meetings of the board, which said that you can attend the meeting via what? Yes, that is video conferencing also. You can attend via video conferencing also. Will quorum also be counted? Will you be counted for quorum if you attend via video conferencing? Yes, it says participation by video conferencing also shall be counted. With all these things come into picture, what happened to alternate director? Basically it was limited applicability. So now, when will you appoint an alternate director? Yes, when a person goes outside for medical treatment. When he goes outside for medical treatment, he'll tell boss, I cannot come for 3 months minimum, so I'm going out for medical treatment. Either you accept my resignation or you appoint somebody else in your place until I come back. So this is a concept of medical impossibility, medical treatment, or even a sabbatical. Many people take sabbaticals. Sabbatical means a long break from work. So people, especially if you see the news every time, every CEO, CFO are in that tension, now they are taking sabbaticals. So much tension is there, so much pressure, so they are taking sabbaticals. They give sabbaticals even to very good employees also. So one of my friends took a sabbatical. She was working in a fraud investigation agency. She said, I will not at any cost You either give me sabbatical or I am gonna quit. So she had already booked off a nice resort in Kerala for 4 months. So she said, I am sent books also there. All novels and all she sent already. She had texted us, all her friends, and told 4 months don't contact. Said, okay, cool. Because she said, I want complete sabbatical. No disturbance, nothing from anybody for that matter. So she went. They have actually gave her paid leave for 4 months. So because she was so good at her work, they gave paid leave. So she came back. First thing she did was put resignation. Thank you. That's what she did. Yeah, she did resignation. When I was there, some divine intervention came that I should not work in your bloody company. You have sucked the life out of me. I realized there that I had so much in life that I have to do. Quit. Right? So then she joined one more company, and today, I spoke to her yesterday actually. She is now actually some qualified, trainer in some other in your, what do you say, in mental awareness. Awesome. So she wants to do something for the students. She's a rank holder, by the way. All three levels of CA rank holder. So now she's quit all these things. Like, I'm tired of. She's minted so much money. She doesn't know what to do with it. So she's like, I don't want only this. There's no point. So she understood that there's no point in doing the same thing all over again. So she said, she got one training, some life coach, there is a proper certification from abroad. She's done that already. It's a difficult course. She's finished that. Now she wants to be a, life coach. It's awesome. It's cool. Something different, right, than what it is. But that's what. She's the same person. So I tell your example, I tell in class every time, I tell her always. So yes, so sabbatical, when she only got a sabbatical, normal employee, 100% directors will get. So directors will tell, boss, I need a 4-month break. Nothing can be done. So now if you see, do you need, okay, in 161, with this background now tell me, if I am a foreign director working abroad, do you have to appoint alternate director? No. Why? Because you see the dialogue here. It says, during his absence. During his absence. And then, obviously, what does it say? When will the alternate director's tenure come to an end? Yeah, when the original, okay, 1 second. So if you see, during his absence for not less than 3 months, and here, when the director returns to India. When I say absent, correct? Is there a person called Nityananda here in class? No. So can I say Nityananda is absent in class today? No. He was never present. This is philosophical level dialogue. So you can only be absent, correct? You can only be absent if you are ever present. Correct? Yes or no? You can only be absent if you are only present. If you are not present, how can you be absent? So it says here very clear, it is absence. Absence presumes presence. So if you are present, only then you can be absent. Correct? So if you see, this absence and returns to India clearly suggests that you cannot appoint alternate director for foreigners. But ICAI says you can appoint. I cannot help it. ICAI tells so. You have to follow the same thing. ICAI says foreign collaborators, you can appoint what? Alternate director. See here, point number 6. These are all important areas. Alternate directors cannot be appointed in case of a director who resides outside India, was already there. One Indian fellow is working there, is already working. So when you can attend via video conferencing, what's the point of alternate director? Not needed. Not needed foreign director or another director, but important, as we have already given. As per ICAI, alternate directors can also be appointed for foreign collaborators or directors. Nothing can be done. They will not even ask you that question. They will only tell foreign collaborator, in place of them 3 alternate directors were appointed. So is it correct? In the sense, they'll give you procedure, is it correct or not? So that procedure you have to comment. You can never say it, you cannot appoint. This is in the suggested answers, always there, guys. Nothing can be done. That's why I gave you that background. The phrase during his absence suggests that the original director is going to go outside India. But the phrase returns also indicates the act of returning back to India. And his intention should be to go for more than 3 months. His intention to be absent for 3 months from India is a prerequisite to form an opinion. If it does not refer to actual absence, original director may return before 3 months itself. Correct? Took a sabbatical, one day only he got bored. Workaholic. He can come back. Correct? Workaholics are like that only. 2 days like what to do. They get withdrawal symptoms. They don't know. One of the trips I went made a mistake to go with a workaholic. In 2 days only he's like, let's go. Hey bro, we just got here. What? Let's go. No, I cannot. I said, then you go, get out. I don't care. Then he actually went. He couldn't take it. Imagine. 2 days break also he couldn't take it. Restlessness. Right? Happens. So there's some people are like that. Nothing can be done. Workaholics. So they would always they have that fear of missing out on work. It's a new term now. FOMO, it's FOMO W. Right? So that is such people are there. So they're constantly on the phone. What is happening at work? What is it? So the entire consumed by the work culture. I mean that's their choice. Yes. So if you see for CA final student, nothing. FOMO meaning only we don't know. Only first word we stop. Fear. Of what we don't know. Fear of everything. Yes. So if you see, okay, come back. I told you no, one we will link it later. See page number 9. That absents himself, they generally. Now if I absent myself for 12 months, it says with or without seeking leave of absence. Now you will understand this. Page number 9, with or without leave of absence. Correct? Now if I take leave, I am going on a sabbatical or medical treatment. 12 months I will not be there. What do you think? I'm just asking, the alternate director's tenure, is it indirectly 12 months? I mean the original director's tenure, is it actually 12 months maximum? If you are going abroad for more than 3 months, I can appoint alternate director, which means original director will never be present for more than 3 months. What if the original director wants to go abroad for 15 months? He has taken leave of absence. He is telling, I'm never going to attend any meeting, medical treatment. So is it an indirect, tenure? Because if that fellow doesn't come within 12 months, what happens to original director? As per this section, vacation. If the original director vacates, what happens to alternate director? He'll also have to vacate. So I'm asking, is it an indirect tenure of 12 months? No. Because then what do you mean by this with leave of absence then? With or without leave of absence means what? I've taken leave of absence 12 months. I've taken, not that I've not taken, I've taken. What do you think? What is this with? So basically guys, this section of 167 is for punishing those people who are, now what is the difference between, I'll tell you, what is the difference between disinterested and uninterested? Law class or English class? English is there in law, unfortunately. Yeah. Spelling. Disinterested and uninterested. What's the difference? Because if you write uninterested in the exam, gone. You should write disinterested. What is disinterested and uninterested? Sorry? Bored. Bored is what? Uninterested or what? Yes. Bored and like lack of zeal, lack of enthusiasm, that is uninterested. Disinterested means what? Yes, this is unbiased, correct. Unbiased, unprejudiced. This is actually the meaning of disinterested. So a director has to be disinterested. Actually, a director has to be disinterested, but he cannot be uninterested. He cannot be uninterested. So disinterested director means what? Person who is unbiased, unprejudiced. He doesn't care about, what do you say? Who is, what is the interest there involved, what, etc. He will think from an objective point of view. He will put the company first, not himself. That is called disinterested director. Now, disinterested director, unbiased view, unprejudiced view. In this case, this section is punishing uninterested directors. Uninterested directors. So generally the balance brought down cases will be there. Now father has made property, now is giving it to son or daughter, balance brought down cases. So now the children will be like not bothered only about the company. Correct? Least interested. I have one relative like that. Father has minted money, son is completely not interested at all. He's a musician, in music also is not interested. Right? He's simply taken it up. So many offers he got from good players. They got offers from this which is that nice this thing, man? No, this are Hindi. They do this filter copy Filter copy gave them lot of chances. That fellow is like, no, I don't, boring. I don't want to take it up. It's loaded, fully loaded he is, his father, not him, fully loaded. So the thing is, that kind of, now they also have many companies. But the problem now is, you see, this fellow, he never comes for any board meetings. So they're calling him, then he's not coming. So without seeking leave of absence means not interested itself. With seeking leave of absence, that morning he'll call, sorry, I cannot come. I'm seeking leave of absence, no, sorry, I cannot come. Or next board meeting also I'll not come, I will be sick. Alright, I cannot come. So that is called what? That is the meaning of this, with or without leave of absence. Now you will understand. That's why next line you see, there is scope for legal and medical impossibility, even though if it is more than 12 months, and he will be pardoned. So 12 months is not a, indirect term of alternate direct. It's not indirect term. It's both are different. So in one of the exam questions, they had asked that one lady was very busy, she could not attend 12 months. Then very busy means she is busy in other things, here she is not interested then. Obviously, that's why vacate or not? Yes, they will vacate, obviously. So they had asked one question, woman director question was asked in the exam. So these areas institute is testing now, because they know that we will not, read through in a very, very in-depth manner. So these questions they are asking. Of course, this is a revision session. There are many other intricate points which, we do not have the time to analyze. But this is fine. This is good enough for the exam, actually. It's just a revision session. So if you see 161.2, this is more than sufficient. So if you check here, alternate director, AOA may authorize the board. And this one, alternate director can be appointed for a director during his absence. Fine, for 3 months. Absence and presence you have seen. Now the question is, one director is going out. Can I appoint 2 directors in his name? Alternate director. Or on the other hand, 2 are going out. Can I appoint 1? So if you see, it says here again, appoint here to act as an alternate director for a director. An alternate director for a director. So basically, if there is, for instance, A, B, C and C, D, J. 2 companies are there, X Limited, Y Limited. Now this guy, C is going abroad. Same guy, C is going abroad for more than 3 months. Now A is already a director of X Limited. Can he be appointed as alternate director for C? C in X Limited? No. Why? Because if you are already a director, you cannot be an alternate director. This provision was inserted because when you are counting the total number of directorships, will you count alternate directorship also? Yes. So for this fellow, you will count as 1 or 2. If you allow it, you will count as 1 or 2. 2. So it was a problem. So you are counting as 2. You are walking into the company, they are counting as 2. Right? You are sitting down, counting as 2. When you say 1 yes, it's gonna be as yes. Echo will come. You can tell yes, no also. Simply. To play around. Actually, that was a stupid provision until 2018. I'm not joking. So if you tell yes, 1 no, you can do. You ask what bro, what 1 yes, no? It's my wish. Who are you to tell? Right? Yes, no. There's a veto now. It's all blocked. Now you have to decide. You are telling yes, no. Correct? It was damn stupid. And I already have, this is the 20th company. So will I take it as a 21st company? No, it's the same company. So they said nothing doing if you are already a director. And the best part was, why they changed was, directors demanded sitting fees twice. You are counting 2. I'm sitting 2 times I'll sit. Give me. Actually, they were demanding. I'm not joking. They were demanding sitting fees twice. Because you are counting quorum as 2, voting as 2. Sitting fees also you give 2. So they said nothing doing. Good provision. 2018 they changed. If you are already a director in the same company, you cannot be an alternate director. What about this? Can Mr. A be alternate director of C in Y Limited? That he can. Different company, no? You see the wordings. For any other director in the company. In the company. If you guys want to eat something, eat. Chocolate wrapper, don't open slowly. More sound will come. It will get recorded. Open it fast, right? Slowly, this fellow will see, should not see. Right, slowly, yeah. Correct. Holding any alternate director for any other director in the company. Please eat, guys, no problem. Be comfortable. In any other director in the company, not a company, in the company. The company means which company? Means, yeah, in that company. This X Limited, not Y Limited. Cool. So any other director in the company or holding directorship in the same company. This is what was added because I asked the sitting fees twice. This point to act as an alternate. Can one random fellow, Mr. Z, be alternate directors for the same director in different companies? Z, can he be an alternate director for C in X Limited, alternate director for C in Y Limited? Yes, definitely. Yes, two different companies, right? Possible. Similarly, one more question they ask in the exam is C is going outside the country. He is only appointing Mr. Z and going. Possible? No. Should always be done by the board. These are all the questions that can come in the exam. But check this chart, guys. Please see if you can understand this. Whatever we discuss is there in this. Check it out. Page number 19. Page number 19. Two alternate directors for one director in the same company, not possible. One alternate director for two directors in the same company, also no. Director being alternate director for another director in the same company, not possible. We discussed that. Director being alternate director for another director in a different company, yes. So this A being the alternate director for C in the other company. A person Z being alternate director for a director in two different companies, yes. So all these things are, these two are possible. These three are a no. And this also is an exam question. Original director, MD, manager, they cannot appoint. Who should appoint? Board. Shareholders also cannot appoint alternate director. And the term of the director is this, guys. First one here. This. When they ask you the, what is the term of the alternate director? Most of us will write when he returns. That returns is only the third point. Three things are there. First one, shouldn't hold office longer than that permissible to the original director. Longer than that permissible to the original director. If that other director's tenure only gets over, rotation for example, this fellow also has to go. And the automatic reappointment etc. will apply to which director? Original director. Original director. Because what I'm trying to tell is A, B, C, one he had gone and for 6 months. In his place, they have appointed Mr. J. The tenure only is for 4 months. He's gone for 6 months. His tenure is ending only 4 months later. 4 months, the reappointment concept comes, an automatic reappointment. Let's say in the meeting, the shareholders did not do anything. The meeting was adjourned. In the adjourned meeting also, nothing was done. So yes, deemed reappointment will apply to original director or alternate director. Original director, very simple. So now this J, will he be automatically reappointed? No, because you need a resolution to appoint him. What resolution? 152 read with 160. So that is what I told you that we'll see later now here in 152 also. Just come back. Here in this point. There. Page number 16. A resolution, whether special or ordinary, is required for his reappointment. For instance, alternate director requires for reappointing this alternate director, you have to appoint him as a fresh. And what resolution is needed? Ordinary resolution. Special point we'll see later. 162, when we reach 162, we'll see that. So that is about it. Coming down here, page 20. Yes. Alternate director is definitely not a proxy. Okay, moving on. Sorry, here we still haven't finished this. Not longer, 19, page number 19, last column. Not longer than that permissible to original director. till the original director returns to India. Returns to India. And third one, we'll explain that starts work. If the term of original director is terminated due to death, resignation, etc. So that fellow, though he had 1 year, but in 3 months he resigned or he died, whatever happens, what happens to this alternate director? That fellow also will have to end his office. Now, it happened in the case law actually. The original director was very nice, much loved by everybody, and he went abroad. 3 months he went to Singapore to meet his daughter, 3 months in Dubai to meet his son. He said, 6 months I'm not coming, I'll travel. In his place, they appointed an alternate director who was a real pain. Nobody liked him, especially the company secretary. So the company secretary once called him after 3 months, original director, sir, where are you? He said, I'm in India. Sir, when did you come? No, I went to, Singapore. I finished everything. Now I'm going to meet my son in Dubai. So, sir, has your feet touched Indian soil? Like, yes, I'm here only, boss. I'm in India. Correct? Then he went to the additional director and said, get out. Sorry, the alternate director and said, get out. Why? Return to India. Return to India means I've come here. No, return to India. This actually went to court. I'm not even kidding. Janssen Engineering, case law. Return to India means what? Let's say the next day the original director came to the office also. The alternate director is sitting here, original director is sitting here. Will the tenure be over? No. So in that, though the law uses the word returns to India, that case law added 2 words, not to the law, but generally to the interpretation. What do they say? Starts work. When I say returns to India, don't go by litera legis, literal construction, go by the intention. Intention, you always use one more interpretation of statute called reasonable construction. As per reasonable construction, you have to start work. Only when you start work, it is called as returns to India. There should be some amount of permanence, they say, permanence. So that is the meaning of returns to India and starts work. Until then, yes. Now with all this, video conferencing, etc., original director is sitting abroad somewhere, alternate director is sitting here. They just request that original director to attend that particular board meeting because his thoughts are extremely important. Now he gives his thoughts via video conferencing. Alternate director is sitting in the meeting. Now, voting time comes. Whose vote will be counted? Original or alternate? This is also an exam question. Think about it. Original or alternate? Alternate director's term is still 3 things. 1, will he return? Did he return? No. First one, is it been determined? No. Is it terminated? No. So who is still there? Alternate directors. Whose vote will always be counted? Alternate. The original director from abroad can only attend the meeting but not vote. Even if he votes, his vote will not be counted. This also is an exam question, right? Because he's not started working, right? That's the reason. So if you see, everything is there. Alternate director is not a proxy of original director. Original director cannot influence him in any manner. He is in the same position as any other director as regards rights, duties, liabilities. Meeting joined via video conferencing by the original director will not vacate the office of the alternate director. The alternate director's vote only will be counted. If original director was an MD, should alternate director automatically become MD? No. MD is just a captaincy position. Alternate director can be appointed as MD even if the original director was not an MD. But alternate director for independent director, if you see, listed company regulation 25 of SEBI LODR says from 1st October 2018, alternate director for an independent director cannot be appointed. Not possible. Unlisted company, a private company, anyway independent director provisions do not apply for a private company. Hence 161(2) first proviso is not applicable. Unlisted company, 161(2) first proviso says alternate director also should follow all provisions of 149(6)(13), which means independent, even the alternate director should follow the independence requirements. Should follow the independent requirements. So all these 3 things are there. So that is regarding alternate director provisions. Alternate director provisions. Right. So these are all the various points. Of course, we have The types of directors are still a lot. We need to study. So let's see. So all these things are done. So now what is next part? Small shareholder director. Small shareholders director. Small shareholders director. What does it say? We have done. All these things are done. All points are covered. All the important areas we are covering, and MCQ questions and important questions also I am discussing. 22, 23 all done. Yes. SSD. Small shareholder director under 151. Listed company only, guys. Listed company. This generally they are asking type of questions that listed company may suo moto do it. Suo moto means voluntary. Or they can give a 14-day notice. Who? Small shareholders should give 14-day notice. How many small shareholders? 1000 or 1/10 of total number of small shareholders, whichever is lower. Total number of small shareholders, whichever is lower. So basically, if the company has like 1 lakh, 10,000 or 1,000, whichever is lower. Small shareholders means nominal value 20,000. Now the question is, if a notice has been passed like this, appointment should happen, or appointment itself is, then the notice only if I give, that's only the appointment. No. A proper resolution has to be passed. Second question, if a notice has been granted, given by the shareholders, small shareholders, is it mandatory for the company to call a meeting? Because of the use of the word may, these are all given by the rules actually. Because small shareholder director section is only one line. It says as may be prescribed. So here they are asking if it is may, suo moto, or 14 days notice. This was also an exam question. If 14 days notice I have given you saying that I want to appoint a small shareholder director. Calling the meeting is discretionary or mandatory? Exam question. Voluntarily doing it is discretionary or mandatory? Discretionary. But if I give a notice asking you to appoint, then mandatory. There the may will be read as shall. This also is an exam question. So when I am giving a notice, you have to call a meeting. I am not telling you to appoint. You have to call a meeting where the small shareholders only will appoint. Removal of small shareholder director. Will it be done by small shareholders or all shareholders? Removal of small shareholder director will be done by small shareholders or all shareholders? All shareholders. Correct? It is peculiar. Removal will be done by all shareholders. This small shareholder director is just a mechanism to ensure that oppression and mismanagement won't happen. So if you appoint a small shareholder and all other shareholders actually remove him, which means this is the beginning of oppression and mismanagement. So what? Obviously, because I have appointed somebody to protect you and that fellow only has been removed. So I can go to 241, 242. There are methods available in Companies Act. But this is a protection mechanism. But it is mandatory for them to call a meeting. Trying to appoint. What is the tenure of this guy? 3 years. Does not exceed 3 years. Will he be, is there a cooling period? Yes. How many years? Same. 3 years cooling period. Yes. So if you see, now retire by rotation and shall not be eligible, we will see all this. 3 years. Your cooling period after tenure, 3 years. And 9th one also we have discussed. He can be removed by passing an ordinary resolution by shareholders under 169. Cooling period after tenure, 3 years, where he cannot be associated in any other capacity. He can be removed by ordinary resolution by shareholders under 169. Small shareholders holding shares of nominal value less than or equal to 20K. Proposed small shareholder directors need not be a small shareholder. A notice is not sufficient to appoint an SSD. There should be a resolution passed by the small shareholders. This is the third point also asked in the exam. Fourth also asked in the exam. If notice is given by small shareholder of a listed company, it is mandatory to appoint small shareholders, not discretionary. SSD shall be considered as an independent director if he complies with independence requirements under 149(6), else he will vacate office. He will also vacate office if he is disqualified under section 164 or vacates office under 167. So what has been asked in this? It's a fancy topic. I don't know this key. They keep asking this in the exam. That's why, this part they have asked. Tenure they have asked. Then definitely point number 2, 3, 4, 5, 6, everything has come in the exam. 7 also for 3 marks. Can I be a small shareholder director of, let's say, Wipro and Olympic Sports Limited? Yes, two different companies. Can I be a, what do you say, small shareholder director of Wipro and Infosys? No. Why? Similar business. So if you see, he can be in maximum two companies. Also, second company should not have a competing business with the first company. These are all the various questions that they will ask in this particular area. That is small shareholder directors. Resident director, as I told you, at least one director stays in India or not less than 182 days during the previous year. So let's watch a small. Okay, cool. So we are done with this. Page 24. Resident director done. Appointment, next one. 162, 163. So 162 is very simple, guys. What is 162? Appointment to be voted individually. It is to be voted individually. So basically, any appointment of any person that you make, basically there are three directors, A, B, C. At the AGM, you are appointing each person separately or together. Ideally, you should appoint separately, because I may not like B and C. I only want to reappoint A, or I only want to appoint A and C but not B. Fair enough. So this section is a protection mechanism. They are trying to tell, generally everyone has to be voted individually. If you don't want them to vote individually, if you want one shot voting, which means if I say yes to one, all three is a yes. If you want that to happen, then they are trying to tell that there are two resolutions that should happen. Basically, they make it so restrictive that it's almost impossible to follow that. What is that provision? They say first, that first resolution must be a unanimous resolution. Unanimous resolution. All of them should agree to this particular resolution. Saying what? They are not saying that, you appoint all the three or reject all the three. They are not saying. They are just saying, I agree to one thing, that I agree to, I'll either appoint all three or I'll reject all three. Basically, if there are 100 people, I'm going to ask these 100 people saying that, are you okay to appoint all three or reject all three? Which means law makes it an almost impossible situation whereby they say, of this 100, let's say, 60 people already have in their mind that they want to appoint all three. 40 people already have in their mind that they want to reject all three. But all the 100 agree on one thing. What? They agree for one vote. That is the unanimous resolution. Unanimous resolution is not that all 100 want all three. No. In that 100, it is split into two extremes. One extreme wants to appoint all three. Other extreme wants to reject all three. Which means indirectly law is telling, even if one person is there who's not okay with this, which means he only wants to appoint one guy or he only wants to appoint two guys, even if there is one person who's not okay with this, then each director has to be voted individually. It's an indirect way of protection. They are just trying to tell, if these people, all the three are there, then all three will be appointed one shot appointment. But if I don't want one shot appointment, I have to do it, separately. Ideally, it's always separate only. But if I want one shot, this restricted mechanism I should follow, where if there are 100 shareholders, all 100 should be okay. All 100 should be okay to do what? To appoint one shot. To appoint one shot. I am not saying to appoint all. To appoint one shot, which means in my example, 60 people want all the three. 40 people don't want all the three. There is not even one person who wants either. That is, who wants like A, B, or A, B, A and B, like that. So only if this happens, then the second resolution it will go to. This is the first proposal. Then the second actual resolution. In this resolution, ordinary resolution. Instead of voting three times, they'll only vote once. If they say yes, all three are appointed. If they say no, all three are rejected. This is called as, this is normal ordinary resolution. So here 60 all have said yes, 40 have said no. So all three will be appointed. So this happens at the general meeting of the company, where through a single resolution, if I want to appoint, first a resolution, a motion, a proposal will be passed to appoint, to where without any vote being cast against it, whereby they will propose whether I can go with a one shot resolution. That one shot resolution is not for appointing all three or rejecting all three. One shot resolution is, are they okay with a vote, one vote. The decision can be anything, but they should be okay with one vote. That's what they say. So if you see, it's only for a public company. It's not for a private company, only for a public company. Private company, it will not apply, and government company and its 100% subsidiary, it will not apply. IFSC, it will not apply. So if you see, 2 or more directors may be appointed by a single resolution. Firstly, pass a resolution authorizing the appointment of such directors, and this resolution shall be passed unanimously. Then pass a second resolution, that is ordinary resolution appointing such directors. So very simple. First resolution must be unanimous and the second resolution must be a simple ordinary resolution. This resolution is, are you okay with one vote? I am not asking your decision. Are you just okay with one vote? You say yes, okay, no problem. Then one vote position will happen here. So this is the scene. And in the entire Companies Act, there are few areas which require unanimous resolutions. Unanimous resolutions can be shareholders also. Unanimous resolution can be board also. For board, there are 2 things here, which we'll see probably tomorrow. Whereas in unanimous resolution for the shareholders, there are only 3 places in the whole of Companies Act. One is this one, 162. 162 is the first such thing which requires unanimous resolution. All the shareholders should say yes. Second one is under section 5, subsection 4. This is for articles of association, provision of entrenchment. Private company entrenchment. Entrenchment means what? It is, restriction. So basically, tell me one thing, in any company, if I want to amend the AOA, what resolution is needed? Special resolution. But can I have, instead of special resolution, can I say, I need a 90% majority, I need a 85% majority? Yes, I can say. Those provisions are called entrenchment. Entrenchment is nothing but more restrictive provisions than special resolution. So I can say, if I want to touch article number, the regulation number 11, 15, 17, as an example in the articles, if I want to touch that, what resolution is needed? More than 75%. But to insert that provision, that restriction has to be inserted in the articles. No, to insert that in the articles, what resolution is needed? Unanimous. Unanimous. That's what. Section 5, subsection 4, entrenchment provisions of a private company. Third one, 96(2). AGM. Can an AGM be held anywhere in India or it should only be held in the registered office? Anywhere in India. Again, reverse the cut. Where should it be held? Only in the registered office. Registered office. Let's see. True. So as per 96, AGM should only be held where? In the registered office or any other place where registered office is situated. Infosys always holds it in Christ College, right? Because if you have to go to Electronic City, the previous day only you have to leave. So that is why. So it is always, it holds in, Christ College Auditorium, which is in Cormala, little midway. So that is one part. Second, if you see, what about private companies? They also have to hold there only in the registered office. But one relaxation was there. Unlisted companies and private companies, of course, now they can hold anywhere in India. Unlisted companies can hold anywhere in India, but they should take what? They should take permission from all the shareholders. They should take permission from all shareholders. So that is one more provision. So these are the 3 things. So 2 more in board meetings. We will see that tomorrow when we do the board meeting resolution. This is the unanimous resolution part. Unanimous, single, animus means mind or heart. So unanimous means what? As if one person only is approving. One person is only approving. So this is what the entire provision says. Unanimous resolution. So that is one part of the story. For example, in one of the exam questions they had said that additional directors had to be appointed. This is an exam question, which is, let's say A, B, C, all the 3. They had to be appointed one shot, additional directors. So the board is seeking your proposal, answer or advice as to how to go about. They want to do a single resolution. Possible or not? Possible. What is the procedure? First one. Unanimous resolution. Second one. First is unanimous resolution. Second one is what? Ordinary resolution. So this is under which section? 160. This was an exam question in 18 or 19, old or new syllabus. Yeah. So what is the answer? Yes. The 2 procedures you have to write. Neatly you will give 0. Why? See this first line. Exam question. 162 beginning starts with what? At a general meeting of the company. What was the question asked? They want to appoint additional director. Can shareholders ever appoint additional director? No. So 162 will not at all apply to what? Any shareholders, any appointment done by board. This was an exam question for 4 marks. So this is again very important part here. Only by members in general meeting. 162 will not apply for appointment of directors by board of directors. 162 will not apply for appointment of directors by board of directors. It will not apply in that case. It will only apply to whom? Shareholders. That is by members in general meeting. That was the important point which they had discussed that time. Tea break, we'll give it at 4. 3:30, everything is closed. You are from Chennai, no? That's why. Here we are a little late. Lazy fellows we are. 4 o'clock we'll open. Yes. That place next door opens only at, 3:45, 4-ish. Yes. You can bring tea. Parcel, no problem. So 162 will not apply for this thing. Next. Moving on. What is the next part? Principle of proportional representation. Proportional representation. 163. Public and private company. Public and private company, both it applies. Both. It doesn't apply to government company. What is this proportional representation? Very simple, guys. For generally, if you see, it's for public and private company. For listed company, for protecting the interests of the shareholders, for listed company, we already have small shareholder director. But for unlisted companies, there was nothing. That's why this section came, 163. 163 predominantly is for unlisted companies. What it is, like in many unlisted companies are there, whereby many shareholder groups have started a company. So each group will be represented by few shareholders, 4% majority, 3%, 10%, 11%, like that. What used to happen was only the main guy who had 51% shareholding, he only used to appoint directors, he only used to appoint everybody he wanted. These minority people were never getting their due. That's why section 163 has suggested that each group has to appoint one director. Each group has to appoint a director. That director is called as proportional representation director. Alright, each group will appoint. Now, we have never seen anything like this in the whole Companies Act. We have always seen majority. But here they are telling each group has the power to appoint their own director. So if you see, that's why it starts off with a non-obstant clause, which means what? Non-obstant clause means it overrides the conflicting provisions. You should never say it overrides everything. It overrides conflicting provisions. So notwithstanding anything contained, overrides conflicting provisions. All till now we have seen what? Ordinary resolution, and it requires approvals, and it also you cannot appoint for, it's always majority, corporate democracy, majority. But here it says notwithstanding anything contained in this act, articles of the company may provide for appointment of not less than 2/3 of the total number of directors of the company in accordance with the principle of proportional representation, whether by single transferable vote or by system of cumulative voting or otherwise, and such appointments may be made once in every 3 years, and casual vacancy shall be filled as provided in 161(4). So what is this dialogue? This overrides the conflicting provisions of the Act, which means here the articles only can provide that 2/3 of the total number will go by proportional representation. Means what? If the total number is, let's say 15, whatever, or 18, 12 will go by this proportional representation. Means what? Each group will appoint one director. I told you, group. Each group will appoint one, so that everybody is represented. Everybody is represented. The method of voting, they'll not ask in the exam. That's called single transferable vote and all that you leave. Method of voting, they'll not ask. But the idea is minority holding also will get value. So this is that concept here. Notwithstanding anything contained in this act, articles may provide for appointment of not less than 2/3 of the total number by proportion of principal representation. Now, this proportional representation, these people who are appointed, so basically this overrides the entire conflicting provisions. Now tell me, any director appointed via 163 through various groups, will he be counted in the total number or excluded from the total number when we are counting rotation? Obviously, it has to be excluded because it is notwithstanding. So if you see there, one part we had not done it that time on purpose. You see 152.6. Page 16, there. Director appointed under the proportional representation route. Director appointed under the proportional representation route under section 163. So this director should be excluded from the total number. Can this director be removed also? What's the point if you remove him? That's the reason why I appointed him only is for what? To protect the interest of the minority. So can he be removed? No. So that's what you see for listed companies. First route available is what? Small shareholder. If that fails, I can still go to this 163. If that also fails, operation and mismanagement. So I have provisions. 163, you see, 163 director cannot be removed. So if SSD fellow can be removed, but 163 guy cannot be removed. So if you see section, or 169, which we did in cluster 1, 169, there also we have written one dialogue. There, page number 10. Director appointed under section 163 cannot be removed. So for a listed company, first route available is small shareholder director. There, let's say they throw him out because there other shareholders can remove him. Then you still have an option of 163. That also fails means 241. But predominantly for unlisted companies, this is not there. Directly starts with 163. This overrides conflicting provisions of Companies Act, which means a 163 director, should he give his consent? Yes. It is not overriding, it's not a conflicting provision. Should I check disqualification? Yes. Can he vacate his office? Yes. Only thing is he cannot be removed and he will not be counted in the total number of 152.6. And this is a power derived from articles. If articles are silent, 163 will not apply. Which means if you want to appoint 163 director, it has to be through articles insertion only. It should be there. Power should be there in the articles. So that is the point. Let's just quickly finish it off. See here. Power derived from AOA. Page number 25. Power derived from AOA. If AOA is silent, the section does not apply. Article should specifically provide the same. Not less than 2/3 of the total directors must be appointed under this principle. Can the article say all the directors should be appointed by a proportional representation? Yes, because the articles can only, prescribe not less than. Not less than means what? Minimum 2/3. So can I say everybody? Can I say 3/4 if I want to? Yes, my wish. Proportion. So hold office for 3 years. These are permanent directors for 3 years. They cannot be removed from office. They shall be again appointed by members based on the shareholding pattern and the process carries on. This is like minority shareholding appointment. You see difference between page number 26, difference between 160 director and 152.6 director. Appointment of director other than retiring director is 160. 152.6 is what? Reappointment of retiring director. Applicability, public company only, private company exempted as per notification for 160 as discussed. 152.6 rotation, public company as per the section itself. Meeting, in 160 it is any general meeting. Here it is annual general meeting. Types of director in section 160 it's not there. 152.6 rotational and non-rotational director. 1/3 of the rotational director should retire. Notice 14 days before the meeting, it should not a special notice. It is 14 days before the meeting. It is not a special notice here. On the other hand, it is here 21 clear days before the meeting. 21 clear days before the meeting. Notice should be initiated by what? Any person. Here notice should be initiated by company. Mandatory or discretionary as per 160, it is discretionary 160, here it is mandatory. Nature of appointment, here it is actual appointment, here it is retirement plus reappointment. Retirement plus reappointment here in 152.6, here it is normal appointment. What type of business is 160? Special business. What type of business is 152.6? Ordinary business. Why? Because it is appointment of director who are in place of those who are retiring. Resolution also, here it is ordinary, here also it is ordinary. Periodicity, 160 can happen anytime, whereas here it is every AGM. That is 152.6 happens at every AGM. Deposit as discussed, mandatorily 1 lakh rupees, not applicable if recommended by whom? Board or nomination or remuneration committee. Here there is no deposit. 161.1 additional and casual vacancy. Additional director 161.1, this is 161.4. Applicability both private and public, appointing authority 161.1, board of directors. Here board plus approval by shareholders. Board meeting, yes, casual vacancies, board meeting only. This one is what? Either board meeting or resolution by circulation. Is it mandatory or discretionary? Both the cases it is discretionary. Tenure till the commencement of the next AGM. Here flows from the previous director, tenure. Business, both the businesses are special business. General meeting resolution, in the first case it's not needed. Shareholders, the board cannot appoint additional director. Whereas in the second case, yes, ordinary resolution is needed. Power is derived from articles. Power is derived from articles. Here it is, power is subject to articles. In the first case, power is derived from articles. Second one, subject to articles. That is the thing. Now we'll just do the basics of independent director. Again, very, very important chart. This is regularly asked in the exam. So whatever marking you do, IMP, all that you can do. It is important. So because they keep asking. And of course, women director. Women director here. We'll just come to this first. Women director, any listed company where securities are listed. By the way, listed company means what, guys? What is a listed company? Listed in the stock exchange. What is listed? Equity or preference or debt? So there are some change in the entire definition. Only these three are listed companies now. What are they? Listing of equity, listing of preference, which are publicly offered. That is obviously there. Even public company, if the debt is listed publicly, then it is a listed company. When they say listed public company, that's what it means. Because you can list the preference shares, you can privately place your preference shares also and then list it. So those listed preference shares are outside the purview of listing anymore. Earlier, this also used to be listed company. Basically, it's listed in the stock exchange, but what is the mode of allotment of shares? Private placement. And it's obviously tradable in the market later. But the initial thing happened through private placement. That also used to be called listed companies, not anymore. So basically listed of equity, publicly offered equity company, and publicly offered preference shares, publicly offered debt securities. Publicly offered debt securities are only taken into consideration. Privately placed things are not taken into consideration. Listed entities, company and others. Companies Act not applicable. SEBI regulations to apply for others. For private company also, if you see, you can list the debt securities. Privately though, you can list the debt securities privately, private placement. This is also not a listed company. So for which all companies do you need independent director and women director? This one. Listed public company generally. For these companies you require independent director, women director, anything that has to do with listed companies. You have to see this concept now. So moving on here. Women director, listed company, debt or equity listed both. Unlisted public company means what? Paid up capital 100 crore. Turnover 300 crore. LABS, latest audited balance sheet. And woman director, yes, that is there. Then independent director is there. Independent director is all these things we'll see now. Should woman director be independent director? That also was one question asked. Should woman director be an independent director? What do you think? Should woman director be independent? Like that, if they ask, some of us who are feminists will say, how dare you ask woman director is independent? Correct? So let's not be all go feminist on this. Should you be a independent woman director or woman independent director? That placement matters a lot. Independent woman director or woman independent director? Independent woman director, all women directors are independent anyway. So it should always be read as what? Woman independent director. Placement matters in English, otherwise gone. So it is woman independent director, right? Not independent woman director. Woman independent director. So should a woman director be a woman independent director? Yes. As per Regulation 17 from April 1st, 2020, all listed companies, in that one of the independent directors should also be a woman director. Or in the other way, one woman director should be a independent, director, should be an independent director. And if you see all the, the entire companies, new companies or whichever companies are existing, if you check that 100%, they have maintained the same. You will, of course, have, independent directors on the board who are, of course, women. Independent directors are definitely there. So if you take anything for that matter, let's say, for example, Infosys, if you take, so of course, in the initial part only, you will understand, you see there is Kiran Mazumdar-Shaw is the lead independent director. So of course, that is already taken into consideration. All are wearing suit. This fell on Superman t-shirt, and best part, he is what? Independent and bindas guy. Correct? I am sure he is wearing shorts also below. Yeah. Chitra Nayak is also independent director. So this t-shirt guy is say again committee. These committees also they'll ask. This is as per SEBI LODR. When you go to SEBI, we will discuss all this. You have all this audit committee, risk management committee, stakeholder relationship committee. You should have so many people, etc. And Mr. Yuri Levin, t-shirt guy, is a member of all these committees. Yes. So then Chitra Nayak is the independent director, whereas the lead independent director is Kiran Mazumdar-Shaw. As you can see, there is nobody designated as a woman director as such. What I am trying to tell is, you need not tell that this is the woman director. You obviously can see. I am just trying to tell that, correct? So in this case, these two are already women directors. No need to specifically mention. Law does not tell you have to make one person as independent director, correct? So it's law just says one of the women directors should also be a independent. In this particular case, both the women directors are independent directors. Both the women directors are independent. It's fair enough. So law does not ask you specifically to designate somebody as a woman director. This is a classic example of the same. I mean, big companies, if you see, we will understand. Rather than blindly reading, if you see the big companies, even if I see, for instance, Reliance, as you can see here, there you see in this, Arundhati Bhattacharya is of course non-executive director, and of course here you can't call Neeta Ambani independent director, right? So obviously, so that's it. All other people are there. That's it. So here you have again one independent director, that is Arundhati Bhattacharya. Obviously now she has to be independent director, because why? All listed companies require one independent director. Anybody related to the promoter, it's obviously Neeta Ambani can never become independent director, but she can be treated on the board. They can take it on record that she is the woman director of the board of directors. No problem. So basically, if you see, that's how it is to be taken into account. And if you see here, against each person, they have given this. Basically they are members. So if you see here, members of all the various committees, audit committee, many committees are there. These committees are also, we should have independent directors in this committee. Not all, but few independent directors must be there. So if you see, they have given here 5 executive directors and 9 non-executive directors, and there are 0 to 5, 5 to 10, 10 plus. These are all the directors who have been carrying on business in this particular, in this company. So similarly here, members of the board of directors, entire thing, nationality, everything is given here. So if you see Infosys Limited executive, Indian listed company, she's also in Biocon executive director, Narayana Hridayalaya, she's a non-executive and non-independent director. It's like that. She's also got in UB group. She's actually very close friends to Malya. In that Malya, one of the show that happened, no, that big bad boy billionaires. In that she has actually given an interview saying that he's my good friend, and many times we told, but not to do all those things, but eventually this is what it is. So this guy also tenure on the board, everything is given. Chairperson, what is the membership, and the profile also we can check. Nevertheless, this is what I want to tell you, that you need not have a separate designation as a woman director, if as long as you, of course, take it on board. That's it. So coming back to this, any company unlisted with PUC more than or equal to 100 CR or turnover 300 CR in the latest audited balance sheet should have a independent director who also happens to be a woman director. Now, last part. After this, we'll take a break. Independent director, yes, the entire list. For listed company, it is mandatory. How much? 1/3 of the total number of directors must be independent directors. 1/3 of the total number of directors must be independent directors. So if you see, for example, how many directors are there in Infosys? 1, 2, 3, 4, 5, 6, 7, 8. 8 into 1/3. How much? 2.6. Minimum 3 must be independent. So you see the test here. Mazumdar Shah is independent. Michael Gibbs is independent. Sundaram is independent. T-shirt boy, independent. Then Bobby Parikh. So basically they have all 6 independent except these 2. Nandan Nilekani is the chairman. And Salil Parekh is the CEO. So CEO and MD. So of course, all others are independent. Basically the guy who is working is this. All others are KMPs. They are not board of directors. They are KMPs. Key managerial personnel. So Infosys will have a sales manager. Sales manager means, CEO, sales, head of finance, like a finance controller. He will not be a director, but he will be a KMP, key managerial personnel. That's all. So if you see, 1/3 should be, total number of directors must be independent. On the other hand, SEBI regulations say, chairman, if he is not non-executive director and not a promoter, then 1/3. But if the chairman himself is a promoter, Nandan Nilekani is the promoter of Infosys, that be the case. If anybody from the promoter group is there, at least half of the board must be independent directors. In Infosys, 6 out of 8 are independent, more than half. Requirement is 4 out of 8. How many are there? 6 out of 8. So no problem. Similarly, unlisted company. This table, this chart you have to remember. Unlisted company, as I already told you, this is like very, very important. It's there for everything. Audit committee, risk management committee, stakeholder committee, everything same limit. Easy it is. So what? Paid up capital 10 crore minimum, or turnover 100 crore, or outstanding loan, debentures, deposits exceeding 50 crore. Where? When? As per the latest audited balance sheet. It's or. Mind you, here it is greater than or equal to, here it is exceeding. The first 2 things it is greater than or equal to, third it is exceeding. So that is also there, exceeding 50 CR, all that is there. Unlisted, except what? Joint venture, wholly owned subsidiary, dormant company. Joint venture, wholly owned subsidiary and dormant company. For these 3 things, not there. For these 3 things, it is not there. All other things you need. Private company, obviously not needed. Earlier, there was there's still a section called CSR, which required, in a CSR, you need 1 independent director as per the CSR committee. Rule number 8 of CSR said, private company follows 135. They need not appoint independent director. Anyway, ultimately, you leave all this. Basically, there was an amendment in 135 which said, private company need not have any independent director. So, generally, independent director is only required for CSR committee. Now, they said, if a CSR committee is a private company, no need to have any independent director, because private company doesn't require any independent directors. So, this is the entire list. That's about it. So, after the break, what we'll do is, we will check this. Okay, last part, guys, because this intermittent vacancy one is there. This is very, very important, guys. Many times asked in the exam. I don't know what they find in it, but they keep on asking this question again. Like they asked one question, one lady was traveling, woman director, she died. I'm not joking. This is an actual question. She died. So they made her daughter only as the woman director. Is it possible? So any person can become director, but when? Should you see casual vacancy or should you see the rules? Rules. So this is the rule. An intermittent vacancy of a woman director shall be filled up by the board at the next board meeting or 3 months from the date of such vacancy, whichever is later. Whichever is later. So this is the exam. You have to answer this question. Next board meeting or 3 months from the date of such vacancy, whichever is later. Casual vacancy of a woman director need not be filled upon. This also they asked. There are already 2 ladies in the board of directors. One lady died. Should the replacement also be a woman director? Basically, you need to have one woman director. So, and assume it's a listed company. Already one independent director who's a lady is already there. So, do you need to mandatorily fill with one more woman director? No. That was one more question asked in the exam. That's the second point. Casual vacancy of woman director need not be filled by the appointment of a woman director if the company already has another woman director. That's it. The next part we will see after the break, guys. Go have coffee, tea, whatever other hot drinks, hard drinks you want. Yes, we shall. Then after that, the last session, we will finish it off. All right, guys, let's begin. So we'll finish off for the day. So extra shots on independent director. So this is generally they have not asked these things except 1 or 2, which I'll tell you which one. But nevertheless, since it's there in the syllabus, anytime. Page 28. These are some extra points on independent director. An independent director obviously is a person who cannot be a MD or a whole-time director or nominee director as such. Such person should not have been a promoter or related to the promoter or directors of the company, its holding, subsidiary, associate, company, any of these things. So basically, if I take this as an example, Y is the company in which Mr. P is proposed to be appointed as an independent director. So Y is the company in which P is proposed to be appointed as independent director. A, associate company, X is holding company, and Z is subsidiary company. So that's what it is. Y is a company in which it is proposed to be appointed as independent director. So what they are trying to tell is Mr. P, who is proposed to be an independent director of Y Limited, cannot be a promoter of XYZA, holding, subsidiary, associate, or that company, XYZA, cannot be relative of any promoter of XYZA, cannot be relative of any promoter of XYZA, cannot be relative of director of XYZA, everything. Cannot be relative of promoter, cannot be relative of director of this XYZA. So that is the restriction that you have, crazy restrictions. Not only you can't be a promoter, but also what? Can't be a relative, can't be a relative of director also, can't be relative of promoter also. Must not have any pecuniary interest. Now here, same example, XYZA, same example, no change, XYZA, holding company, subsidiary company, associate company, same. Cannot have material pecuniary interest. Pecuniary means financial interest. Pecuniary means financial interest with what? XYZA. Cannot have material pecuniary relationship with promoters or directors of XYZA also. Not only with XYZA but also relatives of XYZA. Means what? What is pecuniary relationship and when? When should I see this? Is it every year? It says that year and the preceding 2 years. 5 years ago if you had, it's okay. That year plus the immediately preceding 2 years. But what is pecuniary relationship? Remuneration or any transaction whereby less than or equal to 10% of his total income is not material pecuniary relationship. If his total income is 1 crore, but he had a transaction with the company for 5 lakhs, then no problem. But if you had a transaction with the company XYZ all put together, if you had a transaction of worth 11 lakhs, then it is a problem. Then it means it is material pecuniary relationship. So what is not material pecuniary relationship? Less than or equal to 10% of his total income is what they say. XYZA, these things are there. Holding company, subsidiary company, associate company, company in which P is proposed to be appointed as a independent director. That is what it is. These things have not come till now, so that's why I am telling it. Institute has a sadistic mindset. If something has not come, that only they'll ask. So you should be, little prepared. So on the other hand, here Mr. P is proposed to be an independent director in Y Limited. Relative. can hold security or interest how much? Face value less than or equal to 50 lakhs, 50 lakh rupees, and or 2% of paid up share capital, less than or equal to 2% of PUC, that is allowed. So basically, if the face value is less than or equal to 50 lakh or less than or equal to 2% of paid up share capital, that is allowed, no problem. Anything more than that cannot hold. In where? In all these companies, same. So basically, the director's relative cannot hold any share capital to the tune of more than 2%. Basically, 2% of the paid up share capital of the company is allowed, more than 2% not allowed. Similarly, no relative has to be indebted to the company or giving guarantee or security to the company, or indebted or giving guarantee to promoters of XYZ also to the tune of more than 50 lakhs. Less than or equal to 50 lakhs is allowed. These can all be MCQ questions. Less than or equal to 50 lakh. Then also here also paid up capital 2%, all these things. And when should I see this also? Same, immediately preceding financial year and current financial year. Company remains the same. Y is the company in which I am proposed to be appointed. Then holding company, subsidiary company, associate company. No change in that. Next, relative, that is Mr. P, again has any other pecuniary relationship with XYZ, including all the previous clauses. All the clauses put together. How much is allowed? Less than 2% of the gross turnover of or income of X, Y, Z or A. So basically, if the XYZ's turnover is 100 crore, correct? So if 2 crore, less than 2 crore transactions they have done with any of these relatives, then no problem. More than 2 crore if they have done, then it's a problem. That person cannot be independent director. Imagine that is P's relative as a transaction of more than 2 crore with the company, P cannot be a independent director. That is how it is. Similarly, now this they have asked. 7 has been asked in the exam. 7, 8. 7, 8, 9, 10. All have been asked in the exam, guys. 3 to 4 marks. 7, 8, 9, 10 has been asked in the exam. So what is 7? Himself. Basically, can you be a relative? I mean, can you be a, employee? No. Can you be a KMP? No. So if you see that person, Mr. P, cannot be a KMP. Correct? When? Or cannot be a KMP or an employee. This is for Mr. P, independent director, proposed independent director. This is for the relative. Relative cannot be a KMP, but relative can be an employee. Relative can be an employee. Relative cannot be a KMP. What is a KMP? Key managerial personnel. That is MD, CEO, CFO, CS, right? And one level below the KMP, also called as a KMP. So basically, if you have the finance controller, if if your finance head, one more finance head is there, finance manager, you have made one designation, that will also be called as KMP. One level below the director, designated as KMP. Basically, if he is a director, then okay. But if you see Infosys, there is nobody in finance here. If you see nobody in finance. So one level below Salil Parekh will be a finance controller. That finance controller also will be called as a KMP. So basically, if, for example, if Michael Gibbs' relative happens to be the finance controller of Infosys, then he cannot be the independent director. As simple as that. He cannot be the independent director. On the other hand, if this t-shirt man's brother is some chilled out normal accountant in Infosys, chilled out life, what do you think? Then he can, of course, he is also, no, yes, so he can be. Now here, every time you are seeing 2 preceding years and all, here it is different. Only here it is different. See, it is from here it is different actually. It is current year and 3 immediately preceding financial years. That's the difference. Current year and 3 immediately preceding financial years. Relative of M, of Mr. P, cannot be KMP. And Mr. P cannot be employee also. When? Current year and also immediately 3 preceding financial years. So it's very, very strict. Apart from that, if you have been a partner of a CA firm and that CA firm is auditing that company, Can you become the independent director? No. So basically, any CA firm in which that person is a proprietor, partner or employee when current year and also 3 immediately preceding financial years cannot be a independent director. This also they have asked. Now they have mixed this with one more thing here. This also they have asked. This is legal firm. If you are a partner, proprietor or employee of a legal firm, but for legal firm exceeding 10% of the gross turnover, correct, should not have earned greater than or equal to 10% of gross turnover. Which gross turnover? That legal firm's gross turnover. If turnover of the legal firm is 10 crore, if they have earned more than or equal to 1 crore from XYZA, then that partner, proprietor or employee cannot be the independent director of that company. But guys, they'll confuse you by giving CACS firm and then they'll say CACS firm has earned 8% of the turnover from 8% of its earning is from this company. So what we'll write? Can become independent director, we'll write, because we'll see that 10%. So don't get confused. For CACS CMA firm, 1 rupee earning also not allowed. If you have earned, then you cannot be an independent director. Only for legal or consulting firm, it is 10%. And when should I see this? Same. 3 current financial year and 3 immediately preceding financial years. So all this have been asked in the exam. 8, 9, 10, very much they have asked in the exam. 7, 8, 9, 10 asked in the exam already. 11 also, 2 times it has come. You are the CEO or director of a non-profit organization. You are controlling that non-profit organization. Can you become the independent director of Infosys? In the Infosys example, let's say Chitra Nayak is running a charitable organization, non-profit organization, and Chitra Nayak is running that organization and Infosys is donating to that organization. Now, can Chitra Nayak become the independent director? You can, provided there is the rule again, same. Should not have received more than or equal to 25% of the gross receipts from XYZA or even from the promoters. So, Chitra Nayak's organization, if it has earned, let's say, 10 crore donation it has received from everywhere, maximum donation from Infosys promoters, Infosys directors all put together should be maximum less than 2.5 crore. Less than 2.5 crore, 25%. If it is greater than or equal to 2.5 crore, gone. Then what do you say? This person cannot become the, Chitra Nayak cannot become the independent director. On the other hand, if Chitra Nayak's company or Section 8 company, let's say she has, Section 8 company, can it hold shares in Infosys? Yes. How much? Should not hold 2% or more of the total voting power of Y Limited. Should not hold more than 2% or more. So it can hold less than that. No problem. So this 2% they have not given, but this 25% they have given in the exam. So that is what they say. Now, there is also a casual vacancy of independent director. So you see here, new independent director should be appointed within 3 months from the date of resignation or removal, as the case may be, of old independent director. A new independent director was disqualified under 149(6). So that independent director had to vacate office. Where 149(6), disqualified because of any of the provisions of 164. Even if you are independent director, you have to follow all the provisions of directors. Disqualified under 164. Now, what happens? How can the new independent director be appointed? Within dash. What do you think? So guys, very interesting to know. This is only for resignation or removal. I told disqualified. This is only for what? Resignation or removal. Removal obviously under 169. Resignation under 168. So if you are removed as a director, obviously you'll be removed as an independent director. Obviously, goes without saying.
3 months is only this. What about normal like disqualification, etc., vacation of office then? Same as woman director actually, correct. Here woman director we saw, no? That's why I said that is important. This part. This one. This. Next board meeting or 3 months, whichever is later. Same applies to independent director for other than resignation and removal. All given in the rules, guys. Rules. Other than resignation and removal. Same applies to independent director for other than resignation and removal. Resignation and removal, just 3 months. No, whichever is later and all is not there. Here it is 3 months or next board meeting, whichever is later. One simple MCQ question they can ask you. They can say that fellow is disqualified. How will the vacancy be filled? First one will be 3 months. Second will be 3 months or next board meeting, whichever is later. Outside you will comment, that was for woman director. They are simply confused. Correct? We will come and tell outside. Correct? That's the problem. So we should be very careful. These are all tricky MCQs. They can ask this MCQ anytime. MCQs out of 30 marks, around 10-15 will be easy, 10-15 will be tricky. That is always the case. In the previous attempt, MCQs also were tricky. So we should be alert, careful about all these things. So generally from these areas questions will come. Then no stock option for independent director, but he can get remuneration, sitting fee and profit based commission, no problem. But stock option is barred. He will not get any stock option as such. Now this is also important. Appointment and removal of independent director. He can be appointed from 2015 to 2020 example for 5 years at a time. 5 years at a time, or the act uses the word up to 5 years. Correct? So what is the cooling period? 3 years. Is it after 5 years or there will be 2 terms? 2 terms of up to 5 years each. One exam question they had asked, that fellow was appointed for 2 terms of 1 year each. 2 terms of 1 year each. Then the company said cooling period. That fellow said, what cooling period? I just came. 1 plus 1, correct? So there is no cooling period. So advise. That's the question. What do you think? So the independent director feels that only 1 plus 1 only has done, is not even done 5 plus 5, 10. So he can continue. Answer. Right. The independent director should control his feelings, because the question said the independent director feels that. So he should control his feelings. So what is the law? It says up to 5 years. Up to 5, 2 terms of up to 5 years each. Up to can be 1 also. 1, 2, whatever it is. So here it is what, guys? 3 years cooling period is mandatory. So 1 plus 1 you do, then 3 years cooling period is 100% mandatory. Right? Now, can you remove this fellow before 1 year before the, what do you say? Any time before the expiry of his term? Yes. Any director can be removed. We have seen ordinary resolution in general meeting, removal. Second term, interesting to know, second term appointment, they have given special resolution. For the second term appointment, it is special resolution. So to match that, even for removal, they have made it special resolution. So simple rule, first term up to 5 years, appointment is ordinary, removal also is ordinary. Second term for up to 5 years, appointment is also special, removal is also special. Removal also special resolution. Very simple. 3 years cooling period, done. Every independent director in a company on 112 shall within a period of 13 months. These are all the things. Now, because of one scam that happened, ILFS, Infrastructure Leasing Financial Services Scam, whereby independent directors also were caught napping. They said enough is enough. For you also entrance exam now, like CPT, foundation, you also have to write. So there is something called Institute of Corporate Affairs is there. There you need to write the exam. So your name will be included in the data bank. So once you enroll there, your name will be included and you have to write the exam. That exam is online proficiency assessment exam. MCQ question, for how long will it be? I mean, within a period of when you should do, within 2 years. From the day your name is included, within 2 years is what they have to tell. Passing criteria, same. Aggregate 50. Earlier it was 60. Then they said in CA only we didn't do 60. So they made it okay 50%. No limit on attempts like CA only. Keep on writing. Right? Correct. So even after getting independence from CA, again one more test for it being independent director. Yes, this one. No limit on attempts because they said as a independent director you should have financial literacy. Otherwise there is no point. So you should have, even though you are a tech guy, you should know how to read the balance sheet, etc. So that's why this examination is needed. An individual shall not be required to pass the online proficiency if he has served for a total number of, now tell me guys, for that Yuri Levine, will you go and ask him to write the exam? Will you go and ask Kiran Mazumdar Shah to write exam? No, that's why this is there. If you are already for a period of 3 years, as on the date of inclusion, if you are already been a director or KMP as on the date of inclusion in any listed public company, Kiran Mazumdar Shah, or any unlisted company with paid up capital 10 crore or more, big company, or any body corporate listed on any recognized stock exchange in a country is a member of the FATF, that is Financial Action Task Force. Once this September 11, all this bombing happened, this Twin Towers, when it collapsed, 9/11, when the Twin Towers collapsed, then they decided that, what is this happening? So immediately next, in 2001 it happened, no? So they created this Financial Action Task Force, USA and all other countries, saying that, what is this? It is impossible that somebody else, terrorist, could carry guns, highly educated pilots, carrying all these things. How is it possible? So we should create one FATF, Financial Action Task Force, to combat terrorism against all the countries. Pakistan was the chairman. No, Pakistan was not part of the FATF only. Correct? FATF, not their part only. Obviously, it was obviously against Afghanistan, Pakistan and all those things. Nowadays, we are seeing, in Pakistan only bombing is happening. Work from home, yes. Happens. So, financial action, task force, happens. Everywhere work from home, no, obviously. Yes. Plus, regulator of the, you can see, poor guys, they are also dying there. So, on money laundering. That's why, if you remember, immediately next year, PMLA came, 2002. Was that time. So, Prevention of Money Laundering Act, regulator of security. So, in these countries, if you are already, in those countries, a list of countries, all the developed countries, developing countries are there. In those countries and, in those bodies corporate in those countries, in listed stock exchange of those countries, if you have been a director, no need to write the exam. Similarly, any bodies corporate incorporated outside India with a paid up capital of, more than $2 million. Any statutory corporation set up by a separate act of parliament, that is one part. On the other hand, if you are getting a pay scale, these are government directors. In any ministry or department, you are getting the, pay scale, same pay scale as a secretary of or government officer, etc. Then also not needed. Apart from that, if you are getting a, in the pay scale of a chief general manager in the SEBI, if you are getting that money, or IRDA, Insurance Regulatory Development Authority, then also not needed. These are some of the points. Apart from that, in calculating 3 years, an individual was acting as director as a KMP in 2 or more companies, etc., shall only be counted only once, obviously. So, whichever company, in one company you are already there for 3 years, in other company you are there for, in one company you are there for 2 years, other company you are there for 1 year. It's not 2 plus 1. You should just take one company is what they are saying. Now, these people, thankfully, are not required to pass online proficiency exam. Who? For at least 10 years, they have been an advocate of a court. Advocate is the word. It's not saying lawyer. Lawyer is a person who has written the law exam. He's passed the, he's got the Bachelor of Law degree. Who's an advocate? Bar exam. Bar means that bar, not this bar. So, where you have the registered practice, for that you should write a bar exam. So, that exam, if he has passed, is called a barrister or an advocate, where he can now represent his clients in front of the court. For at least 10 years in practice as a chartered accountant, 10 years in practice as a CA. So, cost accountant also, company secretary. These people need not, right? So, mind you, in practice, not chartered accountant. For me, I am not in practice. I am a consultant. I don't have a COP. For consultancy, best part is you don't need a COP. So, for me, should I write the exam? Yes. Why? Because it's only what? At least 10 years in practice. It's not 10 years after clearing or 10 years after your first attempt, all that, not that. So, it is 10 years in practice as a CA. So, shall not be required to pass the online proficiency self-assessment test. Now, in this, they had asked, and there has been like 1 or 2 additions in this. Let's just see. For May 23, November 23. So, yeah. This is one addition, very simple. Any individual whose name has been removed from the data bank may apply for restoration of his name. Earlier they used to remove because they used to fail and all those things. They used to remove the name, and then again the full process had to be followed. So they went and said, please give us some exemption. So it's very easy, guys. His name shall be shown in a separate restored category for a period of 1 year. So if he gives 1,000 rupees fee, his name will be restored and it will be there in the for a period of 1 year from the date of restoration, within which he shall be required to pass the online exam. And thereafter his name shall be included in the data bank only if he passes the online exam. So this is restoration of name. Only MCQ they can ask you, how many years? 1 year. From which day? From the date of restoration he shall be required to pass online examination. Fee is 1,000 rupees. In case he fails to pass the online self-assessment test within 1 year from the date of restoration, his name will be removed again and he shall be required to apply afresh. They said no, within 2 years you have to pass. If you don't pass within 2 years, they'll remove your name. Again, you have to, the entire process was there. That's why they went and requested, please restore my name. So paying 1,000 rupees, they'll again restore your name. Within again 1 year, you need to write the exam and pass. If you don't do it, again it will be removed. And once you removed, again nothing like that. They say it should be applied afresh. Should be applied afresh. So that's about it. That's all simple areas. So if you see this, however, tell me one thing. If I appoint this independent director, let us say this guy, his term is over. T-shirt guy term is over. I am appointing the T-shirt guy for one more term. Ordinary business or special? I am appointing him at the AGM. Appointment of this director at AGM. Ordinary or special? Ordinary. Reverse the gut feeling. Yes. So it is special business. Yes. Ordinary is only for retiring. So if you see, the wordings are also very clear. That wordings are important, though it is CA inter syllabus. We will see. CA inter. 1 second. Yeah, here. If you see here. Appointment of directors in place of those who are retiring, which means what? Only 150 to 6. 150 to 6 directors are called ordinary business. All other things are special business. So even if I am appointing a new director, fresh director, that is also special business. Only ordinary is what? That rotation mechanism. 2/3, 1/3 of 2/3, 1/3 of 2/3. That is only ordinary business. Very clearly given. Appointment of directors in place of those who are retiring. So yes, whether you are appointing him for the first time, second time, whatever it is, it should always be what? What do you say? Special business. So if you see here, that is what this chart talks about. Independent director appointed for the first time at AGM, special business. Independent director appointed for second term at AGM, special business. What resolution is needed? First term, ordinary. Second term, special. We just saw. What notice? Okay, what about removal of this guy? Removal, first term is ordinary. Second term, special. What notice is needed? As I told you, it's just independent director appointment, 160 notice. 160 notice. Appointment of director. Right? And this is a notice that they'll give to appoint him. On the other hand, because every independent director also has to go through the same mechanism, 152 to read with 160. For the second term, same thing. Removal of independent director. See, removal of independent director at the AGM before completion of the first term. Special business, ordinary resolution, special notice. Why special notice? Special notice is needed for removal of director before expiry of his term. We just saw it today. Removal of independent director at AGM before completion of second term. Same. Special, special. In all the 3 cases, it is special. There is also special resolution is needed. Appointment of new directors at AGM in addition to the ones who are retiring. I told you, it is special business. Only appointment of new directors in place of those who are retiring are ordinary business. all these things. And auditors, you leave that you can go through. So that completes actually the entire cluster number 2. 1 and 2 are done. So 3, if we do, tomorrow nobody will come. So let's not do 3. It is little deadly. It's like it requires a lot of concentration at this juncture when there is no obviously it's tapering, so there's no point in doing. It's dangerous. It will be waste. See, for me, recording is secondary. Other people may concentrate only on recording. They'll not see. For me, it's always face to face. In fact, my direct tax also I wanted to do, but I don't know my travel plan, so I'll have to do it later. I'm not sure. Otherwise, I would have announced one marathon for direct tax also. But as I told you, I have to travel the next 3 days. So the travel plans are not very sure as of now. So I don't want to risk it. Simply calling and you will first trust me and stay back. Then you will come here, then Naleba will be written. So dangerous. So that's why let's not, if I'm not sure about when I'm, here in Bangalore, it's difficult. That's why. Let's, because in CA, it's all about trust, if you see, anywhere for that matter. So there is no guarantee. What's the guarantee I'm a CA? No guarantee. Can you prove it to me that I'm a CA? No guarantee. Simply I've come, maybe my initials only is CA. You never know. It's all based on trust, guys. When I announced this class, many people have come from, I got to know from Andhra, Kerala, Chennai and all that. So it's purely based on trust. Today there was no guarantee that also I would come here. That's what. So it's all about trust. So ultimately it's all boils down to that only. Anyway, so come to this, guys. We'll finish this. Not finish, we'll start off. Board meetings. Cluster 4. Easy it is. Very easy. Cluster 4, board meetings. Board meetings of different companies. Little bit we'll do. Basics. Board meetings of various companies. So board meetings is a very, very important cluster. There is no question paper without a question on board meetings. No question paper, because paper setters are CAs or company secretaries. Company secretaries. Generally, company secretaries set papers. So they have 20, 25, 30 years experience and they will be setting papers, and the issue which is closest to their heart is board meetings. So they will give question on board meetings, and sometimes they'll go overboard and they'll give some bouncer questions which nobody can answer. So we need to be ready with that also. Like once they had asked a question, the video recording was lost. What to do? I'm not joking. 4 marks question. The video recording of the board meeting was lost. What to do? I racked my brain, saw everything everywhere. I did not find it. It was a very, very practical question. General question. What to do? Suggested answers I saw. It should be kept safely. First, I'm not joking. They suggested answers. They also didn't know what to answer. It should be kept safely. Second, if it is, you should ensure backup is there. Full BCom answer they're writing. I was also shocked. So like that, little mental fellows will be there, paper setters. Sometimes they'll ask this question. Nothing can be done. Suggested answer, seeing that I was also shocked. I thought some regulation and all they'll put. Because I searched, I could not find anywhere. None of the regulations. By the way, this this thing, cluster 4 board meetings. Tell me one thing. You have, okay, accounting standards are mandatory or what according to you? Accounting standards. So as I told you, institute is so stupid in even considering removing law. Everything is actually part of company law. Without company law, there is nothing, to be honest. Accounting standard, whatever FR you study, it's fully waste if this item was not there. I'm not joking. If this one line was not there in Companies Act, entire FR subject only is waste. Because it says the items contained in such financial statement shall be in accordance with the accounting standards. And if it's not in accordance with accounting standards, if you see this, subsection 6 also, it says that you should obviously give the reasons for the this one 5. You should give the reasons for the deviation and explain everything. Basically, accounting standards is mandatory, and of course the board also in the board report. The board also should clearly mention that the financial statements etc. have been prepared in accordance with the accounting standards. Clearly, applicable accounting standards had been followed. And last but not least, auditor also in his whatever he tells, he will say that yes, that as per the financial is as per the accounting standards laid down. This is also giving full build up, suspense. Okay. Suspense. So anyway, it will come. So if you see, that is also same thing they are telling here also. Everywhere it is the same discussion that ultimately if everybody, whatever you tell, even 143 for that matter, here as you see, yes, to and Fairview, proper books of accounts have been kept, and here they are in agreement with the books and comply with accounting standards. Why I told about accounting standards is one part. You said accounting standards are mandatory, fair enough. What about standards on auditing? Mandatory or guideline in nature? Guideline. Reverse the gut feeling. Yes. You see, because of this one line, you are studying auditing only because of this one line. See, every auditor shall comply with the auditing standards. So you have to. Earlier it was guideline in nature. You are right. Before 2013 it was guideline in nature. So it is also mandatory. But for these company secretary fellows, there is one more thing called secretarial standards. Secretarial standard SS1, SS2, SS3. Right? Secretarial standards are there. In that 1 and 2 is board meeting and general meeting. Now SS1, is it mandatory for chartered accountants to study, or is it mandatory for, or is it mandatory for company to follow secretarial standards, or just the company secretary should follow it? Basically, for the company secretary guideline, it's for him or it's for the company? Company secretary or company? Company secretary, some people saying company. Some people are just taking company. It's a common thing, no? Then later we'll see secretary or then. Common point we'll tell first. Here also, there also, both are the same. So you see 118 subsection 10, guys. That is what? Every company shall observe secretarial standards. Observe means not just observe, actually follow. Yes, shall observe secretarial standards with respect to general and, or with respect to what? General meeting and board meeting. They are not talking about SS3. SS3 is dividend. Only SS1 and SS2, right? That is what it says. Very simple. Has to follow. Now 118.3 is also 118. This subsection 10, that is also covered in the entire scheme of things. So I need to follow that also. Now, as a chartered accountant, should I follow secretarial standard? Yes. So when I say board meetings, cluster 4, SS1, SS2, both also will be very much part of the syllabus. It is very much part of the syllabus, but wherever is required, I have already added. So that's how it is. Wherever is required, we have already added. So that's the thing. In cluster 4, it is divided into 2 mini clusters. First mini cluster, you will be shocked to know only 3 sections. 174, 175, 176. Okay, 173 also. 6 will remove. Only 3. 173, 174, 175. One question guaranteed in this. 100%. Because this is to be read with what? SS1, SS2. 173, 174, 175 should be read with SS1. So guarantee one question will come. Apart from that, the next set of questions they'll ask is 176, 177, 178, 179, 180, 181, 182, 183 till here. So this, in these sections, one question will come. Pakka 100%. So actually 2 questions will come from cluster 4. One is from 173, 174, 175. One more is these areas. So since this is the end of the session, what we'll do is some lighter things we will finish off, because these things again will require concentration. We'll stick to this cluster only, but some chilled out stuff. We will see this one. 176 onwards here. Easy ones. Here. Page number 60. These are easy. It's, you can finish it off. So towards the end of the session, it's difficult to maintain concentration. So we will, discuss the easy ones, which doesn't require so much of analysis, but it is important. Defects in the appointment of directors not to invalidate the actions taken. So here it talks about DDT, defect. It talks about defect. It talks about, termination, and disqualification. Yes. So if you see, acts done by the director shall be valid even though after it is discovered that his appointment only was invalid due to any defect or disqualification, or his appointment was terminated by the act or articles. So D is defect, one more D is disqualification, and T is termination. So basically what they are trying to tell is, you have been appointed, no problem, but the thing is later they came to know that your appointment did not happen properly. For appointment, let's say notice has to be sent. Let's say special resolution you're requiring, that second term you're coming up. So that time notice was not sent. Even if it was sent, it was not mentioned that the intended resolution is special. They did not notice it. So now the problem is your appointment is actually defective. What happens to the actions that you have taken bona fide in good faith? Will it bind the company or not? That is what 176 talks about. Interesting to note that the director is here, company is here, outsider is here. There is a defective appointment. Nobody has realized it. Basically, when procedure, there is a problem. Bona fide, it's not some illegal appointment. Bona fide appointment only, but the problem is there's a problem in the procedure, procedural lapse, and it's a big problem. Obviously, the appointment is not valid. It's defective. So, this fellow would have done some, activities with the outsiders on behalf of the company, buying, selling, whatever he have done, only for the company, not for his personal stuff. The question is, 176 talks about binding powers, protection. Protection for outsiders, or it talks about relationship between director and outsiders, or between company and directors. Company and directors, or directors and outsiders? Directors and outsiders are always protected by a concept of doctrine of Indore management. Royal British Bank versus Turquoise, popularly called as the Turquoise rule. If you have represented yourself to be a director and if you have done anything for the company, outsiders, I don't care what you have done, outsider will always be protected. Director may be a director, may not be a director, it always protect the outsiders. Unless outsider also committed fraud, then Indore management will not apply. This section 176 talks about this. Will it bind the company or will it bind the director? The act says if there is any defect, disqualification or termination, until the company comes to know about it, it binds the company, not the director. It binds the company. Means all actions of the director are valid. All actions are valid. So if you see, acts done by a director shall be valid through, though afterwards it's discovered that his appointment was invalid due to any defect or disqualification, or his appointment was terminated by the act or the articles. Appointment was terminated by the act or the articles. So, no problem. Even if it's terminated, his tenure is over, is still continuing, nobody realized. Genuine mistake. The moment you come to know, from that day you should stop. This will only validate those actions which you did bona fide without knowledge of the defect, disqualification or termination. Let's say you are an alternate director. You still believe that original director is there abroad. Let's say he passed away. The news of his death reached some 3-4 days later. What happens to the acts done during those 3-4 days? Valid. But the moment the news of death comes to you, from that day, it will not bind the company. You should immediately vacate. Correct? It will not bind the company. So if you see, his appointment was terminated by the act or articles. So any defect or disqualification. So, however, the acts of the director shall not be valid if his appointment is shown to the company only to be invalid or terminated. That is, the moment you come to know it is invalid, from that day, acts are not valid. Section 176 validates the bona fide actions of the directors done in good faith and without notice that these things are done illegally. The company shall be liable for all the acts of such director. Third parties are already protected by doctrine of Indore management. Acts of a director shall not be valid when the appointment itself is illegal. You knew only that your appointment was illegal. In one case, what happened was, they realized that they are not appointed only. So he and the company secretary wrote certain documents and did a retrospective appointment. Now that obviously is invalid, because you know that it was invalid, and whatever you did prove that you are doing something illegal. So where there is no appointment at all these things are ultra vires, means beyond the powers of the act. It is not an irregular exercise of power, but an exercise of power by a person who had no authority at all. This only binds acts of the director, not acts of the chairman, etc. Yes, for example, casting vote of the chairman are not valid if his appointment only is invalid. So casting vote of chairman will come only when there is 50-50 voting, casting vote he will put. So this section validates the actions done in the capacity as a director. Acts done in the capacity of MD, alternate, etc. are already dealt in 196.5, which we'll be seeing in cluster number 5. So basically this is basic powers, very easy section, 176. Coming to 179, powers of the board. We have already seen two-tier management system. The shareholders' powers are clearly given by whom? By the Act, memorandum and the articles. Whereas the board's powers, nothing is given. Who will, what will be the board's powers? Board only will do the needful. So that is what it is. Whereas the members can pass resolutions also restricting the powers of the board. All that is all some general stuff, no problem. But this is again interesting. These are the items which should only be passed at the board meeting. I told you, one question they asked, 8 marks question, only once. They will not ask those questions again like that. What are the areas which only can be passed via board meeting resolution? These areas. Make calls, authorize buyback, issue securities. But as we have discussed, point number D, E, F, yes, can be delegated. Point number D, E, F can definitely be delegated. To approve the financial statements and the board report. To approve the financial statements and the board report. So, generally you should know this structure also, which is the correct procedure when it comes to approval, etc. First, the approval will happen, then auditing will happen, then everybody will sign, then will it be circulated to everybody, and then finally it will be adopted at the AGM. Is it like this? Or audit will happen and then the final approval and then signature, circulation and then adoption, or they'll first sign only everything, then they'll audit, then they'll approve another thing. This obviously is wrong. So which of the two is correct? Second one, first one. First one is also superbly wrong. Yes. So the actual answer is what? First they will approve and then you will authenticate. Authenticate means sign. And then they will send for audit. But they have also realized that in auditing, obviously when you go, they keep on sending every day, every day, this is the final, this is the final. They understand that you can start your work before this approval happens, no problem. The standards also say that you can start. But ultimately this is the structure. And of course what happens? Then it will be circulated and then finally it is adopted. Now the question is, this is the final structure. This approval happens under 134.1, then it will be signed, authentication. This will be your auditing provisions anyway. Now why I asked you this is, when are the accounts final? Can you lay unaudited accounts? Can you lay unaudited accounts to the shareholders? Or it should be audited? It should always be audited. There is a sequence of sections which we have to see in regular class. We've seen it. Now it's not needed. But that's the conclusion in one line we can finish. Can you lay unaudited accounts or it has to be audited? It has to be audited. You cannot lay at any point of time unaudited financial statements. It has to be audited. So if you see here only there is this dialogue. You cannot lay at any cost unaudited accounts. You see the heading of 136 only says copies of audited financial statement. It has to be audited financial statement. Unaudited accounts not possible. So similarly, last part here, when are the accounts final then? First of all, we told audit has to happen. Can you lay unapproved accounts? No. Accounts have to be approved. Accounts have to be approved. So when the company will give true and correct accounts, and I should tell whether it is true and fair, or the company should give true and fair accounts and the auditor will tell it is true and fair. Company will give true and correct and I will tell it true and fair, or company only has to give true and fair? Company will give true and fair. Yes, company should give a true and fair view. If you see books of accounts, here only they say every company shall prepare books of accounts which will give a true and fair view. So again, coming back to the same question here, can you lay unaudited accounts? No. Can you get true and correct accounts? No, you should get true and fair accounts. How will the true and fair be certified? It will be certified by the board. So basically, this is one part of the story. This is the second part of the story. Then is adoption, at the AGM, what happens? Adoption happens or what? At the AGM, there were 4 points we told. One is dividend, one is director, one is this thing, what do you say, auditor. What is the fourth one? Adoption of accounts. So can you what do you say, file? We just saw in 164 filing of financial statements. Those filing of financial statements, can it be unapproved? No. Can it be unaudited? No. It has to be approved and audited. But my question, that filing of financial statement which you only told me within 30 days and which form, AOC4, can it be unadopted? Which means is adoption required in the AGM. So you see 102, nowhere it says adoption. It says consideration of financial statements. Consideration of financial statements. Right? So consideration means what? I am placing it before you. You see, if you feel it is worthy of adopting, you adopt. But if I consider and if I do not adopt, should I file unadopted accounts? Yes. Law says unadopted accounts have to be filed under 137 until they are finally adopted. Eventually they have to adopt it anyway. So guys, simple question. The question was, when are the accounts final? All the AAA points should happen. One is approved, then audited, then adopt. Only then it will be final. Otherwise it will never be called as final. So it is mandatory for us to follow that. So that is the meaning. When I am approving also here, it should happen what? It should happen via board meeting resolution. It should happen via board meeting resolution. Next, to diversify the business, approve amalgamation, take over the company, political contribution, all those things are there. Now, DEF clauses can be delegated to managing director, principal officer, committee of the board and all those things. Clauses D, E, F can be passed via resolution by circulation and section 8 company. Clauses D, E, F can be passed via resolution by circulation in section 8 company. D, E, F can be passed via resolution by circulation in section 8 company. So their board meeting resolution not needed. Then what about if the company is opening a current account? Is it borrowing money? No. Is it investing funds or giving loans? Company wants to open a current account. If you have seen, the banker will say, sir, give me board meeting resolution. Correct? So he'll say, yes, sir, I'll make it and give. 2 minutes. Correct? Right. So when you are writing the board meeting resolution, you'll write 179.3E or 3F. So you'll write 179.3. It's understood. E and F, they'll only figure out. But is it E or F? Is it investing the funds or am I granting loan to the bank? Interest-free loan, basically. This issue went to MCA. They said it is like granting a loan. So the board meeting resolution should say as per 179.3F. Sometimes they'll also ask you to draft resolutions. Correct? 3 to 4 marks. In the old syllabus they used to ask, new syllabus little less. But again, institute can anytime ask, draft a resolution for this. So that resolution, when you are drafting, you should say resolve that according to 179.3F. Opening a bank, I have given it, point number 14. Opening of a current account by a company with a bank amounts to making of a loan within the meaning of 179.3F. Under section 117 of the new act, all resolutions under 179.3, not 173.3, 179.3 should be filed with ROC in form MGT 14. So whenever any special resolution is passed, MGT 14 will follow. Whenever any special resolution is passed, MGT 14 will follow. Similarly, whenever all these provisions are there, no, 179.3, all these provisions. When any board meeting resolution is passed, what will follow? MGT 14. You have to file the form MGT 14. So MGT 14 is required for 2 things. All special resolutions and all board meeting resolutions under 179.3. All these board meeting resolutions you have to still file MGT 14. MGT 14. So these are all the various things that we have seen. 1 or 2 points and we'll stop. Enough for the day. So next is what do you say? This will donations. This part again will require some, inputs from me, and now it's not the right time. We'll do everything tomorrow, no problem. Now, the last is easy, guys. Donations 181, 182, 183. 181, 182, 183 donations. So 181 charitable and other bona fide funds. Charitable and other bona fide funds. See, it says other bona fide funds. They asked in the exam once, can I give it to, can Reliance donate to Reliance Employee Welfare Fund? When I say other bona fide fund, should it be non-employee related or it can be employee related also? It can be employee related also. In the old act, it said charitable and other funds excluding employee funds. In 2013 act, nothing like that is there. So Reliance, when they are donating it to Reliance Employee Welfare Fund, it is very much part of 181 allowed. Less than or equal to 5% of net profit, board resolution. More than 5% of net profit, ordinary resolution in general meeting plus board resolution. This is as per 181. This also is asked in the exam. Net profits will be as per section 198. They will give you a net profit figure. They will say they want to donate to these many funds. So you need to just compute 5% of net profits and see whether the donation that they are giving is less or more. If it is more, ordinary resolution plus board resolution. If it's less, simple board resolution. This also was asked. So this combined with the CSR, 2% of the average net profits of the last 3 years, CSR provisions. 135, CSR, 2% of the average net profits of the last 3 years has to be followed. That also is there. Then 182 and 183. 182 and 183. 182 is political contribution. Political contribution. 183 is the National Defence Fund. Any amount can be given. And this is a very peculiar and interesting wordings they have given. Even if anything mentioned in the any instrument also means loan agreement. Loan agreement says, ICICI Bank loan agreement says you cannot donate to anybody. Can I still donate to National Defence Fund? Yes. This overrides even loan agreements. National Defence Fund overrides even loan agreement. This was asked in the exam recently. They said one of the, banks had given a loan with the condition that you cannot donate it to anybody. So can you donate it to charitable funds? No. Can you donate to political contribution? No. 135? No. Only what? 183, National Defence Fund, possible. The CSR is your auditing provisions. Anything that you do as per the CSR policy, 2% of the average net profit of the last 3 years, you have to do. If it is more than that, you can do. Less than that, not possible. More than that, if you do, can you carry forward also the additional benefit? Yes, it can be carried forward. More on that, you would have studied in auditing. Coming to political contribution, in 1956, it was 5% of net profits. Then in 2013, they ensured that this will be more. So they made it 7.5% of net profits. Then in 2017, they wanted more and more funds. So this 7.5% also was removed and they made it any. So now it is any amount. Apart from that, there is also an electoral bond, which is a scheme that is launched by Arun Jaitley. So electoral bond scheme. What can you do? Any company can go to any bank, SBI, and donate, let's say 10,000 crores, assume, and they can get electoral bonds worth of 10,000 crore. And that 10,000 crore they can distribute to any political party. Should they disclose where they are distributing? No. Should the political parties disclose who distributed to them? No. Right? So one was 5% removed, 7.5% removed. Now it is how much? Any amount. Any amount you can give directly, or this any amount should be given by cash or check. Check. If you don't want to give any amount randomly to political party, better option to hide everything is what? Electoral bond scheme. As of today, this is still lying in the Supreme Court based on the they are saying it is unconstitutional. The entire electoral bond scheme is unconstitutional because you had this only because here you have to disclose everything. You have to disclose who you are giving to, etc. In this you are telling only you have to disclose how much you bought, but need not disclose to who you gave. So electoral bond scheme, it is still lying in the Supreme Court as of now, but it's still being implemented. So this is the one more thing, and the political contribution front, electoral bonds. So couple of things that they can ask, and this is the last part, we'll stop here. So a couple of things they can ask here, they have asked also in the exam is, can government companies give donation? No, government companies need not give donation. It's barred for them. And any other company existence for less than 3 financial years are prohibited to make any political contribution. Donations in this section are in addition to the limit specified in 181. So in 181 also you can give amount. In this section also you can give amount. 181 charitable funds. So this 5%, I've already exceeded 5%. So can I give it under this section? Yes, no problem. Any donation to any person who is carrying on any activity to affect public support for a political party is also deemed to be political contribution. So any amount to Vishwa Hindu Parishad, Bajrang Dal and all these things, ABVP, all these associations, voluntary associations and also affiliations, it will apply. So any expenditure incurred on advertisement in souvenir, brochure, pamphlet, etc., that also will be covered, part of the deal. So such contributions should be disclosed in P&L account, giving particulars of the total amount contributed. Contribution shall be purely in the account payee bank draft or check. So any company which contravenes, which may extend to 5 times the punishment, and the officer in default also will be there. That's fine. Any souvenirs also you can do. But what about let's say newspaper, some NDTV is owned by, let's say, Adani. Now if I have my advertisement, Adani or any other company puts their advertisement in that Adani, in that NDTV. Now is that political contribution? No. So political party may publish any number of souvenirs on any occasion, and section does not prohibit advertisement in newspapers, periodicals and souvenirs, whether published by political party or anybody else. That's what they're saying. Applicability of this section would depend on the facts of the case, whether it's a genuine advertisement or whether it's a donation in the guise of advertisement is what this particular section says. So that's about it. So in the next class, what we'll do first and foremost, we will 184, 185, that is the deadly area, this cluster 3. It will take 3-4 hours. We'll finish that, and after which we will do cluster 4. We finish that 4 remaining, cluster 6 is also very important. 4, 5, everything we have to do, but at least it will go faster. The real deal is these things. So we will finish, guys. So I hope you are able to understand today, yes or no? Awesome, guys. So let's make others jealous. Make some noise. Make some noise. Yeah. Awesome. Today we'll post and make other people jealous. Yeah. Alright, guys. Super. So tomorrow 8 a.m. Okay. Tomorrow 8 a.m. and we'll continue till whatever we finish. The target has to be finished. Okay. Alright, guys. See you tomorrow. Alright, buddies. Good morning. Awesome. How are you doing? Slept well? Yeah. Awesome. Good. You have to sleep well. That's all we need in life. Okay. So let's begin, guys. It's sharp 8 o'clock. Good. So now we will be discussing the very important cluster of cluster number 3. 4 marks, 8 marks, 12 marks, 1 or 2 attempts, 21 marks and all came from this. Right? So it is a very important cluster. It's little, annoying. So we'll finish it off in the first half. Annoying in the sense, too many things to remember. That's the only thing. Cool. So it's easy though. Don't worry. So let's finish. Cool. So section 185. Before that, we'll see page 35. That is section 166, duties of the director. So a director shall act in accordance with the articles of the company. So basically, articles of association, the most important things. Whatever he does, he will act according to the articles. Director of the company shall act in good faith and promote the company's objects and always work in the best interest of the company. All that is fine, but the most interesting thing is 4 point, which is he will not involve in a situation in which he may have a direct or indirect conflict of interest. So basically, can he enter into any contract where he will have a conflict of interest? No, he should not. And even if he does, there should not be any undue gain or advantage either to himself or to his relatives, partners, etc. So if he enters into a contract with the company in which he is interested, in what way is he interested? Financially interested, managerial interest, whatever it is, which means common directorship. He also has a shareholding there.
Can you enter into a contract and make some money? Ideally, the law says no, don't make money, but you can make some money if, even if you make some money, it says that you please need to disclose. So that's the entire crux of the story. That is one part of the story. Here, it's what it says here. Coming back to this here. 166 4, 166 5. 166 4 says do not have any conflict of interest. And 166 5 says you should not have any undue gain directly or indirectly. No undue gain. But if you do so, law is telling please follow 4 sections. That is what we are going to do today. 184, 185, 186 and 188. 184 is what? Disclosure of directors' interest. 185, loans to directors. 186, intercorporate loans and advances. In intercorporate advances. Then 188 is RPT, related party transaction. So that's all there is to it. These are the 4 areas in this cluster number 3. 184 talks about what? Of course, then after that, there has to be what? Disclosure in the board report under 134(3)(G) and H. Disclosure in financial statements. And the third one is auditor's report, CARO. So these 3 things we have to keep in mind. Basically, you will have to disclose. The management will disclose in the board report anyway. And the management will again disclose in the financial statements. And of course, the auditor has to report in CARO. Clause 3, 4, 13, all these clauses are there. In that he has to report clearly. So, in fact, this is an ignored section in such a way that even institute had to release a guidance note because members were not following it. Because now, if you don't follow, members don't follow, it will result in what? Penalty, huge penalties. That's the reason why it has, even practically, it has become very important. We know how we do CARO report, right? Yeah, CARO report we have done. Yes, we know how we do it. So we'll go to the boss and say, boss, we have to sign the balance sheet. That fellow will say, bro, where is the CARO report? Sir, 2 minutes I'll come. Maggie noodles, 2 minutes. So control F, search, find old company, replace with new company and give. That is what was doing. But the thing is, the 3 clauses of CARO, we have to report on this. And if you don't do it, prosecution, more than prosecution, your penalties and all will come. So a dangerous section. That's why it is very important. So I've been doing many talks for the members. I've done on this topic only. So people will think I don't know any other topic other than this. Because everybody will ask this topic only. What will you do in Companies Act? Sir, what do you want? No, we have no clarity on loans to directors. Can you do? So in every session, this only will be doing. Because people do not have clarity on this in this area. That's why in the exam also it has assumed importance even in auditing as well as law. Anyway. So basically guys, this is what this entire section talks about. Now, interesting to know that loans to directors, all those things, whether you have to give loans, not give loans, all that we will see. So yeah, moving on, ideally speaking, there is this, as far as giving loan is concerned, yesterday only we saw 179(3) D, E, F. D is borrowing money, E is investing funds, F is granting loans. Under 179(3)(F), it says that board, I'll just write here. Under 179(3)(F), board of directors through a board meeting resolution can, of course, grant loans. However, as we have seen, it can be delegated to a managing director. On the other hand, there is one more section, 186, which speaks about, loans, guarantees, advances given to any person. So you can give it to any person. And there, what is it? It can be given to any person. And here, what resolution is needed? Board resolution, board meeting resolution, that is, plus in some cases, special resolution is needed. So these 2 things are covered. But in 185, which is what we are going to do, is it allowed or prohibited is something that we need to see. Can I use public money to give loans? Obviously not. But people were doing it. They were using public money to give loans to directors. So in the old act, 1956, it was actually not allowed, saying that you cannot give public money. Before 1956, it was allowed, sorry. In 1956, what they told that you cannot give loan, guarantee, security, etc. without central government approval. So what were people doing? Rather than giving to the, directors, they were giving to relatives. So you said don't give to director. Take permission if you are giving it to director. No problem, I'll not give it to director, I'll give it to relative of director. So anyway, 1960 they added the word directly or indirectly. So as of 2013, you could have given loan to directors through relatives also, but you should take central government approval. In 2013, one dangerous law they passed, it is 185, which said that all loans to directors are banned. All loans to directors are banned, either directly or indirectly. But then main people are politicians only. There are many companies, group companies. How will they take? So then they realized in 2017 again they amended. So in 2017, as per the amendment, what is the final thing? So now, as of now, very simple, guys. You see here, come to this part, page number 36. So now what they have done now, as of today, how it stands is the entire section 185 is split into three. Entire section 185 is split into three. The first part is prohibited, second part is restricted, third part is freely allowed. So they have broken it down into everything. And this chart, I mean, whatever this, what do you say, the entire structure and the entire, whoever are covered, people who are covered, we need to remember for sure. So company, we'll see that. I repeat, first part, 185.1 prohibited, 185.2 restricted, 185.3 is allowed. So we need to remember the list of 185.1, 185.2 and 185.3. All three we need to remember. So first of all, company. What company? Private company, public company. And what is covered? Loan, guarantee, security and book debt. So people are also cheating. Rather than giving loan, guarantee, security, they used to give goods. They used to sell goods to the director, and director used to sell the goods immediately and give back the money to the company after 7-8 months. That used to be interest-free loan. That also they have covered now. Loan represented by book debt. These are all the keywords in 185. Private company, public company. What is covered? Loan, guarantee, security, book debt. To whom it is covered? Directors or interested party. Interested party means what? 185.1, which is prohibited. We have to see the list. 185.2 restricted and 185.3 where it is not applicable. So in the exam, how to read everything, what to do is the question. So if you see, so as discussed, how to check, we saw 180, what do you say, here we were seeing 173F, Board of Directors, Board Meeting Resolution, Loans, we have seen, it can be delegated. Under 186, I can give it to any person, but under 185, it is prohibited. So what to follow? That is the big question. Which section to follow? So that in the exam, this is very, very important. This, especially this, we'll discuss that. First of all, 185 says loans are prohibited. 186 says you can give it to any person with this resolution. 179 3F says board meeting resolution plus it can be delegated. Now what to follow? Can I harmonize all the three? Not possible. If I check 186 and 179 3F, what is more restrictive? 186. Because in 179 you can delegate also, correct? So 186 is more, restrictive in nature. If I compare 185 and 186, 185 is specific section. It speaks only about directors. So in the exam, guys, they will not give you anything. Let me tell you, they will not give you as per 185 you answer, as per 186 you answer. What they'll tell? Throw light on Companies Act. Throw light. For that, our torch should be working. Correct? So to throw light. So that's why what I'm trying to tell is, in the exam, you should follow this process. First, we need to figure out whatever they are given in the question. Is it a person prohibited under 185.1? If yes, then you can simply write 185.1, loan cannot be given to this fellow. Point number 1. If the question has any person in 185.2 list, which we will be doing now, 185.2 list, then it is restricted. Means loan is allowed, but it is restricted. Or it can come under 185.3 also. In 185.3 what happens? The entire 185 only is not applicable. Means what? You can give loan. But guys, wherever 185.3 comes or wherever 185 will not apply, what will come? 186. 186. So this is the sequence that we need to go. 185.1, then next move on to 185.2, then move on to 185.3. If that also is not there, go to 186. There are some cases where 186 also will not apply. For
For example, 186 subsection 11 has those areas where 186 also won't apply. For them, what will come? Residuary section 179.3. 179.3. So they can give you anything. Loan was given to the employees of the company. Comment, throw light as per Companies Act. Allowed or not allowed? What do you think? Loan given to employees of the company. What if that employee was a director? Employee, if he was a director, allowed or not? So all those things are there. Then I'm not talking about MD, I'm talking about director. But next I'll ask you, what if the loan was given to MD? Right? So any question they can ask. So we should be aware of that. So 185.1, 185.2, 185.3, 186, 179.3. So now coming to 185 though, company, what company? Private company, public company. What all is covered? Loan, guarantee, security, book debt. To whom is it covered? Directors or interested party? So obviously we need to understand who is the interested party. 185.1, 185.2 and 185.3 where it is not applicable. If you got breakfast and all, please eat, no problem. Yes, interested party 185.1, 2 and 3 where it is not applicable. Company, first private company, public company we have seen. What all is covered? Loan, guarantee, security and book debt. One by one we need to see. What is a loan? Loan has not been defined anywhere, but what is a loan? If I give money to you and take money from you later, along with or without interest, is it a loan? Yes. If I give my Honda Activa to you and take money from you later, is it a loan? Honda Activa I will give and money from you later. In 5 months I will take. Every month some money, EMI you will pay. Is it a loan? Okay. Third one, I will give you money and take your Activa in 5 months. Your Activa, not my Activa. I will first give you money, 40,000, and then later your Activa also is worth 40,000, so I will take it back. I will take the Activa. What do you think? It is not a loan. Okay. I will give you my Activa, take your Splendor. That is barter. That is definitely not loan. What about the first one? I will give you money, take money. Yes. Second one, I will give you Activa, take money. Yes. Supreme Court. It went to Supreme Court. Actually, Supreme Court talks about question of law. So in case they went, sir, what is loan? We don't know. What is loan? It went. So there they said yes. 185 they said the giver you should give in cash or kind. No problem. So I can give Activa also. It may be with or without interest, but there has to be an arrangement. Borrower lending relationship must be there. Finally, the return should always be in cash. So me giving money and taking Activa back from you later, that is recovery of loan. That is not a loan. So the first and second one only is the loan. Giving money, taking money. Giving money, taking, giving Activa and taking money. So that's why if you see all these, you take car and bike, etc. on EMI, right? So that is definitely in the nature of loan itself. That's why all these people, two-wheeler and four-wheeler companies have tie-ups with the, banks. So you'll have to, the bank will pay the agency and then you need to keep paying the bank EMI. That is 100% loan. So that is what they're trying to tell. 185.1 prohibited, 185.2 restricted, 185.3 not applicable. So this is the meaning of loan. And in that case, what is guarantee? Guarantee. So your friends will ask, which attempt this time? Fourth attempt. Will you clear? Guarantee. Yes. What is this guarantee? Guarantee, security is supported by mortgage, whereas guarantee is not supported by any mortgage. So if I go to the bank and say Narayan Murthy is my uncle, give me loan, and he will say give me a letter from Narayan Murthy. Somehow I will get it also. Assume. So then yes, will they go to Narayan Murthy and ask for any security? No. The name of Narayan Murthy is good enough. His credibility is good enough for me to get a loan. So if you see, that's called guarantee. Then security is mortgage. Mortgage generally is immovable property. Then what is a pledge and hypothecation then? Pledge, hypothecation, because if they ask all these words here, will it be guarantee security? No. Pledge is for movable goods. Bailment, is bailment a pledge or pledge a bailment? So all out of syllabus questions you cannot ask. We have come at CA final level. These chiller questions you will not handle. Is pledge a bailment or is bailment a pledge? So bailment, actually pledge is a bailment. Bailment is a bigger, larger concept.
So bailment is nothing but transfer of possession of your goods. So if they use any of those words here, bailment, pledge, do not get flustered, because actually they are talking about security. Security is always supported by mortgage. Mortgage is for what? Immovable property, right? So if they use pledge, etc., don't take it into consideration because it's not part of this entire section. So guarantee, security, book debt. Book debt is not normal book debt, but loan represented by book debt. Instead of giving a loan, they have given it as a book debt. That is what is covered here. To whom is it covered is the next question. Directors or interested party. Interested party we need to see 185.1, 185.2 and 185.3 case where the entire thing is not applicable. That is what we need to see. So what is loan, guarantee, security, all that we need to check. We have seen it already. Section covers loans, guarantee, security given by company, not received by company. And yes, this we have seen now, elements of loan, guarantee, security, everything we have seen. So 185.1 prohibits loan, guarantee, security given. So this list to these four people, loan, guarantee, security and book debt is completely prohibited. Cannot give only to these four people. Director of the lending company or holding company, relative of any such director, partner of any such director, to any firm in which such director or relative is a partner. So we'll see that one by one. First one, director of the lending company or the holding company, it says. So in this example, X, Y, Z, three companies are there. Y is the company in which you are checking all these things. Y company has 5 directors, X company has 10 directors, Z company has 2 directors. Loan given by, Y Limited, to how many directors is prohibited? 17, 15, 5, 7, how many? Or all 7, all 3? Only 15. Loan given by Y Limited to directors of lending company and the holding company is covered. If the loan is given to 2 directors of Z Limited, will 185 prohibition apply? No. Why? Because it's a subsidiary company and subsidiary company directors cannot have control over the holding company anyway. So basically this 15 directors, it is prohibited. Which means this one, is it allowed? Yes. Under which section? 186. That's what. See, remember 185.1, 185.2, 185.3, then go to 186. 185.1 section, it's not prohibited. 185.2, obviously, if 185.1 only, it will not come. 185.2 also, it's not there. Because 185.1 and 185.2 are mutually exclusive. Both are different. So then 185.3 also, it's not there. So ultimately, what it will come? It will come to 186. Suppose 186 also, it doesn't come, means 179.3. So in the exam, they'll just give you normal. You need to figure out which section they're asking. So this is Y Limited giving to 2 directors. Very simple. Now, basically, this is covered. 15 directors are covered. Next, relative of such director. Y Limited, directors XYZ are there. Relative of X, loan, guarantee, security is given to, then the relative will eventually hand it over to director. So that's why anything given to the relative is also banned. Now, who is a relative? Is a grandfather relative? You should go to Income Tax Act, or in Companies Act separate definition is there. Income Tax Act is lineal, ascendant, descendant, everything is there in Income Tax Act. So here what do you think? Yeah, so here it speaks to clause 77 says spouse and Hindu undivided family, members of the Hindu undivided family, spouse and other relationship, this relationship, that's it. So for a person, only spouse is a relative and that person's brother and sister. Basically 1, 2, then 3, then father, mother, 4, 5, then 6, 7, 8 and 9. So son and son's wife, daughter and daughter's husband, that's it. That's the entire relationship in the entire Companies Act. No other meaning should be given. So father, mother, will father include stepfather? Yes. Stepmother? Yes. Stepbro? Yes. Stepsister? Yes. Stepson? Yes. But stepdaughter is interestingly not covered. It's an error of omission. Stepdaughter. Stepspouse and all don't write. Right? Some people, yeah. Spouse, stepspouse, yeah. So all that. In inter fellows will write all those things. Because they give it for 3 marks, guys. This entire definition for 3 marks in inter they'll give. So in inter we have that BCom mindset, what to do. So we'll write brother 1, brother 2, brother 3, brother 4. We have to fill the pages, no? Then we'll write father, mother. Then we'll write father's wife. Right? Mother's husband. To fill the pages. So it is important to know. So parents and of course brother and sister, step covered. Then son and son's wife, daughter and daughter's husband, yes. So step will include what? The divorced parents, that is step brother will also be the, where the common parent will be there, or the where it is two divorced parents coming together and marrying, that is amalgamation in nature of merger, that one. So all those things also are covered here, all these things. Basically step, that is what it is. Yeah, spouse is the legally married spouse. So some of our ministers here have extra fittings, all that will not be counted. So it is only spouse. Then son and son's wife, daughter and daughter's, that's it. And if you know, interestingly, reverse relationships are not covered. For example, in auditing, if my father-in-law is a director of a company, can I become auditor of that company? As per Companies Act only, if my father-in-law is director of a company, can I become auditor of that company? What do you think? See, my father-in-law, is he my relative? You should see from auditor's point of view or director's point of view. From director's point of view, son-in-law is a relative. If you think about it, because son and son's wife, daughter and daughter's husband. So from the director's point of view, the son-in-law, daughter-in-law will be relative. But from the son-in-law's point of view, father-in-law is not a relative. Only spouse is covered. None of the other spouses side is covered. Companies Act says spouse only is a big thing. And adding other fellows from spouse side, dangerous. So that is what it says. So if you see, reverse relationships are not at all covered. So you should not think about reverse relationships at all here. Only this. This is the relationship that we need to see. That's about it. So, and from auditing point of view also, you should see from the auditor's point of view. So my father-in-law is not my relative as per Companies Act. So I can go ahead, at least as per Companies Act, I can go ahead and take up the assignment. But of course our CA Act says anything that affects the independence, please do not take up. But I'm saying technically, can I take it up? Yes. So that is the relative definition. So now 9 relationships, it can be plus or minus also. 9 relationships is what they say. So the thing is, it can be plus or minus, right? If your father, your grandfather and all used to have some cricket team and all, correct? 11, 12, 14. So that, basically I'm saying it's plus or minus, it can happen is what I'm saying. So on the other hand, that is the relative definition, very simple. Now what they are trying to tell is, relatives of the directors are also covered. If loan is given to them, then it is prohibited. Next is partner. So Y Limited, let's say lending company, director X is there. They have a firm XPJ with X, P and J as partners. If loan is given to P and J in their individual capacity, that is also prohibited. That is also prohibited. What if it is given to the firm then? That is the next point anyway. Firm is the next point. That is also prohibited. So you can't give it to X anyway, you can't give it to P and J anyway, and you can't give it to the firm also. Next point is the firm. But before that, it says partner or relative. And we have seen this entire list here. This list we have seen, partner or relative. My question is, partner or relative of, like for example, let's say relative. Relative is 9 relationships are there. This relative should be relative of these 5 directors or relative of 15 directors? What do you think? Yeah, 15 directors, because Act uses the word such. Relative or partner of such director. Which director? Such. Such means director of the lending company or holding company. On the word such also, it went to a Supreme Court decision. Correct? Ambalika Das Ulsia Shaw. They said when the adjective such is used before a noun. So basically it's all English only at the end of the day. So there they said that yes, it is definitely part of the both lending company and the holding company should be taken into account. Partner or relative of which director of the company, we have seen they have used the word such. So relative also, partner also, I should see of 15 directors. So once I go to the company, I should ask the list of what? Directors of the lending company and the holding company. Second, all the relatives of the directors of the lending and the holding. Then all the partners of what? Or partners of the directors, 15 directors, partners of those 15 directors I have to ask.
And then one more, last part is this. So the first subject is FR, just remember FR. For a firm, relative is also covered. A firm in which such director or relative is a partner, which means I told you 9 relationships into 15, that is 135. Plus the directors, 15 directors are there. So what should I take details of? I should take details of all the partnership firms in which 135 plus 15, 150 people are partners. Crazy. I should take the details of all the partnership firms in which such director, means which director, 15 directors, or relative, 135 people, is a partner. So I should take the list of all the 135 plus 150 people, whichever firm they are partners in, I need to take the details. So many things are there, that's why. So Y Limited, directors XYZ, director X, firm XPJ as partners. Loan guarantee security given to firm XPJ. Prohibited or allowed? Prohibited. Similarly, director X has a relative, Mr. A. Firm ABC are there, ABC as partners. Loan guarantee security given to them, firm ABC. Allowed or prohibited? Prohibited. What about loan guarantee security given to B and C? Yeah, A anyway not allowed, relative. B and C? B and C are what? Partner of the relative of the director of the firm. Partner of the relative of the director of the firm. So B and C can be given. Law says this only you don't do properly. 2 minutes you finish Karo report. Correct? This and all, no problem. Cannot provide for extreme circumstances. So this is allowed, guys. This is allowed under which section? 186 again. 186 says loan given to any person. 186 says no loan given to any person. This much in depth and all they will not ask, don't worry. Right? They will not ask so much, but I am just trying to tell you, apart from this, anybody else if you give, it is allowed under 186. This much in depth they will definitely not ask, don't worry about it. But of course, these things and all you should remember. So again, what is the list, guys, which is prohibited? First one, director of the lending or holding. Second one, partner or relative of such director. Partner of such director, then FR. A firm in which such director or relative is a partner. You have to remember this list. 185.1, 185.2, 185.3 list you have to remember, especially 185.1 and 2. Because the same list, if you add some masala, what will come? 188 will come. An extra masala if you add in IBC, related party list will come. So same, the base is 185 itself. Base is 185. So it is must and should, you have to remember. So first one, director of the lending company or the holding company. Second, relative of such director. Third, partner of such director. Fourth, FR, firm in which such director or relative is a partner. Fair enough, that's done. So this is in these areas, it is what basically it is prohibited, fully prohibited. But in some cases, I mean in the 185.2 cases, it is restricted. What do you mean by restricted? Three things. One, special resolution has to be passed. Second, explanatory statement has to be given. And the loan should be used for the principal business activities. Principal business activities. So if you see, it should be used for what? The principal business activities of the company. So if you see there in changes, page number 39. All this we have done. Here you can obviously add on here only. Here restricted is there, right? Here restricted. Somewhere. What do you mean by restricted? You can, I have written it already here. Check it out. This part. Special resolution to be passed. Explanatory statement to be given. Loan to be used for principal business activities. You can just write it down there, or you can check this note. It's already there in the corrigendum. Special resolution to be passed. 3. These are the restrictions. It is not prohibited, it's a restriction. Special resolution to be passed. Explanatory statement to be given. Explanatory statement is given for all items of special business. This is an ordinary business, special business, special business. Loan to be used for PBA, principal business activities. So special resolution to be passed, explanatory statement to be given, and loan to be used for principal business activities. Now, the list is who all are covered here. Let's see. When we go in flight and train and all, PNR number is there. So remember PNR, because for a private company, relative is not covered. Private company, no relative. Private company in which such director is a director or member. In this case, I can give loan, but it is not prohibited. It is restricted. It is restricted. First, Y Limited directors. Director X, he has J Private Limited in which he is a member. One more is P Private Limited in which he is a director. You see, this is a private company in which the director is a member. A private company in which director is a director. Loan guarantee security given to these fellows. Allowed or prohibited? I mean, prohibited or restricted? Restricted. What is the restriction? Those three items. Special resolution, principal business activity, explanatory statement. That's all. On the other hand, same here also. Three restrictions. It is allowed. Earlier, this was also prohibited as I told you, but now they have allowed it because of administrative convenience. What all is prohibited? Loan to directors of lending or holding. Second, relative of such director. Third, partner of such director. Fourth, FR, a firm in which director or relative is a partner. But in these items, that is from now, obviously it is, what do you say, allowed. Allowed, but it is restricted in nature. It is allowed, but it is very much restricted. So what is that allowed thing? One, a private company in which such director is a director or member. A private company in which such director is a member. A private company in which such director is a director. It is a restricted. Three items should be taken into account. What about relative of X? Mr. A, relative of X. That fellow has R Private Limited in which is a member, Q Private Limited in which is a director. Private company in which relative of the director is a director or a member. I told you in PNR, in private company, relative is not covered. What to do for this then? Allowed or restricted? Allowed. Same sequence. If they ask you this, the company gave loan to R Private Limited in which relative of the director happened to be a member. Like that, if they ask, throw light. So throwing light, first I have to check 185.1. Will it come under 185.1? No. Then I have to see 185.2. Will it come under 185.2? No. 185.3, obviously it will not come. 185.3, anyway, section only is not applicable. So which section again? 186. Again in 186, I need to see, will this section apply or not? I mean, whether it is exempt or not. Actually, it's not. So definitely it will come under which one? So loan given by Y Limited to Q Private Limited and R Private Limited, 185 will not come. When I say cross mark, 185 will not come. What will come then? 186. 186. 186 will come. This is harmonizing everything. Harmonious construction. Did you guys study yesterday? Yes, awesome. Please study that day only, guys. Finish it off. Then there will be no tension. We'll try to finish everything possible in the 3 days. After which, if there's anything else, I will upload it. I'll add it and upload. But whatever major things, we'll try to finish everything so that, will be comfortable. So, private company in which such director is a director or member. Done. Equally applies to loan guarantee security to H Limited's director, such. Everything it applies to the same thing. Second one, a body corporate where 25%. Okay, what is the first? Okay, again, I'll repeat again. Revision. 185.1 list. At night also, 10 days later, I'll wake you up at 12 o'clock and ask you should be able to tell. 185.1, first one. No mugging up. Director of the lending and the holding. Second, relative of such director, partner of such director. FR, firm in which the director or relative is a partner. Imagine if you had done this yesterday evening. Nobody would have come today, I told you. So next, in the first part now, 185.2, PNR, private company in which director is a director or member. Director or relative is not there. Director is a director or member. Next, body corporate where more than or equal to 25% of the voting power is held by such directors. So if you see, Y Limited is giving loan guarantee security to a body corporate. What is body corporate? We'll see. And such directors, which directors? Director of the lending company and the holding company, that is X Limited, Y Limited, are controlling 25% of the voting power. Mind you, X Limited and Y Limited are not controlling. Directors of X and Y are controlling. That is interesting to note. It's not some associate relationship here. It's not X and Y controlling body corporate. It is directors of X and Y are controlling 25% in this body corporate. What is body corporate? Private company, public company, statutory corporation, foreign company, limited liability partnership, nationalized bank, financial institution, anything will be a body corporate. So Y Limited lending company is giving loan guarantee security to a body corporate, and that body corporate is controlled by whom? Directors of such company, such director. Such director means what? Director of the lending company and the holding company. That's what they are trying to tell. That is the meaning of control. This controlled world, we'll see that. You can control the majority of shareholders, directors also, fine. Next, last, so here it is prohibited or allowed? Allowed, but 3 conditions. Correct? Same, special resolution, principal business activity, then explanatory statement. Awesome. Next one. Body corporate in which board of directors is accustomed to act. So Y Limited is giving loan guarantee security to the body corporate. And this body, yesterday I gave you know that INC example. So that INC example, this will be INC Limited. INC Limited, in which the board of directors, Mr. Mann, Mr. Mohan and Mr. Singh, are being controlled by whom? Directors of the, here it says directors of not such director of the lending company. What is the lending company? Y Limited. So X Limited is not covered here. And the keywords are what? Accustomed to act. Accustomed to act. It is they are habituated. That is, that body corporate board of directors are habitually listening to this guy. It's not just once they will listen. Always they keep listening to whom? Directors of Y Limited. Directors of Y Limited. So this you have to write in the exam. Accustomed to act. So basically Y Limited is giving loan guarantee security to a body corporate who are accustomed to act according. Basically Y Limited here is Italian Marbles. Italian Marbles Limited is giving loan guarantee security to INC Limited. And what is the board of directors of INC Limited? That is Mr. Mann, Mr. Mohan, Mr. Singh are accustomed to act according to the directors of Italian Marbles Limited. That's what. So can they give a loan? Yes. They have given into the demands of the industry, because industry said, sir, I will give loan. Who are you to tell? Correct? That's what they said. It's public company. They are associated company. I have control over them. I will give loan. Why are you bothering that? Why are you prohibiting it? So from 1956 onwards, they had, 2013 they prohibited. It did not work out actually. That's why they said it's allowed. But 3 conditions. What? Special resolution, explanatory statement, principal business activities. 3 conditions also have to be followed. Me and the doggy now full competition. Yes. So done. So body corporate in which board of directors accustomed to act. So again, so these 3 things are what? Restricted. So 4 things are prohibited, 3 things are restricted. That's all. Very simple. This list only, if you remember, little masala if we add, what will happen? It will come to related party definition. So it becomes very easy for us to understand. So once again, guys, what is the prohibited list? First one, director of the lending or the holding. Second one, relative of such director. Next, partner of such director. FR, firm in which the director or relative is a partner. Then 3 things which are restricted. First one, PNR, private company in which the director is a director or member. Relative is not covered. Next, body corporate in which more than, if you see in 185.2, there is no person involved. It's only companies. It's either private company or body corporate. A body corporate in which more than 25, greater than equal 25% of the voting power is controlled by directors of such company, such directors. Third one, body corporate whose board of directors are accustomed to act according to the directions or instructions of the directors of the lending company. Accustomed to act is the keyword. So these 3 things are covered. Very, very simple. This is all the restricted point. Moving apart from that, let's say, they have asked once in the exam that let's say like I'm a direct in my individual capacity, I'm working for a company which sells, let's say, projectors. Projectors on a large scale they sell. So now I got a deal from another company. Some school gave me a deal to give me this projectors everywhere to their supply to the school. They said in their individual capacity, can you do? I asked my company, boss, I am also doing my business separately and I am working for you also. Is it okay if I supply? Company is okay with it. Go ahead. Anyway, we have other large orders. This is a small order. You only do it. No problem. You take. That such arrangements are there actually. People do it in their individual capacity also. Now, but the school says, I don't have the guarantee that you will actually supply and we need these projectors. Do one thing. Please give a guarantee from your company. Performance guarantee. So the company gives a performance guarantee to an outsider, guaranteeing that this particular director will definitely fulfill the promise. What promise? Of supplying the projector. Now tell me, is that also covered here or not? Is that also covered or not? Not covered. So if you see 185, why is it not covered? Guarantee. Guarantee the cash is not there anyway. You see. Or give guarantee or provide any security. This is the most important line. In connection with any loan. Was this a loan? No. It was just performance guarantee. So this is the keywords again, in connection with any loan. So there can be various scenarios that we can envisage. So if you see page number 38. As I told you, loan is the most important thing. Company gives guarantee or security to a specified person. Specified person means a person covered under this section, who in turn gives a loan to a specified person. Right? So, for instance, one more example. Y Limited, Director XYZ gives guarantee or security to Director X. Is giving to Director X. Director X is giving loan to his friend. Director X is giving loan to his friend. It's a peculiar transaction whereby Director is giving loan to his friend but taking guarantee from whom? Company. Obviously, the director's friend and company also will have some relationship. That's the reason why they have entered into a thing where on behalf of J, who happens to be X's friend, Y Limited is giving the guarantee. And because X has given a loan. Now tell me, the thing is it covered or not? Loan is there, guarantee security is there, covered or not? So again, if you see here, in connection with a loan taken by whom? All the people covered in the list. This loan is taken by director or loan is taken by X's friend? X's friend. Is X's friend, did you see anywhere there in 185? No. So this transaction also is outside 185. This also is outside 185. Where will this come then? Will it come in 196? We'll see. So if that also doesn't come, we need to see 179. If nowhere it comes, means it will not be there only. Right? So if you see, that's what. So coming back to the discussion here. Yeah. So if you see guys here, coming back to this. In the exam, 4 important things we have to see. When they ask you about guarantee security, first most important part, company should be giving. Not anybody else, company should be giving. Second most important part, they should give what? Guarantee or security. Company should be giving. What should they be giving? Guarantee or security. Third one, doesn't matter to who the guarantee security is given to. Doesn't matter. It can be given to a friend, it can be given to a bank, it can be given to another director, doesn't matter. It should be, guarantee security should be, must and should be for what? Connection with loan only, no performance guarantee. And last is the most important thing. It should be given to a person. Loan should be given to a person covered in 185. Whether it's 185.1 or 185.2. The last column must be 185.1, 185.2. If they reverse it, it is given to a director covered in 185.1. But that in connection with a loan taken by some random friend, the section will not come. So this is the test in the exam that you need to see. They'll give you something. You need to make this structure. Who is giving? Company. Once that given, director gave guarantee to company. We wrote 185.1 and came. Director gave guarantee to company. Reverse case. Not covered only. This is a guarantee given by, not taken by. So we should be very careful what they're asking. So part 1, company should be giving. What? Guarantee security. To whom? I don't care. Anybody. In connection with what? Loan. Lastly, to a person covered in 185. To a person. So it should be loan taken by this case. So these are all the various scenarios that we have seen in this case 185.1. Moving on to 185.2, again, who are the parties covered? That also we have seen, no problem. All this we saw. Now, what about loan given to Hindu undivided family in which director is the Karta? Loan given to Hindu undivided family in which director is the Karta. Relatives will it cover? Guys, in relatives, what is the relative definition? Members of HUF, not HUF. Right? So loan, HUF is not relative. Members of HUF is a relative. So if they ask you, loan has been given by company to, what do you say? Hindu undivided family in which the director happens to be a Karta. It will not come in 185. Same list. 185.1, no. 185.2, no. 185.3, no. Then it is what? 186. Because 186 says loan given to any person. Any person means income tax definition. Anybody, including HUF. Right? Though person has not been defined. So I have to go to the General Clauses Act. General Clauses Act is copy paste income tax. Same. Or either income tax is copied from General Clauses Act. Everybody is covered under person. So loan given by company to a Hindu undivided family in which director happens to be a Karta will come under 186. That you need to follow. Right? So like that. Loans are, what about loan given to a trust? Loan given to a trust in which the director is a trustee, main trustee. That also 185.1 not covered, 185.2 not covered, 185.3 not covered, 186. Person will everybody. If person is everybody in 186, is there anything where, what do you say, 186 also will not apply? Yes, I told you, 186.11 specifically has those items where 186 only will not apply. This means for those items, what will apply? 179.3. 179.3 F is a residuary section. Correct? Yes. Moving on. That's what it says. First one. Loan given to HUF and all is not covered. It cannot be even called as indirect loan. So you can write here covered under 186. Covered under section 186. Page number 40. Page number 40. Point number 2. At least I'm not joking. 5 to 6 times asked in the exam. Wife is a director. Husband is BCom, Bangalore University. Is an accountant in the same company. They are giving salary. That husband goes and asks for loan. They give him a loan. Is it prohibited? Wife is the director of the same company. Husband is an employee of the same company. Husband gets a loan. This issue went to court. That they said relative of director. So prohibited. Right? So if you see, that's why MR electronic components. If possible, remember, if possible, otherwise leave it. MR electronics components case. They told that these items you should check first of all. Whether the beneficiary is a bona fide employee. Whether the husband is a bona fide employee or only on paper. The bona fide employee, no problem. Second, whether the advance falls within the general scheme of advances given by the company to other employees. Other employees in the same category, can they also get a loan? If yes, then no problem. Whether the amount paid is proportionate or disproportionate to the salary. His salary is 20,000. Is he getting a 2 crore loan? Then it is disproportionate. 10 times maybe 20 lakhs, fine. Maximum 2 lakhs. 10 to 20,000 per month means 10 times. 2 lakhs I can give, no problem. Is he getting 2 crore loan? Then it is disproportionate. Then conditions of repayment, etc., rate of interest, all that should be proper. Whether there is laxity in the recovery of advance. Laxity means delay. They are not the least bothered in recovery of advance. What is the capacity of person receiving the advance? These questions if you answer, and then if you see that, okay, yeah, it is genuine, then it is allowed. Then it is allowed. So that is what there is. The company gives loan to director's fiance. After the loan, they marry. Planning. What do you think? Prohibited or allowed? Allowed. Because it says loans to directors and relatives. Relationship should have been established when? At the time of giving the loan. The relationship should be there at the time of giving the loan. So subsequent establishment of relationship is of no consequence. So all this can be small questions here and there. Yeah. Then this is one question that regularly has been asked, and this also. This definitely around 6 to 8 times they have asked. I mean, it may not come now, but you never know. They have asked this. It's there in the, if you see previous year's papers, it's there. That is what, let's say Shobha Developers, Prestige, all that is there. You are the director of Shobha or Prestige. You have also got a 10 crore property they have given you, Shobha or Prestige. You have bought it. You have bought paying 5 crore. Remaining 5 crore they are recovering from your salary every month. Is it a loan represented by book debt? For Shobha Developers or Prestige, it is just a book debt. Why? Because it's stock in trade. So they have given a 10 crore house, 5 crore they have taken money, remaining 5 crore recovering from your salary. You are the director of Shobha. Is it a loan represented by book debt? Now, this was an old case law in 1991, Freddie Adirshar Mehta versus Union of India. So there they said, it is not an indirect loan. You cannot convert what is not a loan into a loan. But here, because of this book debt point, I have to add one more line. If it is a loan represented by book debt, according to the facts of the case, then it will actually attract 185. In 1991, book debt dialogue was not there. So the decision that time was correct only. It's neither a loan, it's not a book debt. Even if it's a book debt was not covered that time. That was in 1991. Now we need to modify the decision accordingly. Facts of the case, if they say that it may be like a loan represented by a book debt, then it will definitely attract 185. It would definitely attract 185 is what we need to see. Yes, thank you. Slowly. Whenever people need a break, they'll start throwing things. Right? I have already observed that. Yes. Correctly during break time, they will throw. Yes. No break. We will have to finish. Yes, if the manager, secretary or employees are subsequently appointed as directors, then the section will not apply, since applicability of the section has to be seen on what date? Transaction date. On transaction date only, nothing else. Tea break. You can bring tea. No way. This is you have our idli and chutney, idli and sambar. People from Chennai, when they come here, they'll be shocked. Full sweet it will be here for them. Right now, it's shocking for them. Many people have told me that, what is your idli sambar, you don't know how to make and all they have told. Correct? Yeah, that's the Udupi coastal side. That is how it is here. Anyway, so next guys, moving on. 185 will not apply to what? This 185 1 done, 185 2 done. Now 185 3. This is again important. Loan given to MD, whole-time director. Once they had asked a question for 4 marks. So for MD, basically for MD or whole-time director, you can give. What is exempt? MD or whole-time director, entire 185 will not apply. Of course, 186 will apply, mind you, but 185 will not apply if there is what? You pass a special resolution, a scheme, specifically for them you create, or it should be part of what? Conditions of service. It is part of conditions of service. Right? So either it is part of conditions of service or you will pass a special resolution scheme. Only then it is allowed. It's either part of conditions of service or you will pass a special resolution which is a scheme. Because in conditions of service, no, we will see in MD provisions today that the moment you are appointed as an MD, you have to pass a special resolution to appoint that fellow anyway. In one table, you will see special resolution. In that special resolution, anyway, you will add all these loan terms to that guy. So if this is not there by mistake, if you have not added the loan terms there, rather than again passing it here, they are saying you create one more scheme and let the shareholders approve. So MD and whole time, I asked you that same question that time. If you give a loan to a director, prohibited. If you give a loan to an MD, allowed. If you give loan to an MD, allowed if it is part of a scheme or if it is part of conditions of service. Conditions of service. So if you see, that is what they are trying to tell. Now once that, ask this slightly tricky question. It's not tricky exactly, but then let's see that. So whereby, yeah. So if you see, Y Limited is giving guarantee or security to a bank, which is in turn giving loan to a MD. Which is in turn giving loan to an MD. MD wanted to build a house. He went to the bank. Bank says, give me a guarantee from your company. So company gives guarantee security to the bank. Bank is giving loan to an MD. Conditions of service are silent. They pass a special resolution. Is it valid? Yes or no? Is it valid? No. Why? Yes, most important to know, section covers only loan, not guarantee or security. This can be a tricky one. I have given in the material already. Check it out. Page 40 down. Loan given to MD or whole-time director. Guarantee or security is not exempt. Loan given to MD or whole-time director. Guarantee, security not exempt. As part of what? Conditions of service. Or a scheme created by passing special resolution. Loan, guarantee, security provided by finance companies in the ordinary course of its business. In the ordinary course of its business. Government security rate to be followed. This also they'll ask, guys. They had asked recently. They gave this one and they said they have followed the, what do you say, RBI rate they have told. It should be government bond rate. See, that also that level they are asking questions. This was 1 or 2 attempts before. RBI rate they had followed, not RBI rate. What rate? Government security, government bond yield rate you have to follow, not RBI rate. So these are all important areas. So this thing 185 will not come. Any finance company in the ordinary course of its business. Now see, the finance company word is missing in the law. In the law, finance company word is missing. It is actually finance company only, though it is not given here. You see, it says a company which in the ordinary course of its business. Does it mean any company can give in the ordinary course of business? No, it is only finance company. Why? Because they have used the word its business. Which in the ordinary course of its business. If it was any company which can give loan, it would have been which in its ordinary course of business. Correct? So these things you have to see. In the ordinary course of its business. What is the business of the company? To give loan. Correct? So if it was any other company, normal company also can give loan means no. But you have to maintain this year, 1 year, 3 year, 5 year, 10 year government security rate. This they asked in the exam, RBI rate. No. In 185.3 also they asked, in 186 also they asked, RBI rate. No, it should be government security rate only, not some random RBI rate. So, government security rate determined by other forces. Then, loan by Nidhi company to its director in the capacity of member. You can give it to that fellow in the capacity of a member. Loan by government company if concerned ministry approval is obtained. All these things are there. No problem. 2 other things that they will ask in the exam is holding subsidiary relationship. For sure. This part, and this also 4 marks. Recently asked in the exam. 2 attempts before only they asked. This to 4 marks, many times it has come. Let's see. First we'll see this. This will come under 185(3). They say this section will not apply to these things. Means for this, I have to check 186 now. Holding company giving loan to wholly owned subsidiary, 185 will not apply. Will 186 come? We'll see. Holding company gives guarantee or security to anybody who in turn gives loan to a wholly owned subsidiary. Correct? So 185 will not come. Will 186 come? We'll see. Third one. Holding company gives guarantee or security to a bank or financial institution, which in turn gives a loan to a subsidiary. This is what? Wholly owned subsidiary. This is what? Subsidiary. So holding company is giving loan to wholly owned subsidiary 1. Holding company gives guarantee or security to anyone who in turn gives loan to wholly owned subsidiary. Third, holding company gives guarantee or security to a bank or financial institution, which in turn gives a loan to a subsidiary. So in this case is what we need to see. If you see here, it can be anyone here, wholly owned, is subsidiary. So 185(3) will not come. I mean 185(3) says 185 will not come. So will 186 come? We need to see. When we see, go to 186, we'll check. This is regularly asked in the exam. They'll say holding company give guarantee security to anyone who is giving loan to wholly owned subsidiary in the light of Companies Act. Comment what provisions to follow. So 185 definitely will not come. So I need to see whether 186 will come. If 186 also doesn't come, then 179. Perfect. Now 185 shall not apply to a private company. This is again, they had given one question where they said private company wants to give loan. Can a private company give loan to its directors? Yeah, subject to conditions. What conditions? First of all, government doesn't have any problem if you give loan out of self-generated funds. Means what? They say in your share capital, no other body corporate should have invested. So you are a pure private company. If some other company has invested, what will happen is this will be like a money laundering scheme. You are just a routing mechanism. From some other random company will invest in some company, that some company into some company into your company, and you will be giving a loan. Ultimately, source is somebody else. You are just using it as a tunnel. That is not allowed. That's the logic actually. So they say no body corporate should have invested any money, which means they are trying to tell your own funds, you give loans, who cares? Your funds, you give loan, no problem. Outside funds cannot be used. Now, I'll go to them and say, sir, outside funds, okay, I'll not use. Borrowings can I use, sir? Business runs on borrowing. A big company like Reliance also till 2020 were running on borrowings. Only then he said that I want to make it debt free. But the entire business was built on borrowings. Dhirubhai Ambani started the business also borrowing money from his father-in-law. Right? So yes, it is true. Even Narayan Murthy started 5,000 rupees borrowing money, 5,000 from his father-in-law in a garage in Mysore. So the thing is, yes, that's how it is. Without borrowing, how will you do it? Not possible. Correct? Not possible. I was of the view that I should not borrow money and all. In 2012, I had 2,000 rupees in my pocket. So the thing is, without borrowing, we started. First few years, no growth only. Genuinely, I'm telling. So only when we opened up to maybe we should borrow a little or maybe we should do something else, then we saw. Then I realized that my stupidity, that if you have that rigidity that no, I'll not borrow, there'll be no debt on me. All that if you do, then that is the problem. You will never grow. So if you see, then I realized. So if you see, that's what I'm trying to tell. In whose share capital, no body corporate has invested any money. It's fair enough. They say, your own money, you please give, no problem. Second, if the borrowings of such a company, you can borrow from banks, no problem. Borrowings of such company from banks or financial institutions and other companies will be what? Less than 2 times the paid up capital or less than 50 crores, whichever is less. Whichever is less, which means, for example, if my paid up capital is, let's say, 20 crore, 2 times paid up capital is 40 crore. So 40 crore or 50 crore, whichever is less, 40 crore. Whatever loan I have borrowed, if the loan I have borrowed is 30 crore, 30 crore is less than 40 crore, so no problem. I can give loan. So can I give loan from money borrowed from banks? Of course I can. But can I give loan from money borrowed from, not money, money invested from some other companies? No. Borrowings will be a track I need to repay, but the other investment from other companies will just be used as a tunnel to sort of launder money. That is not allowed. Fair enough. But if my loan is 50 crore, 2 times paid up capital is 40 crore, 40 or 50, whichever is less, 40. Loan only is 50 crore. 50 crore is more than 40 crore. So can I give a loan? No. Right? So if you see borrowings of such a company, my borrowing, if it is 50 crore, paid up capital is 20 crore, 2 times paid up capital is 40 crore, 40 crore or 50 crore, whichever is less, 40 crore. Borrowings of such a company, borrowing is 50 crore, 50 crore is more than 40 crore. Can I go ahead and give a loan? No. On the other hand, if the borrowing is 30 crore, 30 crore is less than 40 crore. Can I give a loan? Yes. But what if I have given a loan to a director using these funds, but I have not repaid this only? That's why third point. Such a company has no default in repayment of such borrowing subsisting at the time of giving the loan, which means all the EMIs they should have paid on time. The EMIs they should have paid on time. There cannot be anything where they say that I will not pay the EMI or have not paid the EMI. Not possible. This is a very important provision. Many times, at least 2-3 times I've asked in the exam. So you should remember this entire thing. First one, in whose share capital no body corporate has invested. Second, borrowings of such a company shall be less than 2 times PUC or less than 50 CR, whichever is less. So first 2 times paid up capital, then do 50 crore, whichever is less you take, and compare it with the borrowings. Third one, no default, no subsisting default. Very simple. So that is regarding this audit reporting and all. This is not needed for us. In 186, there are 2 things, 186.1 and 186.2. 186.1 is very simple, only talks about layers of investment. Layers of investment. Layers of investment means what? So that's what I told you, many people in November 2016, November 8, 2016, after that, between that to 31st March, there were almost 30,000 crores pumped in to the financial system using money laundering techniques, etc. So they realized that a lot of investment companies were there. One company investing into so many companies. So they said, if you have a company 1 and company 2, maximum there can be 2 layers of investment companies. Investment company 1, investment company 2, and there ends the matter. Investment company 1, investment company 2, and that's it. Not beyond that. Maximum 2. So 186.1 said layers of investment company 1, investment company 2, and there ends the matter. Not more, nothing less. 186.2 spoke about, so basically one company and the other company through 2 layers. They use the word through 2 layers. Maximum through 2 layers you can go through. Apart from that, 2 clause 87 also was amended. That is subsidiary company. A holding company can have how many subsidiaries? A holding company can have how many subsidiaries? Maximum 2. S1 and S2. One holding company can have maximum 2 subsidiaries. These 2 changes were there. So this is at 1.186.1. 186.2 is what? Intercorporate loans and advances. This is very simple. Company. Which company? Private company, public company. What all is covered? If you see, LGS is the same, no change. Loan, guarantee, security. But we have one extra thing here, investment. One extra thing, investment. So loan, guarantee, security we have, and one extra final thing is there, investment. And what is covered here? Body corporate or person. This person will include Hindu Undivided Family, Trust, AOP, BOI, individual, everything. Body corporate, everything. There's a basic income tax definition. Everything is covered in that. No change needed. So every single thing that you can think of is covered in the definition of loan. So no problem there. So that is the first part of the story. Very simple. Moving on. Employment. I told you, if you give a loan to an employee, what do you think? Will section apply? 185.1. Tell me, if you give loan to an employee, will section 185.1, will it apply or not? No. Why? Not covered. Next. What about this thing? 185.1, it is not covered. 185.2, not covered. 185.3, not covered. 186, actually earlier it was any person. But for every simple thing, I have to run behind whom? I have to run behind, the employees. I mean, the employees and run behind the company. I have to take a lot of approvals. That's why in 2017-18 only they exempted this also. Employee was outside the purview of the act. So if I say loan given by company to its employees, 185 will not come, 186 also will not come. Where will this go? 179 3F. What if that employee is a director? Prohibited. What if that employee is a director? Prohibited. What if that employee is an MD? 185 3, which means 186 again. 185 3, in which 185 is not applicable, which means what will apply? 186. 186 will apply. So HUF, all these things are covered. Investment in the securities of a body corporate. Investment in the securities of a body corporate is what they say. Investment in the securities of body corporate. So that is what this section speaks about. Investment in what? Securities of body corporate. So what is the thing here? Up to 60% of paid up share capital, free reserves and security premium account, or 100% of free reserve security premium account, whichever is higher. Whichever is higher. Up to 60% of paid up capital, free reserve security premium account, or 100% of FR and SP, whichever is higher. Whichever is higher. So then what resolution, guys? Board meeting resolution. Board meeting resolution. And most important thing here, this board meeting is what? Unanimous. Unanimous resolution. Unanimous. Uni is single, animus is mind. Yesterday I told you that there are 5 items in the entire Companies Act which requires unanimous approval. One is the shareholders, one is the board. As far as shareholders is concerned, we saw 162, then we saw 5 subsection 4, third one is 96 AGM. 162 is appointment to be voted that individually. Then here board we have 186, one more and one more we will see later. So under section 186 it requires unanimous approval. Unanimous approval. Unanimous, uni is single, animus is mind. Uni is single, animus is mind. Now my question is very simple. Yesterday I did not discuss this because now here the wordings are, if you see, let's see the 186 wordings. This again was an examination question and it could also be asked in the MCQ, whatever it is, but let's check that. So if you see here, if there are 10 directors, 4 directors don't come for the meeting, 6 directors come for the meeting. In 6 directors, 5 directors say yes, 1 director abstains from the meeting, abstains from voting. Is the resolution passed? With the consent of all directors present at the meeting. With the consent of all directors present at the meeting. Which means what? If one fellow say abstains also, it is considered to be no. With the consent of all directors present at the meeting. Which means even if one guy abstains, it is no. So this is the true meaning of unanimous. Unanimous means what? Everybody should agree. Even if you are silent, it's like disagreement. Everybody should agree. Everybody should agree. With the consent of all the directors present at the meeting. Means everyone should agree. Why I told you this? Yesterday I told you it is unanimous, but is 162 actually unanimous? Check it out. That's why I am saying in law the wordings are so important. You see here. Yesterday 162 when we were doing, we saw without any vote being cast against it. If there are shareholders, 100 shareholders, 95 people say yes, 5 people abstain from voting. It is passed also, no problem. Why? Without any vote being cast against it. That's the difference between this and 186. That was your doubt, right? So I told you tomorrow I'll do it yesterday because I had to do 186 first. So without any vote being cast against it, 162. Means what? If there are 100 people, 95 fellows say yes, 5 people abstain from voting, still it's passed. But in 186, it cannot be like that. This was an exam question asked. In that exam question, they are told out of 6 directors, 5 directors said yes, 1 director abstained from voting. Is the unanimous resolution passed? No. So up to 60% of paid up share capital, free reserve, security minimum account, or 100% of FR and SP, whichever is higher. What resolution? Board meeting resolution plus unanimous approval. Board meeting resolution plus unanimous approval. Beyond that 60 or 100% if I do, what resolution is needed? Special resolution plus board meeting resolution. Special resolution plus board meeting resolution. This is loan guarantee security investment already made plus loan guarantee security investment that to be made. I have to compute. BMR plus unanimous, and beyond it is special resolution plus BMR. So the last part, after this we can take a break, is this. We'll come to the other approval side. But my question is this one. What do you say? When I say this last part here, investment in the securities of body corporate, what all is covered? If I say investment in the securities of body corporate, what all is covered? For example, if Infosys company invests in, let's say, equity shares of Wipro, will 186 come? Second, if Wipro, let's say, invests in the Indian depository receipts issued by Tesla Incorporated USA, will it come? Third one, if Tesla Incorporated USA invests in American depository receipts of Infosys, will it come? X Limited, random company, invests in the capital of, let's say, Y and company, which is a partnership firm. Just examples I'm giving. Then Z and company invests in equity share capital. This is a partnership firm. Invest in equity share capital of X Limited. Will this section come? X Limited invests in mutual fund units issued by Raha Mutual Funds, which is running as a trust. Will this section come? On the other hand, if X Limited invests in mutual fund units of Raha Private Limited, which is running as a company, will this section come? All these things. Apart from that, if P Limited invests in the Andhra Pradesh electricity bonds issued by the Andhra Pradesh government, will it come? Lastly, if Y Limited invests in equity shares of Hindustan Aeronautics Limited, will it come? What do you think? Or Z Limited invests in non-fungible tokens issued by MG India. MG Hector was the first company to release NFTs in the car industry. So yes, what do you think? Will it come? Will I invest in that? Company invests in that, NFTs. What do you think, guys? Anything can be asked, one by one. Will 186 come, or which section will come? First one. So basically, guys, if you see this chart only, you'll figure out who should be the investor company. What should it be? Investment. In what? Securities of body corporate. So in this example, second dialogue must be securities. Third should be a body corporate. First should be a company. That's all. All the three, if it's tick, then 186. Infosys company, equity shares company, Wipro company, so 186. Wipro company, Indian depository receipts, yes. Tesla body corporate, definitely yes, 186. Next, Tesla Incorporated is not at all a company. It is a foreign company, body corporate. So for them, why will companies that come? Correct? So this is not even there. It's not even applicable. X Limited invest in capital. Is capital security? No. So for this, in Y and company partnership firm is also not a body corporate. So for this thing, tell me what will come? 179.3E. D is what? Borrowing. E is investment. F is loans. F is loans. E is investment. So it comes under 179.3E. Z and Company, partnership firm, invests in what? Equity share capital. Okay. A partnership firm, is it a body company? No. So the entire Companies Act only will not apply. X Limited, yes, company. Mutual fund units, yes, security, as per Securities Contract Regulation Act. Ra Mutual Fund, which is as a trust. Is it a body corporate trust? No. So what will come here? Which section? 179.3E. X Limited, yes. Mutual fund units, yes. Ra Private Limited, yes. P Limited, yes. Andhra Pradesh Electricity Bonds, definitely it is a security. Andhra Pradesh government is body corporate. No. This comes under what? 179.3E again. Right? Y Limited, okay. Equity shares, okay. In Hindustan Aeronautics Limited, government company. Of course, government company is a company, body corporate. Next, Z Limited, yes. Non-fungible token, as of now, it is not yet a security as per SCRA. Correct? So this could be a body corporate, so this is not yet a security as per this thing. It's a virtual digital asset as per income tax. Of course, TDS, etc. Other provisions are there. Some deadly regulations are there. It's very interesting concept. So in income tax though. So yes, non-fungible tokens are definitely not defined under the word security as of now. So if I invest in any NFTs, it would not be, under 186. It would come under 179.3E. Come under 179.3E. Done. So that is what it is. All the things are covered here. So after the break, what we'll do, we'll figure out this entire procedure and go on to 185. 185 done already. 184 and 188. So the first half, if you finish off all this, then the chilled out stuff. What is that? Cluster 4. Cluster 5 is also very easy. We'll try to finish as much as possible today. Okay. Take a break, guys. 10 minutes, 15 minutes. Fine. Quick. Alright guys, let's continue. Alright, cool. So loan and investment. By company, section 186. Company, private, public, what all is covered? Loan, guarantee, security, investment, and then to whom? Body corporate, person, and security of body corporate. Up to 60% of PUC FRSP or 100% of FRSP, whichever is higher, BMR, beyond SR plus BMR. Now, unanimous approval is what is needed. Board meeting resolution plus unanimous approval. Here, approval of all directors present at the meeting. Where a company exceeds the aforesaid limits, then prior special resolution is also needed. It is what we have seen. Apart from that, guys, it also requires, if I have taken money from a public financial institution, if I have taken money from PFI, and then I am transferring it to somebody else, that is transferring to, what do you say, the anybody, person or body corporate, whatever the case may be. And in that case, they say I also need to take the prior PFI approval also. So the entire thing, how I should do is, and that is the loan, guarantee, security, investment already made, plus which is to be made. So I have to calculate in 4 steps. Step number 1, I have to compute 60% or 100% as the case may be. Step number 1 should be 60 or 100%. Step number 2 is what? Loan, guarantee, security, investment that is already made. So for example, if 60 or 100% comes to around 3 crore, loan, guarantee, security, investment already made comes to 1 crore. Third one is step number 1 minus step number 2, which is 2 crore. That is the loan, guarantee, security, investment that still can be made.
And the fourth point is the proposal that they'll give in the exam. Now proposal, the loan guarantee security investment, now that you have to make proposal is 1 crore. The proposal is 1 crore. Against the loan guarantee security investment, here it is 2 crore. So then 1 crore is less than 2 crore, right? So what resolution is needed? Board meeting resolution. On the other hand, if this happens to be 3 crore, then special resolution plus board meeting resolution. Special resolution plus board meeting resolution. So if the fourth one is greater than third one, then it requires special resolution plus board meeting resolution. What about the PFI approval? PFI approval is needed in all cases except one. There's a one relaxation if the that is your entire loan guarantee security investment already made and to be made is less than or equal to 60% of what? That entire paid up share capital and free reserves. So if you see, that's what it says. Where a company exceeds the aforesaid limits, prior special resolution is needed. Receiver is a body corporate and case of investments, securities are covered. Fine. The giver should be a company, receiver can be body corporate or person. All this we have seen. Loan does not include debentures and deposits. However, debentures fall under the word securities. Obviously, debentures will fall under securities. The company giving guarantee or security to a person, body corporate, to enable them to give a loan to any person will attract the section. 186 is not attracted if guarantee or security does not involve lending or borrowing of money. Guarantee or security should be in connection with the loan. 186 will not attract for what? In case of performance guarantees, guarantees against advance for supply of goods, all these things, it will not apply. It will not also apply to mutual fund run by trust, which you have already seen. What do you mean by this free reserves? Free reserves means what? And also loan and investments in securities of foreign company also will attract 186 because it's a body corporate. Free reserves means those reserves which as per the latest audited balance sheet are free for distribution as dividend, LABS. And it includes security premium account but shall not include share application money. Free reserves do not include what? CRR, sinking fund, provision for taxation, fixed assets revaluation reserve, capital reserve. It doesn't include all these things. It is purely that there for dividend. Calculation of the problems, I told you 1, 2, 3, 4 principles. Step 1, 60 or 100%. Step 2, LGSI already made. Step 3, 1 minus 2. Step 4, proposal. If step 4 is less than step 3, board itself can approve. If step 4 is greater than step 3, prior special resolution is needed. Prior approval of public financial institution is needed if loan is taken by PFI and is still subsisting. Relaxation from approval only if LGSI made plus to be made is within the 60-100% limit. So again, if any question comes, we have to do the 1, 2, 3, 4 formula, and this is what it is. Less than 60 or 100% default from PFI is a yes. Approval, prior PFI plus BMR plus unanimous. Less than 60 or 100% if there is no default from public financial institution. Basically, I have taken loan from PFI, I have not committed any default. Then in that case, no PFI approval is needed and BMR plus unanimous. So basically, approval from PFI is not needed. First of all, if it is less than the 60 or 100% limit, plus I should not have committed any default in repayment. But if I have committed default in repayment, then this one, prior PFI plus BMR plus unanimous. On the other hand, if it is more than 60 or 100% as the case may be, whether there is default, whether there is no default, this provision will come. Prior PFI approval, prior special resolution, board meeting resolution, unanimous approval and MGT 14. Prior PFI, prior special resolution, board meeting resolution plus unanimous approval plus MGT 14. All these things should be taken into account. So more than 60 or 100% default from PFI, more than 60 or 100%, then it is a no. This is what we need to understand. Government security rate must be followed. No interest-free loan can ever be made. It should be government security rate should be followed here. Again, this also they had asked the same question. This also is very important. Once they had asked in the exam that they had given a loan to any body, some body corporate, interest-free. So obviously 4 marks question. Everything was there in that. Interest-free component also was there. We need to write a point saying that interest-free loan cannot be made. What is the interest to be followed? Government security. Not RBI rate again, government security rate. This was asked 1 or 2 attempts before also, And in November 2017, if I'm not wrong, this interest-free loan question was asked. Register to be maintained in MBP2 and this register to be preserved permanently. MCQ question, the register under MBP2 to be preserved 8 years, 7 years, 6 years, permanent. If default is made in repayment of deposits, no loan guarantee security investment can be made until the default is made good. So obviously, until the default is made good, there is no, you have to ensure that, the deposits, etc. If you do not repay properly, then loan guarantee security investment cannot be made at all. So if you remember, yesterday we gave an example of Mr. D, who was appointed as the director and he got 30% votes and they did not give him the money back. If they did not give him the money back, what will happen? The one deposits. The moment you do not give him the money, let 1 year is secondary. After 1 year, it will result in disqualification. The due date only if you don't pay the money back. From that day, can you give any loan guarantee security investment? No. Any default in repayment of deposits, any deposits, not public deposits, what happens? You cannot make any loan guarantee security investment. I told you 186.11 is a section. In 186.11, for these things 186 will not apply, which means for this case 179.3f or 179.3e. Since 186.11 says 186 will not apply, then what will happen? 179.3f and 179.3. This section will not apply to a loan guarantee given or security by a banking company or insurance company. Why? These people will be in the business of giving loan, right? So you cannot stop them, and moreover they have separate laws for them. You have Banking Regulation Act, Banking Companies Act, Insurance Regulation Act, Insurance Act, IRDA, all those things. Next, housing finance company in the ordinary course of its business. Guys, they will confuse you by giving this question that asked in the exam. Company gives guarantee or security to housing finance company, which in turn gives loan to director. Allowed or not? Exam question. Allowed or not? Allowed or prohibited? Allowed or prohibited? 100% prohibited. You don't go by this housing finance company. This is loan given by housing finance company. 186 will not apply to loan guarantee given provided by housing finance company. Correct? And this is, for example, if you are an auditor of housing finance company giving loan to its director, not covered. Here it is, I am telling the company is giving guarantee security to a housing finance company who is giving loan to the director of this company. Remember that entire thing, that entire list. First one, company. Second one, guarantee security. Third one, any, I don't care. Third one can be anybody. Fourth one, loan. Last one, director. So director, then prohibited. So many students would have written housing finance company loan given exempt. No. They would have written 179.3f and all those things. Correct? Dangerous. So please, ensure that we do not goof up. And what about this? Company giving guarantee security. Second, one more question was this. Company giving guarantee security to housing finance company who in turn gives loan to the employees of the company. This is allowed. This is allowed under which section? 179.3f, because employees are no longer covered under 186. This is 179.3f. So please be very careful in the examination. They can twist and turn and ask. Company engaged in the business of financing industrial enterprises. NBFC company registered with RBI. NBFC company registered with RBI. Or providing infrastructural facilities, all these things. Next, any acquisition made by NBFC registered with RBI whose principal business is acquisition of securities in respect of its investment and lending activities. Any acquisition made by NBFC registered with RBI, principal business itself is basically investment companies. They can do so.
Any investment made by any investment company also, apart from NBFC, in lending activities, any investment company also not allowed. I mean, basically 186 will not apply. Interesting is this, any company making investment in right shares. I have bought in, Reliance shares 1 crore. Okay, I've taken it in my calculation. Reliance issues right shares, which they issued in 2020, right? For every 15 shares, 1 share. Like that, I have now have an opportunity to invest 20 lakhs in Reliance, right shares. Should I take, and now it is going beyond 60%. Should I take prior special resolution? No. Why? Because right shares is a benefit. Since it's a benefit, no problem. Right shares will directly go under 179(3)(e). Why? 186 will not apply. What will apply? 179(3), investing the funds of the company. So, in my LGS, 60 or 100% computation, 3 crore will come. LGSI already made 1 crore will come. 3 minus 1, 2 crore. Next proposal, 20 lakhs. I shouldn't take only in the proposal because it is exempt. Once exempt, always exempt. Next year, 3 crore will remain. LGSI already made. Should I take 1.2 or 1? 1 only. Once exempt, always exempt. Correct? So that is what we need to understand. So any right shares is a benefit. Any right shares will directly go to 179(3)(e), not 186. So 186 doesn't apply to government company engaged in defense production and unlisted. So it will not apply to Hindustan Aeronautics Limited and all these things. Will not apply to specified IFSC private or public company also. In case of right issue, once exempt, always exempt. Exempted investments are to be excluded from the calculation and consider the limits. Excluded from step 2. We just discussed that. Postal ballot is a mechanism. It is a replacement of a meeting, by the way. For listed companies, you can replace the meeting by doing postal ballot. It is mandatory for passing any resolution in case of listed company. So now guys, they have, generally this section, if you see 186, it says that here, loan or guarantee given where a security has been provided by a company to wholly owned subsidiary or JV, then the provisions of this subsection will not apply. We had seen it in 185. Holding company giving loan to wholly owned subsidiary, not covered under 185. Then I told you we should see 186. So holding company giving loan to wholly owned subsidiary, it is not covered under 185. Is it covered under 186 or 179(3)(f)? Holding company giving loan to wholly owned subsidiary is 186 or 179(3)(f). If you see requirement of this section will not apply, no. Requirement of this subsection. What is the subsection? Only special resolution. A very, very important point here. Only special resolution is exempt. Not if you write 186 is exempt, gone. Only special resolution is exempt. Holding company giving loan to a JV. Holding company giving loan to a wholly owned subsidiary. Holding company giving guarantee or security to anyone who in turn gives a loan to a wholly owned subsidiary. Holding company investing in the securities, loan you scratch out, investing in the securities of a wholly owned subsidiary, exempt. And interesting to know that this section 186 exemption is only for wholly owned subsidiary, which means if they ask in the exam, holding company gives guarantee or security to a bank or financial institution, which in turn gives a loan to a normal subsidiary, not wholly owned. We had seen 185 is fully exempt, but 186 is fully applicable. Only for wholly owned and JV there is an exemption. What exemption? That too, special resolution is not needed. So if you go beyond 60% also, special resolution is not there. That's all. Special resolution is not to be taken. But if I have given loan, will it come under step number 2 the next year? LGSI already made. Will it come? Yes, obviously. Your section is not exempt. Special resolution is exempt. So I have to add it to the block because next anything if I paste to a non-exempt entity, then obviously you have to take special resolution. So please note that. Here only special resolution is exempt. It will come in my calculation. Any problem that they give, you should keep that in mind. So, apart from that, there is one MCA clarification. Y Limited gives loan to X Limited. Share capital 100 lakh, free reserves 100 lakh, unsecured creditors 30 lakh. 60% of 200, 120 or 100, whichever is higher. So, whichever is higher, which is higher? 120 lakh. 120 lakh is higher. So, beyond 120, if anything that I have to pass, what resolution is it? Special resolution. Beyond 120 lakh, it is a special resolution. Proposed loan is 210 lakh. Proposed loan is 210 lakh. What resolution is passed? Special resolution. If I pass special resolution, is it valid or void? It is void. Because guys, if you see 120 lakh is no problem. But you see the net worth of the company only is 200 lakh. Can shareholders agree to, what do you say, lend beyond what they have given? What they have given is only 200. Beyond what they have given, they cannot approve. It's like giving approval for using unsecured creditors' money. How can shareholders give approval? Hence, if you see, special resolution for loans, investments much beyond the net worth should not be passed by the companies. Thus, borrowed funds cannot be used for intercorporate loans and investment. So, just you do revise this chart quickly. 1 minute. Revise. Make it full screen here. Coolly go through, guys. Quickly finish it off. 186 also is over. That's why. Page number 45. Revise this chart. 1 minute. Done. So, everything is there in this, guys. Net worth 60, 100%, beyond 60, 100%, beyond net worth, ultra wires. It is as per MCA. The explanatory statement should indicate specifics. Now, the question is, when I am investing more than 60% in the special resolution, I have to give explanatory statement, etc. In the special resolution. So, here, what should I go by each investment wise, company wise, or just one special resolution? Yes. So, if you see, this also you have to write in the exam. Company wise, investment wise, separate resolution must be passed. Company wise, investment wise, separate resolution must be passed. So, if I am investing in 5 companies, that 5 companies resolution, I mean one resolution only, but approving all the 5 companies, and investment wise, equity shares how much, preference shares how much, other securities how much, like that, separate resolution has to be passed. This is the full procedure that I have given. So, 185 done, 186 done. Moving on to 184, it is disclosure of interest. Disclosure of directors' interest. Disclosure of directors' interest. Like during the break, one guy asked me, partner means what partner? I mean, is it business partner? Other partners and all, if he has love partners. So, it's a valid question. What is partner? Partner is not defined. So, partner should be read as business partner. So, MCA fellow is checking all these things, disclosure, then one girl photo is there. Company secretary has filed one lady's photo. Then that MCA fellow will call, hey bro, what is this? So, this is disclosure of director's interest. Alright? No. That's why. When he asked that question, I remembered. Disclosure of interest means what? Not other interest. It is not director's crush and all those things. It is what? It is, that's what interest is not defined again. Here interest is not defined. So, we need to read anything. So, I made the mistake of understanding this interest. I read many commentary books by Dr. Chandra Arte, and many books are there. Many books in that they have written almost 500 pages on the word interest. After 20 pages, I lost interest. Correct? Who will sit and study? 20, 30 pages, then I again flip through. But what I could make of it is interest means what? It is not defined. This section purely talks about be honest. Be transparent in your dealings is what they are trying to tell. Then they have clearly, overall view is what? Directors' financial interest. Means what? There are two companies. I am a director here, but I'm a shareholder there. And this company is entering into a contract with that company. Yes, definitely I am financially interested in it. So I need to disclose. Then directors' managerial interest. I'm a director here, I'm a director there also. Both companies are entering into a contract. 100% I am earning some money out of it. Cut. So I need to disclose that. Directors' relatives' financial interest. My brother has 40% shares in that company and my company is entering into a contract with that company. I need to disclose. Directors' relatives' managerial interest. Just examples I'm giving. My brother owns one more company, or my brother is the MD of other company. So then if my company is entering into that company, obviously there is interest. So these are the things that you need to disclose. But MCA says 3 things you need not disclose. One is, I told you, crush. That is what? Directors' sentimental interest. They have told director's sentimental interest need not be disclosed. Because like if you have a best friend, who you from childhood you have grown together, he happens to be a director of one more company. Can you say interest is not there? 100% it is there. But then the law says, how will you define best friend? How will you define that thing? So they said, leave it. Director's sentimental interest need not be disclosed. Then directors, there are many people I have only seen in practical life. If you are the same religion, same caste, same subcaste, my people will do a contract with them. I have seen many people do that. My people only there, that fellow is director of there are same caste, subcaste, let's do that. Or if it's a political ideology, correct? Oh, you are RSS, I am RSS. You are BJP, I am BJP. You are Congress, I am Congress. So that ideology also they enter into business using that. I am not joking. Political ideology is a huge thing. Because you are from the same political ideology, they enter into a contract with you, even though a person who supports some other political party is giving better goods also, you will only support the person which follows a political ideology. And that is the truth also. That's why the MCA says those are very sensitive areas, you cannot enter into that. So director's ideological interest also need not be disclosed. So his sentimental interest, ideological interest need not be disclosed. Then one more deadly thing they say, which is difficult to actually accept. Director is there, his daughter is working in some company as some sales manager. So the person says, the boss says, you get a deal with your father's company, then you will get a promotion. So now daughter comes and tells, please help me dad. So obviously the dad will enter into a contract with this particular company, even though it doesn't want to, only to do what? To ensure that the daughter gets a promotion. 100% there is interest here. But the MCA says directors, relatives, employment interest in some company need not be disclosed. So these 3 things they have only told need not disclose. Directors, ideological, sentimental, and directors, relatives, employment interest. Barring that, whatever you feel, everything it is better to disclose is what the law says. So if you see here, 184.1 is divided into 2 parts. 184.1 is general disclosure at the beginning of the year. 184.2 is specific disclosure when it comes up to the contract stage. General disclosure, what should I do? 184.1, it should be in form number MBP1. What should be in the general disclosure? All the companies in which I am, basically all interest include shareholding. So what should I do it? Directors, direct financial interest, directors, direct managerial interest, I should disclose here. Companies, bodies corporate, firms, AOP. Firm here is sole proprietorship or partnership firm? Both. When I use the word firm, I should see the heading of the BEAR Act. Heading of the BEAR Act is Companies Act. If I use the word firm in Partnership Act, partnership firm. If I use the word exchange in normal, Indian Contract Act, it can be barter. If I use the word exchange in FEMA, foreign exchange. So it depends on the, law that you are studying. Here when I use the word firm, it will be sole proprietor also. In all sole proprietorship in which I am a sole proprietor, in all the firms in which I am a partner, in all the AOPs in which I am a member, in all the bodies corporate in which I am a member or a director, all the companies in which I am a director, member, whatever relationship, everything I have to disclose where? First board meeting of every financial year. Or whenever there is a change, I have to disclose that. Whenever there is a change also when I have to disclose, then what's the point of 184.2? 184.2 will also include indirect interest of the director. Because the law uses the word interested director. Interested director. Interested is a verb. Interested director. And interested director means what? Directly or indirectly who is interested. Indirectly means through relatives. So director's relatives interest will not be disclosed in 184.1. Director's relatives interest will not be disclosed in 184.1. It is only in 184.2. And in 184.2, it is predominantly if it is coming up to the contract stage. It is coming up to the contract stage only. 184.1 is general disclosure. 184.2 is specific disclosure. Only if it is coming up to the what? Contract stage. Nothing else. Only if it is coming up to the contract stage. The companies, bodies, corporate, firm, AOP include shareholding. First board meeting and then first board meeting where there is every change. 184 concern or interest when that is done. 184.1, 184.2 done. Now if you see 184.2 specific disclosure. Contract, arrangement, proposed contract, proposed arrangement. So this should only come at the contract stage. It should be a contract, it should be an arrangement or a proposed contract or proposed arrangement. Only then 184.2 will come. Nature of concern or interest. If you see in this case, nature of concern need not be disclosed. Nature means what? The exact amount of profit that you are making. This is a general disclosure at the beginning of the year, guys. Here I am telling, boss, these are the companies in which I am a member, all these things. In case you enter into any contract during the year, assume that I am interested. That is one part. Specific disclosure speaks one step ahead. They are trying to tell that, boss, if you are entering into a contract, arrangement, proposed contract, proposed arrangement. So, in that case, if it's coming up to the board meeting level, that discussion, then I am telling you now only that yes, I am interested in the contract and generally I should not participate in the discussion. So if you see bodies corporate in which director holds more than 2%, up to 2% no need to disclose, more than 2%. Bodies corporate in which director is a promoter or CEO, and firm or other entity in which director is a partner, owner and member. When should I do it? At the board meeting where it is discussed, or the next board meeting if he becomes interested later. Next board meeting if he becomes interested later. First is the board meeting where it is discussed. Second one, the next board meeting if he becomes interested later. So contract, arrangement, proposed contract, proposed arrangement when bodies corporate in which director holds more than 2% and the other things where it is to be discussed at that board meeting. Otherwise, next board meeting if he becomes interested later. So basically if it becomes interested later means what? He holds more than 2% shares later, or there is anything relative becomes a MD later there. In those cases he has to disclose. Now in the old law, English law is very subtle. English law is very subtle. It doesn't tell you anything directly. That's why Britishers came as merchants and then they took over the entire country. They are very subtle. You will not even know what they are speaking. So in English law, this was copy paste from English law. English law said if you are an interested director, you cannot participate, you cannot speak at the meeting, they said. You cannot vote at the meeting. Even if you speak, your vote will not be counted. Even if you speak, your entire thing, the entire whatever you speak will not be counted. You will not even be counted for quorum. These were the wordings given in the old law. If this, what does it indicate? What does it indicate? It indicates that you should not attend the meeting. But we are Indians, we will not understand any settled words. In old law, they were sitting there in the meeting. Even though that company secretary is telling, sir, if you speak also, it will not be valid. No, I will not speak. Sir, if you vote also, it will not be counted. I will not vote. Sir, quorum, you are not considered. Assume I am not here. And what are they discussing? They are discussing entering into a contract with that guy. So pros and cons, how will you discuss in front of him? So that's why this part was, because in India, that's what we don't understand. If we go to anybody's house for dinner, when is the time to get out of the house? After dinner, 5 minutes you have to wait. Dessert will come. So until then you have to wait. So you cannot immediately leave. No, you should make some conversation. But the host only will give you a hint. Host will tell what plans after going home. Right? He will say. So or he will start yawning. Or he will say, I think you had a long day. Or he will only start yawning. You will not, he will not understand only. If he's yawning, he'll be like, bro, go sleep. No, I'll be here. Correct? Or else if he asks you what plans after going home, he'll tell, I'm planning to watch football match. So TV is here, let me switch on here only. You'll only, take the thing. That fellow will be like, you have eaten like a buffalo, please go. Host, he cannot throw you out like that, right? That's very difficult. When to go is something that we need to know. We don't understand subtlety in India. None of us do. So if you see, quorum, vote, speak, no. So in India, they change. In 2013 is law created by Indians. They removed all these things and they said what? Should not participate in the meeting. Should not participate in the meeting, obviously. This also we didn't understand. I'm not joking. People were still sitting in the meeting and say, I will not participate. I'm just sitting. Assume I'm not there only. That's why I'm not joking. In 2015, they came out with a guideline, MCA only. They said that please, the concerned director, and ICSI actually, ICSI along with MCA, they said that particular director should step out of the discussion. They have to clearly tell, step out when the discussion is going on, step out of the room. So they literally had to throw us out. All Indians, that's all it is. Even when I say participate, we will not understand. Correct? Yes. So, sorry? Sitting fees are not. Sitting fees is for every meeting. Right? Sitting fees is per meeting. So you will definitely get sitting fees. So and one more thing, you may be interested in one item, but you are not interested in the second, third, fourth items of business, right? So that time you will come back in. So their sitting fees is for your time given for the entire meeting. 100% you will get sitting fees. So disclosure of interest by directors, yes, MVP 1. All these notices should be kept at the registered office. This notice, the notices of disclosure, this has to be kept for 8 years. So don't get confused, guys. That form number register is permanent. Whereas this 184 notice is 8 years. All MCQ questions they can play around. Then form includes partnerships, everything done. And one small spelling error here. 184.1 direct relatives interest need not be disclosed. 184.1 disclosure. In 184.2 you should disclose. You can write down 184.2 directors relatives interest to be disclosed. In 184.2 directors relatives interest to be disclosed. Directors relatives interest to be disclosed. Next, specific disclosure at that particular meeting in which you are discussing. So proposed contract coming up to the board meeting level where is already a director and where directors is already interested. So basically at that board meeting, it's what? First of all, it should be a proposed contract where you are already interested coming up to the board meeting level. Then only you should disclose at that board meeting. So I told you one thing, director giving loan, company giving loan to director's fiance will not cover under 185. But later, company giving loan to, once you become a director, tell me, should I disclose? or once once the relationship is being established already, in the next meeting, should I disclose? Yes. I should say, boss, the company has already given loan and that time I was not interested. Now I have become interested in that contract, hence I am disclosing. This section is purely based on, honesty. That's what there is. So, specific disclosure done. Then, apart from that, here, 184 does not override any other section. Which means they are trying to tell, if some other section restricts you from having any interest, you cannot have that interest and then disclose and tell, I have followed all the laws. For example, yesterday we saw independent director. Independent director shareholding is maximum should be 2%. Can I hold 3% as an independent director, disclose under 184 and tell I have not broken any law? No. That's what they are trying to tell. That's why 184 does not override any other section. If some other section restricts a director from having any concern or interest in any contract or arrangement, that section will stand. Example, independent director. 184 shall not apply to any contract or arrangement between two companies, bodies corporate, where any of the directors holds less than or equal to 2% of the paid up share capital. So, if you are a company and in the second company or a body corporate, there are three directors XYZ. If they are individually or jointly holding less than 2%, if they are individually or jointly holding less than 2%, then exempt. No need to disclose. No need to disclose. So the beauty of this section was, if you see, if Z's relative happens to be the MD in this company and XYZ together hold just 1.5% in that other company, should I disclose the relationship interest also? Or nothing, no need to disclose anything. There are two interests here. One is financial interest. Financial interest is less than 2%. So no need to disclose, we said. But his relative is also MD. Should I disclose that or not? So if you see 184, there was a problem because that's why this was also an exam question. Should I disclose or not? There are two interests in that question. One is financial interest. One more is relatives managerial interest. But if you see the wordings of section 184, the wordings of section 184 were slightly different. 184 wordings here, it says, unfortunately, nothing in this section shall apply. It says nothing in this section shall apply. They are trying to tell that if your shareholding is less than 2%, this also no need to disclose, this also no need to disclose. Why? Nothing will apply. Is it correct or wrong? Wrong. That is bad framing. Ideally, you should disclose, right? So MCA only gave a clarification saying that no, you should disclose that. So that's the next one, 9th one. If the director is otherwise interested other than shareholding interest, then his holding of less than 2% of paid up share capital is not at all relevant. Directors, managerial interest, directors, relatives, financial, everything I have to disclose. Right? I hope you got the point. 8th is different, 9th is different. 11, 10 is missing. I don't know the numbering error. So the date on which, okay, now what should be the date when I have to do the 2% thing? Obviously the date on which the contract is being entered into. Date of the contract. I should check. 184 does not apply to a section 8 company, does not apply to private company and all those things. Private company, guys, interested director should disclose the interest at the meeting and he can vote. It applies to directors nominated. This is an important point, though we'll connect it again in 188. It applies to directors nominated by government also, and thus it will apply to the nominee directors as well. Now, these directors, they are saying you should disclose your interest at the at the board meeting. Fine. These directors are also shareholders. Should I disclose the interest at shareholders meeting also? No, 184 only talks about disclosure of interest at the board meeting. So point number 17 point. 184 is limited to board meetings only and they do not apply for general meeting resolutions. Director may exercise his voting right at a general meeting. At a general meeting, provided the interest has been disclosed in the explanatory statement. Provided the interest has been disclosed in the explanatory statement. Yeah, later, doubts later, man. All that we can clarify because it breaks the flow. 15, after the class you come. It applies to directors nominated by government and thus to other nominee directors also. MCA clarification, yes. Then this one, alternate director. An alternate director as well as original director should also disclose in writing. Obviously, even original director can be interested in many things. Alternate director can be interested in other businesses. It depends on the relationship, right? So I have to disclose everything. That is what it is. And if, let's say, I have to do the company is issuing shares, and for registering the transfer of shares, directors have to sign. Director will sign issue of shares for others also. He will issue shares for him also because he had also applied. Is that conflict of interest? No. He is doing it in his normal administrative capacity. Is it conflict of interest? No. So again, point number 19. 18 I'll come to it. Point number 19. The word interest should be interest conflicting with duty. Therefore, if the board allots shares to themselves along with other shareholders, there is no conflict of interest and section 184 does not apply. But the allotment of shares to themselves further their personal interest as different from general interest of shareholders. Hence, section 184 will apply in those cases if at all there is a personal interest involved. Then they can ask you one question. What if there is basically 4 directors are there, B, C, D are interested in the contract. Only one disinterested director is there, unbiased. Now, this cannot be passed now. Why? Absence of disinterested quorum. Quorum only is not there. What to do? Appoint new directors. So, basically the MCA says appoint new directors. But is it a practicable solution? No. Only for that one item of business, new directors? No. So, the thing is, MCA gives on deadly clarification. This entire item which board had to discuss. Who will discuss now? Shareholders. But this goes against the Companies Act. Actually, Companies Act power only given to the shareholders only given by the Act, AOA, MOA. MCA is neither the Act nor AOA nor MOA. So they cannot give like that, but no choice. What is the solution? No solution. Deadlock. So this is a very important point. Point number 18. Many times asked in the exam. Absence of disinterested quorum. Absence of disinterested quorum. In the board meeting, if the quorum is not available, the board's strength may be increased by appointing new disinterested directors. If this is found to be not practicable, obviously it's not practicable. In that case, what happens? The matter shall be placed before the general meeting for the consent. ICAI exam note, you can write as a note. The latter course suggested by MCA does not find support under the Act. Source no need to write, but this is a source that we took it from. The commentary, all that's true also, because latter course is what? The shifting of power from, what do you say, directors to shareholders, MCA is doing. MCA has no right to do. MCA is also under the Act. They can change the Act, but they cannot override the Act without changing the Act. So this you can write in the exam as a note. Any person who is your BCom teacher and all, if he is evaluating, will not understand. That's okay. But if any CA, CS who actually knows the law sees this, it is an additional weightage point. For this answer, you will not get any extra marks. But then you would have earned that person's respect. It's all about earning that person's respect, right? There's a show called Suits. In English there's a program Suits. So there's a character called Harvey Specter. That fellow says, "Do not play the odds, play the man." Very simple. So playing the odds means seeing whether I will 50-50, I'll win this, I'll lose this. Play the man only. The man is the person holding the strings. In this case, the person holding the string, whether will pass or fail, is the evaluator. So if you impress the evaluator in the first 10 minutes with your amazing answers, then you're done, no problem. Right? Like that, many quotes are there. So one student read this, decide, commit, suicide, it all. I said, no, bro, it is not suicide, decide, commit, succeed. By reading all those things, actually, I was just making them read and he read it like that. Yes. Dangerous. Right. Now, slowly it will come. Yes. No. Right. But, mental illness is a serious thing, guys. It is actually nothing to laugh about. But this joke, you can laugh, no problem. But of course, it is serious. So if you are having any such tendencies, please seek help. It is problem is it's a taboo in our country. It's actually a disease. Just like we get fever, we take crocin. Like that, for that also you should take medication. So if you need any help, let me know. I have no good counselors because many students I have only given numbers. I've taken from them only the numbers because when I was discussing with them, they only told me, sir, if any of your students want, you give these counselors numbers because I have taken help. So I have some 4 or 5 people. I think, I don't know whether they're in Bangalore, maybe they are, or maybe they're outside and they're doing this thing also, what do you say? Online also they do, but seek help. It is very important to seek help. So it is really painful to actually go through all those things. I'm sure most of you have gone through that. All of us have gone through that, right? So it's fine. Anyway, come back. So 184 done. Now the question is, what is the penalty of 184? What is the penal provision of 184? That also, they can ask couple of, pointers. We'll just see. Penal provisions. One sec. Of 184 especially, and how to arrive at that is what we need to check. Yeah. Anyway, so just for your knowledge, if they ask you penal provisions, and let us assume that 184.1 MBP1 you have to disclose. Assume they ask you if you have not disclosed, what to do. So it's so interesting to know that first of all, there will be a penalty under 166(7), 1 lakh to 5 lakh rupees fine you have to pay. Apart from that, under 184(4), 1 lakh rupees penalty is there from 21st December 2020 that came. That also if you don't pay, in vacation of office under 167(1)(c), if you have acted in contravention of 184, then vacation will apply. Right? Vacation of office will apply. This is if you don't disclose only. On the other hand, any contract or arrangement, this is for MBP1, not following MBP1. 184.2, contract or arrangement you are not following. Then in that case, 184.3, contract is what? Voidable at the option of the company. Interesting to know, the contract also is getting affected. Contract is voidable. Second, 184.4, penal provision. Penalty is how much? 1 lakh rupees. Penalty is 1 lakh rupees. 21st December 2020, 1 lakh rupee penalty. It is not up to 1 lakh, mind you, flat 1 lakh. So even if your amount is just, you did not disclose 10,000 rupees worth, how much is the penalty? 1 lakh. Third, 167(1)(d), vacation of office, where? In the defaulting company. In the defaulting company, you will have to vacate your office. And 166(7), 1 lakh rupees to 5 lakh rupees fine. 1 lakh to 5 lakh is the fine. So basically, this is all the penal provisions. Of course, 167(1)(c) comes here. Here 167(1)(d) comes vacation. So these are the penal provisions of 184. This here and there they may ask you, no problem. Last part of the story is 188, related party transaction. Related party transaction is also quite simple, nothing to worry. They, in the recent exam, I think November 22, yeah, they asked 188 read with audit committee. One question, mixed and asked. So we studied 188 and when they asked mixture of both, audit committee and 188. It's fine, it was easy. But of course, at that point of time, you should have understood that. Anyway, so 188 is what, guys? 4 important points we need to know. What is related party? Who's related party? What are the specified transaction? What do you mean by beyond arm's length price? Fourth one, I mean, obviously, who is a related party? Definition is 270. Basically, three things, three important things. Related party, specified transaction, beyond arm's length price. So, private company, public company covered. Contract arrangement and a specified transaction is covered. To whom? Related party, beyond arm's length price. Related party, beyond arm's length price. So the points are related party, specified transaction, beyond arm's length price, beyond ALP. So one by one, related party, related party. So guys, remember the 185 chart, director or is director of what? Lending company, holding company, director of the lending company, holding company. Then here you see, here also director is there, that also of that company and the holding. So same, no change. There we saw director of the lending company and the holding company. Here also it is director of that company and the holding company. That holding is also covered here, you see here. As per rules, director or relative of director of the holding company is also covered. That is one. Next, in the 185 list, second one was what? Relative of such director. Here also it is covered. Director of that company, director or relative of that company, or director or relative of director of the holding company. Same. Third case in 185 was about partner. Partner is deleted. Instead of partner, we have this one. KMP or is relative. A key managerial personnel or is relative. So instead of partner, KMP. Same list. Director of the lending company, holding company. Here it is shifted to director of the director of lending company, holding company, or relative. Here it is director or relative of the lending that company or the holding company. Next, partner is not there. Instead of partner, we have KMP. There, FR. A firm in which the director or relative is a partner. Here you see similar words only. A firm in which director, one addition, manager or his relative is a partner. A firm in which director, manager or his relative is a partner. So wherever there is director, add the word manager here. Same list. Fourth one, PNR. There, private company in which director is a director or member. That PNR becomes PR here. A private company in which director, manager, anyways addition, or his relative, this is addition, is a member or director, is a member or director. We'll see the chart, you'll understand. See this chart here. A private company in which director or manager or relative of either is a director or member means Y Limited, director is XYZ, director is Mr. X or manager is Mr. X. He is a director of P Private Limited or is a member of J Private Limited. He is a director of P Private Limited or is a member of J Private Limited. Then specified transaction. Specified transaction. Then X is a director, X is a member. Specified transaction. Then his relative of X also is Mr. A. He is also a director of Q Private Limited, member of R Private Limited. Now tell me, Y Limited entering into a specified transaction of P Private Limited, specified transaction of J Private Limited, relative of X Mr. A, Q Private Limited, director, R Private Limited, member. Anywhere if you enter specified transaction, it is covered. If you remember, this was not there in 185. 185, loan guarantee security given to these fellows, P Private Limited and J Private Limited. It was restricted under 185(2). Loan given to this guy, director, was prohibited under 185(1). What about loan given to Q Private Limited and R Private Limited? It was covered under 186 if you remember. So in all these things, all these will be covered. 188 also, any specified transaction, 100% this section will be covered. So that is why PNR becomes what? PR. Director or relative will continue. Partner is removed, KMP or relative will come here. Next, FR remains FR, but wherever there is director, add manager. PNR becomes PR, and wherever there is director, add manager. And that body corporate 25% point. Body corporate 25% point is removed. Instead of that, this point is added. We'll see that. Next, accustomed to act. Accustomed to act will remain. That is point number 6. Same. Any body corporate whose board of directors, managing director or manager is accustomed to act in accordance with the advice, directions or instructions of a director or manager. So that will remain the same, no change. So in India, we are a country where we will follow, these Babajis, Gurujis and all that. So if you are blindly following such a Nityananda Swamiji, so in that case, will Nityananda also have control over you? Yes. So I was always fascinated in how these fellows get, so many people. So I have visited all the ashrams just for curiosity. Nityananda ashram in Biddi, I'm not joking, lakhs of followers are there. So you will go inside and you will, be lost in the entire thing. So many followers, right? For the guy who can stop the sun, for the guy who can, change everything, create software for animals to speak and all. Isaac Newton, Albert Einstein, all rolled into one, that guy. So yes, so if you see, basically, yes. So it's not a, it's up to the people to follow. We are nobody to judge. But the thing is, basically, law also recognizes. As recent as, one year ago or so, you would have seen, yes, NSE, National Stock Exchange, the CEO also, Chitra Nayak, was, Chitra Nayak, her name is? Chitra Ramakrishna, sorry. Chitra Nayak was his independent director, sorry. Chitra, yeah. Poor lady. Correct? Chitra Ramachandra Ramakrishna, whatever. She was taking, tips from a Himalayan Yogi Baba. And that Yogi Baba actually happened to be her own employee only. That's the best part. So, yes, actually true. NSE CEO, guys, National Stock Exchange, which is running into crores of transactions every day, was accustomed to act. She was accustomed to act according to the instructions of a Yogi Baba. And that Baba's email ID only is on yogibaba@yahoo.com or something. No, I'm not joking. That was the actual email ID. And she was transacting, she was, sending confidential information to them. It feels absurd. It's true, but you can go check. Correct? You can say that, Chitra Ramakrishna, Ramchandra, whatever her name is, NSC fraud, you will see that full list will come. The entire details it will come. Shocking. It is very shocking. So one person is accustomed to act according to some other person. Now that Himalayan Yogi Baba, is he a related party? Yes, that is the point number 7. Law recognizes such people because it's practically relevant. Any person on whose advice, directions or instructions a director or manager is accustomed to act. There are some people who follow a lot of Gurujis, that's fine. But then the thing is, whatever they say, they'll only follow. So if anything they have to do, they'll first consult their Guru. So that is the belief that they have. So law recognizes that actually. So any person on whose advice, directions or instructions a director or manager is accustomed to act is what it is. So, for example, if I am the chartered accountant and I constantly give advice to you, does it mean that you are accustomed to act? That's why they have given that also here. Next line. Nothing in clause 6 and 7 shall apply to advice given in a professional capacity. So I told you that body corporate 25% was removed. Instead of that, this was added. What is this? Basically, you can be a private company or public company, doesn't matter. You are a director or manager of this company. You are a director or manager of this company. And you are entering into what? A specified transaction with one more public company in which you are a director. And you along with your relatives is holding more than 2%. All these conditions must be satisfied. In your company, you can be director or manager, I don't care. But it should be a specified transaction. And which company? Public company, in which the director along with his relatives is holding more than 2% of the voting power. is holding more than 2% of the voting power. So in that be the case, these cases, what happens? Yes, it will be related party transaction. This one, public company in which director or manager is a director and holds along with relatives more than 2% of the paid up share capital. It is and, mind you, this should happen. Apart from that, this relationship here is also related party. Y Limited is the company in question, associate company, subsidiary company, holding company, sister concern, subsidiary company to which you are also a subsidiary, subsidiary company of a holding company to which you are also a subsidiary. And apart from that, if you are investing in this company more than 20%, A is called the associate. But for A's point of view, who are you? It's called investing company or venturer company. Similarly, if I, some company called I invests in Y Limited, I is the investing company or venturer company and Y becomes the associate. So all these companies also are related parties. All these companies also are related parties. Only this clause does not apply to private company. Means if these companies are private companies, they are not related parties. The only exemption for private companies are what? This one. These companies are not, if they are private companies, they will not be deemed to be what? Related party. Will not be deemed to be related party. So this is what they say. They will not be deemed to be related party anymore. That is what they clearly say here. Yes, so 276 definition of related party, that's what? Investing company or a venturer company where I is a body corporate, that also we need to see. So again, related party definition is flows from that only, that is 185. One is what? Director or relative of the whole, that company and the holding company. K, instead of partner there is KMP. KMP of that company or the holding company. KMP or relative of that company, even the holding company is covered. Third one, FR. FR remains FR only, but wherever there is director add manager. A firm in which the director, manager or relative of either is a partner. PNR becomes PR. Private company in which the director or manager or his relative is a member or director. Then that 25% point is not there. Instead of that, a public company which is in which director or manager of the first company happens to be a director there and along with the relatives holds more than 2%. Any body corporate whose board of directors, managing director, manager is what? Accustomed to act. Accustomed to act according to what? According to the directions, advice, instructions or directions of the director. And apart from that, point number 6 is what? That Nityananda point. That is, you are any body corporate, any person on whose advice, directions or instructions director or manager is accustomed to act. Provided that nothing in subclauses 6 and 7 shall apply to the advice, directions or instructions given in a professional capacity. Given in a professional capacity. Next. Yeah, this part also. Holding, subsidiary, investing company. This chart is also related party. So as I told you here, one is related party. Second one is beyond arm's length price. Anything beyond arm's length price will be taken into account. This one, specified transaction. What are these specified transactions that is given here? These are all the specified transactions. I have merged everything into this. It becomes easy. So A plus E means goods directly selling or through agents. B plus E is selling or buying of property directly or through agents. C will be leasing. Leasing of property. D plus C, availing or rendering of any services directly or through agents. F, related parties appointment in the office or place of profit. And G, underwriting. G is underwriting. So A, sale, purchase or supply of any goods, materials either directly or through agents. Sale, purchase or supply of goods or materials. Now goods means what? As per Sale of Goods Act. Anything Sale of Goods Act will be deemed to be goods. What is Sale of Goods Act definition of goods? All movable property. It includes shares, stock, even things attached to the earth is When I buy a land and there are trees around it, is that a good or land? If it's agreed to be severed, it is agreed to be cut at the time of contract of sale, that will be a good. Otherwise, it will be immovable property. So, goods or materials, either directly or through agent, selling, disposing, or buying of any property of any kind. This property, then leasing of property. This will include a franchisee arrangement also. Leasing. Then services. Then office or place of profit. Then underwriting. So, if you see all cases, board meeting resolution, not circular. Board meeting resolution. Board meeting resolution. All cases, board meeting resolution. Board meeting resolution. Transaction value amounting to. Now this one. Transaction value means what, guys? Or the entire value during the year. Whatever you have transacted during the year. Goods, material, services. If it is amounting to means greater than or equal to 10% of turnover. Then only. If it equals to 10% of turnover, then also require ordinary resolution. So basically it means, for example, 10% of turnover. So for the year 23-24, 1st April 23 onwards till 31st March 24, I should see the turnover. Turnover I should see which year? Obviously 31st March 23. Turnover was 100 crore. What is 10%? 10 crore. During the year, if the specified transaction, what is the specified transaction here? Goods. Sale, purchase or supply, anything. I can purchase from a related party, sell to a related party, whatever the case may be. If it crosses in the aggregate, not individual transaction, aggregate, how much? 10 crore. So basically, let me give an example. So in April 23, I will enter into a related party transaction, sale of goods 2 crore. So what resolution for this? Board meeting resolution, assuming it is beyond arm's length price. Next, sometime in May 23, I enter into a related party transaction for 12 crore. Or let's say 9 crore. 9 plus 2 aggregate, is it more than 10? Yes. But it is not beyond arm's length price. It is well within arm's length price. This transaction completely to be ignored. That's the beauty. 188 is very, very selective in its applicability. 188 will only come, first of all, it should be related party. Second one, specified transaction. Third one, beyond ALP. Here, is there related party? Yes. Specified transaction? Yes. But is it beyond ALP? No. Next one, sometime in October, related party transaction happens. Greater than ALP happens. 6 crore. 6 plus 2, 8 crore. What resolution? Board meeting resolution. November, related party transaction happens within ALP only. 6 crore. 6 plus 2 plus 6. 8 plus 6, 14. But I should not take 14 because it's well within arm's length price. Like that. Next time, let's say next February or something, there is a related party transaction beyond arm's length price. 5 crore. 6 plus 2, 8. 8 plus 5, 13. Now here, this will be for this transaction. I should take ordinary resolution. Should I take prior or should I take later? Prior is what the law said, but the same section also dilutes the entire section. The section is very badly framed. Badly framed section. Initially it uses the word prior, but later it says you can ratify within 3 months. Nothing will happen, you can ratify within 3 months. So that prior is of no use, right? That's what. So basically, anyway, ordinary resolution here. That is the meaning of this amounting to. If it's property of any kind, 10% of net worth. Property is linked to net worth, that's why net worth, here it is turnover. Actually, earlier it was 10% of net worth, 10% of turnover, 100 crore, all that nonsense was there. Now it's very easy. 10% of turnover, 10% of net worth. Ordinary. So here, If it is goods, it includes capital goods and revenue goods. And it is property, it includes immovable property, intellectual property, patents, trademarks, all these things it will include, so no tension. Moving on here, if you see third one, that is leasing of property of any kind, property. Again, leasing of property will include what? Franchisee model as well. So again, it will link to turnover. All things are turnover except this and underwriting commission. Property is linked to net worth. Underwriting commission is also net worth. Leasing of property of any kind. Board meeting resolution 10% of turnover. Availing or rendering of any services either directly or through agents. Board meeting resolution 10% of turnover. Here also ordinary resolution. This is what? Business and commercial services. So guys, this is, services, any services that you take. Any service for that matter. So even for example, consultancy service taken from related party also will come under this. Underwriting commission, you should take 1% of net worth. If it exceeds 1% of net worth, what do you say? Prior ordinary resolution. Now this one, office or place of profit. Where? In the company, subsidiary company or associate company. So basically, there is this concept of office or place of profit in the company, subsidiary company and associate company. Holding company is not covered, only in the company, subsidiary company or the associate company. Office or place of profit, it can be for the director separately or it can also be for the relatives, whatever we saw, the entire definition. For directors, office or place of profit will be how much? If you see, there is no definition. Guys, office or place is not a designation. It is not a designation. It is only related to money. If you get something extra, you are deemed to hold an office or place of profit. Why place of profit? Because you are getting more than what you have agreed for. For director, they have used the word any amount over and above remuneration. His managerial remuneration will be fixed under 197. Managerial remuneration is fixed at 1 crore. He is getting 1 crore 10 lakhs. This 10 lakhs will be called as office or place of profit. Correct? Just an example. On the other hand, for relatives, they say any amount received will be office or place of profit. Anything. So if my relative is employed in the company and is getting some amount, is it office or place of profit? Yes. How much is any amount is so weird, and even here over and above what is the limit is not given. So what does the law say? Up to 2.5 lakh monthly remuneration. What resolution? Board meeting resolution. Up to 2.5 lakh monthly remuneration, board meeting resolution. Beyond 2.5 lakh monthly this thing, what? Ordinary resolution. Can people misuse this provision by giving 2.4 lakhs per month for 12 months and the end of the month giving 6 lakhs bonus? At the end of the year give 6 lakhs bonus or 10 lakhs bonus. Eventually, will it go beyond 2.45 lakhs? Yes. Can I do this? I can do this. There was a case law where they said law uses the word monthly. Since law uses the word monthly, nothing can be done. Ravinder Kumar single case. Everything is here. Check it out. So if you see, director over and above remuneration, related parties of director, any remuneration up to 2.5 lakh monthly remuneration BMR, more than that ordinary resolution. Here, perquisites accruing on monthly basis should be included and not total yearly earning. So annual payments like bonus, leave encashment are not to be included. Ravinder Kumar single case. Annual payments like bonus, leave encashment, etc. are not to be included at all. So you can obviously go ahead with it. No problem. Right? So these are all the things. So again, guys, very simple here. First is what? You should be a related party. Second, it should be a specified transaction. Third, it should be beyond arm's length price. If that happens, then this section will come into force. So in the notice, you have to give all these things, and a couple of points are there. And if you do not follow this 188, what happens? If you do not follow 188, there will be problematic scenarios. So this chart I had made them solve in my regular batch. Based on this only question had come in the immediately previous attempt, November 22. So that was a question on this, what do you say, 188 versus 177. That is audit committee. So they can ask that. It's okay, that we'll see that. So if you see, that is about it, guys. Here, moving on quickly. Notice of the board meeting at which the resolution is proposed to be moved shall disclose what? Name of the related party, nature of relationship, duration of contract. You can go through all these things. Then explanatory statement also should have all these things. Yeah. One interesting point in this section is, what about something called omnibus approval? So omnibus means what? One shot approval at the beginning. This will happen under 177, where audit committee is applicable. Where is audit committee applicable? For all listed company, listed public company, unlisted company, paid up capital 10 crore, turnover 100 crore, borrowing more than 50 crore, similar to independent director, same, no change. So for them, apart from 188, you should also read rule number 6A of MBP rules, omnibus route. Omnibus means what? The audit committee will sit and discuss maximum transactions that can happen per year, related party transactions, maximum value per transaction, how it is repeating every time. We have to see justification of related party transaction, all transactions which are covered within ALP, beyond ALP, everything they will approve. See, in related party 188 is only beyond ALP, but omnibus audit committee will approve everything, all transactions, including within ALP, beyond ALP. So that is what it is. Base price, contracted price, and variation. All details will be available, and they will pass an omnibus approval. And that too, what is not part of omnibus route? If the value is less than 1 crore, value of a transaction. This is, see, basically at the beginning of the year, they'll say, okay, boss, I will approve all related party transactions pre-approval. So this year, if you enter into 4 crore worth of transactions, pre-approved, take it. That's called omnibus. That may include beyond ALP. That may include within ALP. So they will analyze last year how many transactions happened, what was repeated, what is the justification, and they'll give a, at the beginning of the year, omnibus approval. Now let's say 4 crore gets exhausted, or whatever transactions you have done, it is part of the omnibus route. They would have given specific transactions with specific people. What if now the company wants to enter into a contract with a person who is not covered under omnibus, and a company where audit committee is applicable? Should I seek their approval? Yes. So if the value of that new transaction who is not covered under omnibus route is less than or equal to 1 crore, try to take prior approval. If not taken also, you can ratify within 3 months. But if the value is more than 1 crore, then guys, prior approval is mandatory. If it's not taken, then it is void. This is the only thing that you need to remember. So omnibus route, what is omnibus? Apart from that, new transactions or transactions with people who are not covered under which section? Under the omnibus route. Value is less than 1 crore. No omnibus, what do you say? Prior approval, try to take, otherwise ratification. More than 1 crore, prior approval has to be taken. Very simple. Otherwise, what happens? The contract will become voidable. Voidable. Generally, the contract will become voidable by the audit committee. They can cancel the contract. They can ask you to indemnify or compensate also. All those other provisions will come. That's the problem. All the other provisions will come. That is the issue. So, if you see, these are all the various things that they can ask. Now, one peculiar problem came. As I told you, I'll link back to 184 only. If you are a private company, let us say you are entering into a related party transaction. First, board meeting resolution should come. Then shareholders resolution will come. Correct? Now, we are going beyond arm's length and all those things, and we are going beyond the limit. ABC all the directors, A, B, C, all directors here, all directors are interested. Absence of disinterested quorum. What to do? You say they will give it to shareholders. Shareholders also them only. What do we do? Since it's a related party transaction, that is why in 184 we saw there was an amendment in 184 which said private company people can vote after disclosing. That is what we saw that time. I told you I'll connect it later. Check this 184. Page 48, point number 14. Interested director should disclose interest at the meeting and can vote. So here he can vote, no problem. In related party transaction, there is one dialogue. If you are a shareholder and if you are a related party, you cannot vote. That is 188 subsection 1 second proviso. If you are a shareholder and a related party, you cannot vote, which means ABC cannot vote now. ABC will vote as board, but ABC cannot vote as shareholders. That was amended whereby this was not made applicable to private company. Which means private company directors also can vote. The same directors as shareholders or entering into related party transaction also can vote because public money is not involved. It's their own money and it's fair also. If it's your money involved, you will rather give it to related party, known person, than somebody else. On the other hand, listed company, no problem only because there will be multiple directors and all will not be interested. There will be never a scenario of absence of disinterested quorum. So this also will happen and here lakhs of shareholders will be there. In that 10 people will be interested. They will not vote, no problem. The problem was in unlisted company, closely held companies. Closely held company is almost like private company only. But it has what? It has, who do they have? It has little bit, 1 or 2 extra people will be there. Predominantly it is private company only, but little bit 1 or 2 extra people will be there. Now the question is, as directors, can you vote? No. So for that dialogue, absence of disinterested quorum, place the matter before the shareholders. That you leave. If it's a related party transaction, members also cannot vote. So if there are, let's say, 10 members are there, out of which 9 happen to be related parties. That's what used to happen as per their analysis. 90% used to be related parties only. And in related party transactions, you are saying they also can't vote. It created a deadlock. Here also can't vote, here also can't vote. So they went to the MCA and MCA said, one relaxation I will give. If 90% related parties are there, then I will remove the restriction. You can go vote, no problem. Otherwise, it will create a deadlock. So in the predominant experience of the MCA, they have observed that in an unlisted public company, generally 90% of the members are either relatives or related parties. Only few venture capitalists, etc. will be there. Predominantly everyone will be related. So they said, no problem, I will remove this. So you see, coming to 188. Here. No member of the company shall vote on such ordinary resolution to approve any contract referred to in this section if such member is a related party. This restriction shall not apply to a company in which 90% or more members in number are relatives of promoters or are related parties. Are relatives of promoters or are related parties. So definitely not covered. Means what? You can vote, no problem. The restriction is not covered here. You can definitely vote. Similarly, this ordinary resolution and restriction on voting is not applicable if it is between a government company and 2 government companies. That is BHEL with Bank of India, unlisted if it is. Also not applicable to any unlisted company if ministry approval is taken. This is listed, by the way. To listed companies, even in unlisted, if ministry approval is taken. Then you shall disclose the interest and you will vote. All this we have discussed, no problem. These points are done. Then as I told you, differences between 177 and 188 also we have discussed now. You have to take the omnibus approval, etc. The last part, guys, is this comprehensive penal chart. So here, actually you remove this, I've already covered. Yeah, so these are the amendments. Company, director, other person. I have covered the amendment, can delete this. 185, this is very important, guys. Generally I will never ask you to remember penalties, but here all 4 combined penalty chart. Company, director, other person. Company 5 lakh to 25 lakh, they will have to pay. Director or OID means officer in default. Up to 6 months or 5 lakh to 25 lakh or both, they have to pay. Contract is not affected here, mind you. Relaxation, there is no proportionate reduction. If I pay off, if I give loan by mistake and the next day that fellow repays, will there be proportionate reduction in the penal provisions? No. Is there compounding offense? When Act uses the word or, 6 months or 5 lakh to 25 lakh or both. When Act uses the word or, it means it is a compoundable offense. Compoundable offense means what? You can escape imprisonment by paying fine. So is it a compoundable offense? Yes. So that's why I say, is it a compounding offense? Yes. On the other hand, lastly, is there a disqualification vacation? No. For 186, that is 186 your loans to others, company and every officer in default will be liable 25,000 to 5 lakh. And director or officer in default 25,000 to 1 lakh and, mind you, and cannot escape imprisonment. Deadly. Contract is not affected in any way. No proportionate reduction also. Third one, 184. Who is penalized? Director. What is the penalty? Penalty is 1 lakh rupees. As per 21/12/20, 1 lakh rupees. What happens to the contract? Voidable at the option of the shareholders. Relaxation, no relaxation. And guys, it's voidable at the option. These 2 cases are voidable, mind you. Compounding, yes. Disqualification, no. Vacation of office, yes. As we have seen, 167, 1C and D, we wrote the penal provisions. There is vacation of office for sure. Last but not the least, 188, director, company, director or officer in default, indemnify the company for loss. Indemnify means compensate. Listed company, penalty of 25 lakhs. Other company, penalty of 5 lakhs. Penalty, it is not fine. Again, this is what? Voidable at the option of the board or the shareholders, as the case may be. Shareholders, if it comes up to their approval, that is that amounting to 10% and all those things. No relaxation. And here, guys, it results in disqualification also if you are convicted though. Keyword is convicted. In the last 5 years, if you have been convicted, then it will result in disqualification. Then vacation of office, 167, 1A. Because of disqualification, what will happen? Vacation of office also will happen. Vacation will happen because of disqualification. Last point, then we can watch a video. Restrictions on non-cash transactions. This also they have asked many times, at least 3 to 4 times in the last 8 attempts. 8 to 10 attempts I can say. Because it's an area which we will not study and go. They will say, director will give furniture. He will take shares. He will give furniture worth 1 crore or whatever 50 lakhs, take shares worth 1 crore. Or will give a building worth 20 lakhs, revalue it to 1 crore, take shares worth 1 crore. It is not loan. It is not book debt. There is no book debt, exchange. That's why 192 is there, non-cash transactions. A company can acquire or sell assets for consideration other than cash from a director or a person connected with the director. Again, don't come and tell connected means what, sir? Connected here means what? Section 185. Guidance note says so. Sir, emotional connection or what connection? Yes. It is what? Person connected means what? 185. It is section 185. As per ICAI guidance note, mind you, law is not defined. ICAI guidance note has told person connected means 185 list again. So if a company has bought assets from relative of director or director, sold assets to relative of director, not only that company, holding subsidiary associate also, it is possible only if you take shareholders approval. Shareholders will interfere. Generally these transactions board, shareholders will not come. But here since you are doing non-cash, shareholders. If not complied, again what happens? Voidable. So many voidables you saw. One is this voidable. Then here, voidable. Then also omnibus also voidable at the option of audit committee. If you have not taken ratified within 3 months. If you are not ratified within 3 months.